Turn our minds to a bit of M&A. Spectris here in London in focus, given the board's just rejected KKR's preliminary takeover offer. And as Joe highlighted, got to watch Metro Bank after that Sky report of a potential takeover, Anna.
OK, so some really fascinating individual stories, certainly the one around Caring and Renault worth watching at the start of trade. But the bigger picture is, how is the market dealing with all of the risk dynamics that we saw really illustrated over the weekend between Iran and Israel? As that violence continues into a fourth day there, what does the market make of this? We have seen oil prices go higher. They were up by 5% in the earlier Asia session, but since then retreating, now up much less than that. And we do see that there does seem to be some room for risk assets to go higher. The Asian equity session was pretty resilient. And here in Europe, we open up with the Stoxx 600 almost entirely flat. The FTSE 100 up by just a touch this morning. Taking some time to get going this morning, perhaps. We are perhaps also seeing quite a lot of flow through those big names like Renault and Caring, certainly previously at least heavily weighted, some of those big luxury names in European markets. So we'll keep an eye on those. The IBEX up by 0.3%. We'll dig into some of the detail there. But for the moment then, what we have is a sort of holding picture for European risk assets as we watch Critty US futures go a little bit higher this morning.
Absolutely. But when it comes to your biggest contributors from a sector perspective, of course, no surprise here that oil is going to be right on top. When you're looking at some of these names, Shell, BP, Total, really taking their cue from what we've seen in the macro picture, and I think that's really crucial as well. To the downside, though, some of those traditional defensive names not necessarily leading the market. I think that really tells you what kind of market we're in terms of the index and contributions to the downside. I'm seeing a lot of healthcare that is starting to kind of weigh on this broader benchmark. So that's going to be one series of names that we really keep an eye on. But just the broader commodity complex is going to be a key. When I mentioned some of the oil names, Lizzie, we also have the likes of ArcelorMittal, for example, taking in some of the move to the upside. You have the likes of Glencore, for example, a larger trading house as well. But from a sector perspective, a little bit of a mixed red and green Christmas kind of picture.
Yeah, I just want to take it to the luxury space because, of course, we have had the Caring news, the speculation that it's going to take the Renault CEO as its new boss. Those shares in particular are up 5.8%. We wait for Renault. But if you look across the broader luxury space, you've got the likes of LVMH, Hermes, Burberry, all up in the green this morning, perhaps because of that stronger than expected China data as well. So strength in that particular sector as we await the CAC and the DAX to open, Anna.
Yeah, absolutely. We don't have that. I mean, it's quite usual that we wait a little while for the DAX to open, but usually the CAC 40 is open by now. But we do, of course, have big names. We know that Caring is going higher. Renault in focus as well. So some big names very much in focus when it comes to the European equity markets. But yeah, the CAC and the DAX both not open just yet. The FTSE 100 up by 0.2%. And just as Friday, we see the energy names are the best performing sector. That was Friday's story. But it's interesting that energy names are going higher, but followed by travel and leisure stocks. There's a bit of a rebound in some of those after the selling that we saw on Friday. But it is, I should say also, it's more leisure that's rebounding rather than aviation. So we do see small moves higher in the likes of Deutsche, Lufthansa and Ryanair, but they're more sort of flat to positive rather than stunningly strong.
Yeah, of course, part of the hit to airline on Friday was because you've got airlines avoiding that airspace around Iran, Iraq and Syria. We had the Foreign Office out of the UK over the weekend advising against all travel to Israel for the first time since 2013. But interesting that airline making a bit of a recovery this morning. We'll keep an eye on all the announcements, of course, as well out of the Paris Air Show.
Absolutely. Lots to digest there in terms of the geopolitical tensions and how that all shows up. But also how does it show up in a macro portfolio? Let's bring in Madeline Ronner, the Global Equities Portfolio Manager over at DWS, joining us this morning. Madeline, a pleasure to have you on this program. Thank you so much for joining us. We're trying to work out kind of how much stock we should put in to this oil move, at least from a macro perspective. We saw risk sentiment really selling off on Friday, only to rebound today. Your initial take on how sustained that might be?
So our take generally is that this will be a fade as long as developments stay as they currently are. I mean, you just mentioned it. So we haven't seen any hit on major export facilities of Iran. And as long as it doesn't escalate also to Saudi Arabia and other assets in the area, we don't think there will be much more major impacts. We think the impact on the oil price will also be a fade, as we have seen with prior geopolitical rising tensions. And the same goes basically for equity markets and the impact that we have seen there in terms of risk sentiment. So usually with these kind of events, it takes like 3 weeks until markets get back to their prior high. Let's see what the impact will be this time. Obviously, it's very dynamic. It will depend on if things escalate or not. But as things stand as of now, we think the highest probability of this is still being more of a fade.
So Madeline, what does that then mean in terms of risk sentiment? Does it really put the focus right back on those trade negotiations that we've been keeping an eye on?
Again, if things don't escalate in the region, we think yes. We think the eyes will be on the G7. If we can get maybe any announcement or developments towards a deal between Japan and the US, I think that will be in focus. We will have the NATO summit as well next week. Obviously, the Fed this week, even though we don't expect a move there so far. But I think the trade tensions will go relatively back into focus relatively fast if things don't escalate, of course.
Good morning, Madeline. Lizzie here. As we monitor the trade tensions and we watch the hard data, we're looking out for signals of cracks, right? But are you seeing signs in the corporate commentary that actually companies are becoming less confident about cost control or demand resilience?
So I think cost control companies are still relatively confident, everything that I'm hearing so far, especially also pricing. In the majority of, especially the industrial sector, for example, companies are still very confident. Where we have more of an issue is more on the consumer side, so be it consumer staples or consumer discretionary, where we're hearing more and more from management teams that pricing is getting harder to get and the volumes impact are getting harder as well as the consumer is just stressed. So that's a key item to watch. So, and otherwise, but the resilience, otherwise, the companies feel still pretty confident in my view.
And does your confidence in European industrials and defence as well hold if we do find ourselves in a more stagflationary regime? How much more upside is there for those sectors?
Yes, so I wouldn't say that I would be very positive on the industrial sector in general. I think you have to be very selective in the areas that you have exposure to. So one of those would be, for example, as you mentioned, defense. I would still be pretty confident in this, especially, again, as we go into the NATO summit next week. Obviously, these stocks had quite a run, so that can lead to a lot of volatility in the short term. However, I think there is really a massive regime shift in spending to get up European defensiveness, and that will drive earnings really for the next 10 years. So I think there's really a good cycle going on there. Other areas would be, for example, be the AI infrastructure trade, so everything that goes into that area. Another area would be everything that is tied to the German infrastructure stimulus. So you kind of find a lot of those in the industrial sector as well. And I would really hide kind of in these specific areas because I wouldn't expect like big cyclical momentum going. So our GDP forecast basically for Europe this year is 1.1% growth. That's not massive. It's not accelerating massively next year, even though it's accelerating a little bit according to our estimates, but not massively. So I think it's very too early to get into like really short cycle or cyclical names. But really, I would stay selective in these kind of thematic capex-driven exposures.
Madeleine, it's going to be a big week for central banks, of course. We're going to be watching the Fed, the Bank of England, the SNB and others making their rate decisions. Do you think we're going to start thinking about higher for longer rates as a result of higher oil prices? Of course, it will depend how long the military activity is sustained in the Middle East, but would that be your base case assumption?
So our base case assumptions is that we will see like 2 cuts this year, 4 cuts until June 2026, no cut this at this meeting. It's basically because I think the Fed will still will want to wait and see which impact is higher, the negative growth impact of the tariffs or the inflationary impact of the tariffs. Regarding to the oil price that you mentioned, of course, that will be, we expect it to be a fade. We don't expect levels to hold this high. So I think that the Fed will basically look through that. Again, if things don't escalate, it's a fluid situation, unfortunately. One thing to keep in mind, though, when looking about oil assets, I mean, the OPEC has been rising. Obviously, they supply already. So towards the end of the year, the spare capacity of the OPEC is going to be relatively limited, still there, but limited. So there could be a risk of further oil price shocks in the future as spare capacity goes down. And so if investors want to hedge a little bit against volatility like that, again, not driven by the recent geopolitical issues, but more longer term, I think the energy sector is still a pretty cheap way to do that.
Higher rates recently, Madeline, have of course been driven by the higher oil prices and inflation expectations. Do you see us returning, though, to the wider picture, the longer term picture around debt sustainability? That was up to this point a key driver of what we were seeing at the long end of rates. I appreciate your equities focus, but I know that this has been a preoccupation for markets and something that impacts on valuations.
So valuations, in our view, are still relatively high, especially in the US after the rebound. We still think that's a reason to be cautious, especially, as you mentioned, looking at where interest rates are, and that there is relatively little room maybe to cut majorly to have such an impact. That's one of the reasons why we still still favor European equities over US equities at this point. And the fiscal deficit, we still expect that to, we don't expect major changes to the bill. We expect that to remain over 6% in the US this year, and that's obviously a concern. I think like the longer term of the yield curve has stabilized to some extent, so that's a good sign, and stabilizes market and supports markets as well. But it will definitely remain a key item to watch, and as markets hopefully find some comfort in settling there.
Madeline, how much margin pressure should we expect, not only going into the end of 2025, but perhaps into 2026? What changes your view on that?
So honestly, I would be still pretty confident about the margin development. I mean, I've been very surprised at this earnings season how confident a lot of companies were that they would be able to basically have a mixture between price increases and cost actions to offset a lot of the negative effects of the tariffs. I mean, margins are obviously at record highs. We know that. So there is some risk to it. However, you also have like continued implementation of AI and stuff like that that can increase efficiency. And companies still feel pretty confident about that, and I would believe them as of now. So they not seem to be as worried as maybe I would have been at the beginning of this. Obviously, again, if tariff situation escalates, there might be a different picture again. But as things stand now, I would be still pretty confident that margin pressure will be relatively limited in areas that are like mostly impacted. So again, in the consumer space, it would be one of the areas where I would be worried most.
Madeline, thank you. Madeline Ronner, a global equities portfolio manager at DWS, taking on the impact of weekend developments around oil prices and beyond, and the other macro themes that we're dealing with at this point. Let's have a quick look at the core six and see how they are responding to the weekend news developments then. We have a host of sectors in here. Of course, the luxury sector, very fixated on the caring trade this morning. LVMH, though, is perhaps benefiting from that. So LVMH is up by 1.3% in this morning's trading session. That's by far and away the biggest move that we see on the core six this morning. Joe Easton, no doubt, has others that are attached to the luxury sector in his focus this morning. Joe.
So Kering, really the place to start on the luxury front. That one getting a big boost. Actually the best performer in Europe today, as the company is set to poach the CEO from Renault, Luca De Meo, coming in. Now, this is taken very negatively by Renault investors and analysts today. I've been reading some research and a lot of them saying that De Meo was set to announce a recharge strategy for Renault in a few months' time, and now this has kind of scuppered the whole outlook for the revamp of the company. So really taken badly. Probably the more surprising move of the two is the big drop in Renault, a massive decline for that stock today. It's almost 6% off on that one. A couple of analysts, Kepler Chevrolet, Exane BNP, all very surprised by this news that he's going to be standing down, and that was confirmed yesterday by Renault. We're still waiting for confirmation that he's going to Kering, but we're set to get news on that, and Kering gaining around 8% almost at the moment. So big move in terms of those stocks. Then in terms of the UK M&A, a couple of them were on our radar, and we have got a decent move in Spectrus. They've got a rival takeover bid coming from KKR. They have rejected it. They are in talks with Advent, the other US private equity firm. So it's another an example of a US firm coming in and taking out a UK company that's set to go through. But KKR kind of giving that rival bidding is pushing the stock higher today. Then we've got Metro Bank, also looked like it was going to be a big mover, so we'll get the price on that one. So up 9%. This is Pollen Street, according to Sky News, said to be looking at a takeover of the UK lender. That one has struggled for a number of years in terms of some of their issues with their loan book and mortgages, that kind of thing. So that one is coming down. Then Entain, all of the sports, obviously, as I said before, I don't have much of a clue about in terms of the American football and your baseball and that kind of thing, but that's where they're doing well in terms of the US. The BetMGM partnership is boosting Entain. The company has that venture with MGM in the US, and that is why they've upgraded their guidance today. So a bit of a boost for the bookmaker stock. And then finally, finishing on a negative tone, Porsche unform at Bank of America. Now they are saying that the tariff impact probably isn't going to be that bad, but they actually think Porsche not selling enough of their cars in terms of their actual demand, tariff aside. So that is the reason that Bank of America has cut that on. Only a small decline today, down 0.2%. Porsche slipping a little bit in Germany this morning.
All right, Joe Easton there with some of those early movers. We thank you so much for walking us through those stories. Coming up on the program, we're headed right back to Paris, where our very own Guy Johnson will be speaking with the CEO of Archer Aviation. A conversation with Adam Goldstein next. Stick with us. This is Bloomberg.
Of investment agreements.
Deals were once again on display.
The Saudis are open for business.
The cessation of sanctions against Syria.
Another big victory for the Crown Prince. Concerned that none of the guardrails may be set up just yet.
Headline after headline.
Trust Bloomberg for on-the-ground coverage.
The numbers will be quite substantial.
Up-to-the-minute reporting.
Driven the price of oil down.
And the analysis you need.
He's basically going to vault this region into the same sort of sphere as the US and China.
No one covers geopolitics like Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Ottawa, Canada, and this is Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time,
helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise,
with some fun along the way.
This is Bloomberg Surveillance.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Acknowledge Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Welcome back. This is the opening trade. 18 minutes into our European session, and we see some slight resilience creeping into European equity markets. Then US futures pointing quite a bit higher. E-minis up by 0.5% right now. On our global agenda, then, of course, we're focused on developments in the Middle East. Oil markets front and center as a result of that. No doubt that will be one of the themes that's being talked about at the Paris Air Show, but there are plenty of other themes besides. Guy Johnson is, of course, there for us. Guy?
Good morning, Anna. Yes, we've got lots to talk about with our next guest. Adam Goldstein is the CEO of Archer. You probably know Archer as an eVTOL, electric vertical takeoff and launch aircraft producer, but it's got actually a fair few other things that are actually relevant to the conversation we're having this morning in terms of the news flow. So let's get into the conversation. Good morning.
Good morning.
So a few days ago, we see an executive order coming through from the White House, from the president, talking about eVTOLs. How big a step forward is it that the president has made this move? How does it affect you? How does it affect the industry? How much more supported do you feel right now?
Well, the technology has become quite mature. It's really been going on for almost 2 decades now through this development cycle. And as we've been working with the regulators, the FAA and the global aviation regulators, it's become quite clear that there is an interest to bringing this technology to market. Yep. And now you're seeing support come down from the White House, where they're saying it's not just about innovating on the hardware side of things. We also need to innovate on the regulatory side of things too. Sure. And that is important in bringing new aircraft to market.
What is the biggest challenge right now? Is it the technology? Is it building Midnight, the aircraft that you're trying to produce? Or is it trying to figure out how that's going to fit into a regulatory landscape, congested airspace, all of the other challenges that exist around the business?
Yeah, it's mostly an execution issue at this point. The funding is there, the regulatory frameworks are there, the partners are there, the supply chain is there, the hardware is there. Now we have to put it all together, bring these products to market, and ultimately deliver a great experience to customers. And that's something we still have to prove.
Okay, so look a couple of years forward. We've got the Olympics taking place in the United States. The president is convinced that we should be having your aircraft flying at that event. Is that going to happen? Are we going to have an FAA-certified Archer Midnight aircraft flying people, passengers around that by the end of that event?
Well, I sure hope so. The goal is to start the commercial operations actually this year in the UAE. And that'll give us a chance to really get these aircraft out there, show everybody what they can do, really try to, engage the communities, engage the global regulators, and show everybody the benefits you get from electric aviation. These aircraft are super safe. They have a much lower noise profile, and it's really an ability to bring this new category of aircraft to market.
The United States? The UAE is a much lighter regulatory environment than the United States. It is a much less congested space than the United States. Are we going to have it in the United States by the 2028? I'm trying to sort of nail you down and give it a sort of firm idea, because there are those, and there are many of them, that doubt that you can deliver on that kind of time frame.
Oh, I'm very confident that we will have an aircraft certified by the Olympics in 2028 in the U.S.
In terms of other challenges that are rearing their heads at the moment. At the moment, you're in the innovation phase. You're not in the scale-up phase. You're not building lots and lots of aircraft. Do tariffs matter? Does the availability of rare earths matter? What are the other challenges that are beginning to come in as a result of what is kind of happening at a macro level right now? Are any of those starting to impinge on what you're doing?
Yeah, well, when I started the company, we really set up our operations in the U.S., where our manufacturing takes place in Georgia. Our core innovation tech centers are in California, and much of our supply chain is in the U.S.
Yeah.
And so we're not really impacted by tariffs, from the long-term basis. That being said, there's a whole new industry that's being born, and there's global scale here at play.
Yeah.
So I do think it will come into play as we look to expand, but it's really almost hard to imagine how big the industry can be, because it's a new product. It's almost like it's day one of the iPhone. It's like, hey, we know this thing can, have music, it can have the internet, but what else can it do? There's so much to come. When you have a new type of aircraft like this that can change the way people live, it can change where people live, where they work.
Sure.
It's hard to imagine almost the scale of this.
Okay, so let's talk about, let's say the scale is big. You're going to need a lot of rare earths for the magnets, for the motors. You're going to need a lot of parts that are likely to come from a global supply chain. How are you thinking about making sure that you have all those things that you are going to need in order to build the aircraft?
Well, again, there is a very robust supply base in the U.S., and so that's where we started. And so even on the rare earth side, there's great companies out there like MP Materials, for example, that makes parts in the U.S. That you can get access to. And so developing those supply chains are going to be critical to scaling. And over time, we'll look to make sure that there'll be partners and supply chain, partners all over the world.
Let's just talk a little bit about what else you do. You also do drones, like fairly big drones, but you do drones. That feels like where we are right now. That's an area that is really in the moment. Obviously, the conflicts we're seeing around the world are driving drone innovation at a huge rate. You don't have to go through all the safety checks that you have to go through if you're not putting a person on board the aircraft. Is that where the innovation is going to come from in this space right now?
Yeah, so we announced Archer Defense last year, and that was an opportunity for us to talk about a new partnership that we have with Anduril, where we are building a hybrid aircraft that's vertical takeoff and landing, and will also kind of fit into this new, what people are calling, autonomous and attritable category. So think unmanned systems that can be developed at low cost. And I do think you're starting to see that play out in the global defense industry. And so I do think there's an incredibly large opportunity that everybody is now focusing on, which is very important. The technologies that we develop on the defense side will certainly be available to be ported over onto the civil side. And that cycle, that flywheel that we can create, will just rapidly advance the sort of benefits everybody will see on the civil side.
But in the near term, everybody wants drones. Everybody's a bit more cautious about kind of electric vertical takeoff and landing aircraft that are going to get me from here into the center of Paris. But everybody wants drones right now. Is Archer potentially in the near term going to be a defense company, a drone company? Is that really what your focus could be over the next few years?
Yeah, the civil side will certainly be very big and certainly take a long time to scale up.
Yeah.
But in the near term, the defense side could certainly become the biggest part of our business. I do think there is a renewed focus on defense right now and a renewed focus for innovation in the defense industry. And so we have spent a lot of time and effort there, and I do believe it'll be a very substantial part of our business in the near term.
Is that where the conversation is right now? You're here at the air show. I suspect that last time we met at an air show, you were probably talking on the civil side. Is the conversation different here?
It's really both. I mean, we start with kind of the U.S. and the allies, and there's a lot of conversations, and there's a lot of education that's happening right now of what's out there, what's possible, what type of systems can be built.
How quickly is that moving?
Oh, it's moving at incredible speeds because everybody wants to understand where this is going and how fast and what the reality of bringing big systems to market. We've seen a lot of stuff with smaller systems, but the question is how long will it take to bring big systems? So instead of using, big, giant, transport machines like a C-130, what if you built a contested logistics supply chain that was made up entirely of autonomous attritable drones, where you have thousands of aircraft that can be put out into the front lines that all of a sudden there's no human lives being risked to do those kind of missions anymore. I think that is very exciting to people, and they want to know about it.
Adam, great to see you. Thanks for stopping by to see us. We greatly appreciate it. Adam Goldstein, the CEO of Archer, joining us here at the Paris Air Show. As he alludes to, a lot of the conversation here, and a lot of the aircraft that are increasingly being parked here are drones. That military side of the business increasingly in focus, and certainly a much bigger focus than it's ever been over the last few years here at the Paris Air Show. From Le Bourget, guys, back to you in the studio.
All right, Guy Johnson from Paris, we thank you. We've got some of the airline stocks this morning making a bit of a recovery after their losses on Friday, of course, off the back of the Israel-Iran conflict. The likes of IAG and Lufthansa in the green, not so for Air France, but oil continuing Friday's moves higher. You have Brent up 0.6%, WTI crude up 0.8%, and that is where we head next. We're going to be discussing how the conflict will affect oil prices with Macquarie's head of commodities strategy. So do stay with us for that conversation. It's coming up next. This is Bloomberg.
Today's CFOs are reshaping the C-suite. Bloomberg's Chief Future Officer shines a spotlight on these dynamic leaders.
What's the hardest part of being a CFO?
It's hard to come up with that.
It's the vast responsibilities, the need to be engaged in different topics.
It's remembering which audience I'm speaking to and what I can say in that context.
The job is not just being the executive of the finance function, it's being an executive for the company.
I would say it's prioritization.
Complete the sentence. The hardest part of being the CFO is
telling people no. It's hard. It's the right thing to do, but it's always hard.
So being just like a touch of a heartbreaker, basically.
Yeah.
We have a plethora of good opportunities. Some are really, really good. But as we strive for the great ones, sometimes those really, really good ones have to be left behind.
Chief Future Officer, only on Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
This is the opening trade. About 30 minutes into today's session, seeing some green on the screen, but no major buying into today's session. It feels like a cautious tone, even if we are seeing those kind of marginal moves to the upside, Anna.
Yeah, a little bit of positivity, but as you say, maybe that background caution still remains, given all the political developments and geopolitical developments of the weekend in the Middle East. Now, the conflict between Israel and Iran is now into its fourth day. An Israeli strike in Tehran has killed another key military official, while Iran has fired several waves of drones and missiles over the last 24 hours. The Israeli Defense Minister, Israel Katz, has said the military is targeting the regime in Iran as well as the country's nuclear facilities. Let's get an update on the latest on the ground. Bloomberg's Dan Williams, who's usually in Jerusalem for us, is here in London now and can give us the latest. Dan, we started out with a pretty firm understanding, I suppose, of what Israel was trying to do. It was about tackling Iran's nuclear ambitions. But as I was just mentioning, there's been a suggestion from the defense minister in Israel that now the regime is something that they are targeting. What more can you tell us about the latest developments there?
That's very well observed. The messaging has been getting a bit murky. At the outset, Israel said that this was an 11th hour strike to prevent what it described as a push by the Iranians to finish up critical technology for creating a nuclear weapon. They also said they were trying to reduce, to eliminate the ballistic missile capacity of Iran, ballistic missiles that could carry nukes in the future or in their present form cause a lot of damage, as we've seen to a degree in Israel. Now there's indication they'd be happy to see the regime toppled. Israel's national security advisor was just on the radio, asked about those quotes by the defense minister. He said, listen, we haven't set regime change as an objective, but should it follow as a result of the destabilization of Iran through our strikes, as a result potentially of the fostering of dissent within Iran, Israel would not be unhappy about that.
He's also said that Israel doesn't need the US's involvement to achieve its goals when it comes to Iran. I mean, is that accurate, would you say? Is Netanyahu really just trying to force the US to be drawn in here? And how much support do you think that Netanyahu can expect from Donald Trump?
The formal position is Israel is not forcing the US to do anything. Israel has the capacity to pursue this offensively alone, although the Israelis have received defensive assistance from the Americans, and that's not a secret. It's open, there's been interceptions, and also steady supply of munitions, especially interceptor missiles. What's now being said this morning is even with the toughest objectives in Iran, specifically an underground facility in a place called Fordo, buried into a mountain specifically to withstand an attack such as this, Israel's saying it could even manage that. That's a tall order. It's very deep underground. Israel does not have strategic bombers, B-2s, and the like. However, as we've seen elsewhere, for example, in the killing of the Hezbollah leader in September, if you drop bomb after bomb after bomb after bomb in the same location, the same crater, eventually those bombs are going to burrow down and reach the underground facility. So if, presumably, the Israelis achieve full domination of the skies, they could just keep doing this day after day until, as I said, those bombs finally reach the target.
Let's talk a little bit about how this initial strike even began, and that was allegations around the nuclear program, that Iran is getting very close to the 90% enrichment level. Can you just walk us through next steps here, especially given that talks between the United States and Iran have been shelved?
Well, as you noted, the uranium enrichment is at the heart of this dispute. It is a core project for civilian needs. It's also a core project should a country want to have an independent military option. It creates the fuel for bombs. There's a different plutonium track with reactors. That's not relevant here. This is the uranium track. So the core demand by the United States, supported volubly by the Israelis going back years, is an end to uranium enrichment, the dismantling of facilities that could create highly enriched uranium in the future. The Iranians, prior to this flare-up, balked at that. They said it's a red line. They said this is a project that they've fostered for years going back, a matter of national treasure, of national expense, investment, resources, personnel, scientific know-how. The question is whether there's an off-ramp diplomatically for the Iranians to come along and say, this has been painful, we don't want this to go further, and yes, we're now willing to discuss abandoning uranium enrichment.
Okay, Dan Williams, we're really lucky to have you around the desk with us this morning. Dan Williams, usually based in Jerusalem, but in London with us this morning, bringing us the latest on the situation between Israel and Iran. And we can now look at the market impact, of course, huge impact for the commodities sector. We can speak to Marcus Garvey, Head of Commodities Strategy over at Macquarie. Really good to have you with us, Marcus. I want to start with the worst case scenario, something that most analysts are saying isn't really likely. Let's say there is a complete disruption to Iranian oil supply and a closure of the Strait of Hormuz. How high does the oil price rise?
Morning. Yeah, I think fair to say that's not a base case, but if you're talking about really extreme scenarios, we've considered a case where even if only very temporarily oil prices could get, for example, above $200 a barrel, if you're just looking at historic relationships of the sensitivity in changing price versus the amount of supply that could be disrupted in that scenario. But I would stress that neither is that, as I say, a base case, nor is that something that inherently would be very sustainable if it were to occur.
So what is your base case at the moment? What scenario do the current moves suggest to you the market thinks is likely?
So our base case is that you're probably going to push a little bit higher than we have already in terms of the amount of risk premium that's being priced in, and that means getting up into the low 80s for Brent. But then we kind of get to a point where the market scenarios become a little bit bifurcated. If we look, say, over the next 2 weeks, do we go into a scenario where you get some form of de-escalation, perhaps with the US getting involved on the diplomatic side, or do you actually find that, for example, Israeli attacks on Iranian energy infrastructure lead us to a route where we do get, rather than just a risk premium being put in, actual disruptions to oil supply? And if you're in that latter case, then we're probably talking about the price pushing up towards $100 as you put also further risk premium in on greater losses, versus if you go into a de-escalation scenario, while clearly there would still be a significant risk in the market, you could then look at over time that risk premium bleeding out, as we've seen with obviously less dramatic, but still plenty of other geopolitical risk events over the last few years, where you get this initial spike, but then that risk premium decays out as you don't end up suffering a meaningful disruption to actual supply volumes.
Marcus, can you give us your insights on what it is you're watching in terms of the targets that Israel has in Iran? For example, I was reading over the weekend, some people are watching at the Karg Island terminals, which is very much part of the Iranian export infrastructure, through which it sends a lot of its energy products out to China. And that could be something that could be seen as more materially squeezing global supply of energy. What is it that you're watching within Iran?
I think that's an important point that you mentioned about export infrastructure. And there we would distinguish in terms of any Iranian infrastructure that were to be damaged between domestically focused assets, for example, on the refining side, versus, as you mentioned, somewhere like Cargill and anything on the export side. If it's domestically focused, it's less escalatory in our view in terms of its market impact, its price, and the potential Iranian reactions to that, versus if it's export focused, then you're stepping into that scenario I'm talking about where we're already, say, in the low 80s, and you're talking about, well, one, we're going to lose some Iranian barrels from the market, and two, you're increasing the likelihood that Iran does something that takes or increases the risk of other supply coming offline, without even getting to that extreme case of a Straits of Hormuz blockade.
Yes, I mean, thinking about the potential for that a blockade of the Straits of Hormuz, a sort of shutting down by Iran of that strait. Similarly, I mean, Lizzie was implying this, a lot of analysts suggesting this just would be very difficult to do and might not even be desirable for the Iranians. What's going into your thinking about the likelihood there?
I think one very good point that's been made in terms of reasons Iran might not choose to do that, aside from the really bigger picture, is they're also dependent a lot on consumer goods imports, which come through that shipping channel, so it would disrupt their domestic economy. And also, clearly, it's the maximalist position to take. So just thinking about that broader energy picture, if they do that, it's not necessarily their last card, but it's not something that you'd expect them to do in any sort of early phase of tensions. And so I think it's fair to assume that it's not going to happen. But one of the problems you've got in terms of how the market prices it is that you've got this huge asymmetry, as I talked about, in terms of the price risks, that if we go through a period where there's incremental escalation, but then maybe you de-escalate, we're talking about prices coming back down to where they were relatively recently, for example, in the order of $10 to $15 lower over time, versus a case where actually that disruption happens, and then you're talking about prices potentially more than doubling. So that extreme asymmetry, I think, makes it very hard for the market to price. But it's fair to assume that it's not just in terms of the kind of rational iterations that you go through of escalation, that it's something that you get to first. It's near enough the last thing that we would expect to occur.
Marcus, it's Creedy in London. We're just looking at this price action here, 74 handle on Brent crude, a 73 handle on NYMEX. Why is there not a bigger spread between those two contracts?
Well, that's a fair question. I mean, one of the issues you've got also now in terms of the way that the pricing works is that you also obviously have US barrels are now deliverable into the Brent market, so that degree of linkage has changed something versus historically. I think something else that's also worth flagging there is if you look at, say, the moves that we had up, for example, on Friday, you saw a greater move in the financial contracts, which also evidently WTI is part, versus some of the physical contracts, including also even, for example, the Dubai market. So I think what that also speaks to is that we are on an underlying basis at the moment, a physical market which has been well supplied and is expected to be materially oversupplied in the second half of the year without any disruptions occurring. And then that also, on the financial side, albeit the positioning is nowhere near as sure as it was if we go back to, say, 2 or 3 weeks after Liberation Day, you have still been in a market where financial positioning is net short. And so that as you see those positions get covered, it amplifies the scale of the move that we see in the financial contracts, which WTI obviously is part of it, compared to some of the physical dynamics. And that creates a bit of a distinction in terms of the degree of immediate price response, which isn't just fundamental then, but is really a function of the financial flows and the positioning that predates them.
So that's in the short term. Let's talk about the long term. How long and at what level do oil prices need to be sustained at to incentivize American shale production?
A long way below here, in our view, to be honest. I mean, when we've looked at this, and colleagues in our Houston office have done some very detailed work on it, we think that to get, for example, to a no-growth scenario, you'd need to be in the mid to low 50s, which I think is lower than most people's assumptions, and that really at any price above there, you're talking about varying degrees of growth. And obviously at anything like current prices, then we'd have very, very healthy growth if this was sustained. And I think that distinction in terms of what level you're looking for shale to grow has been a key issue that the market has sort of under, or depending how you look at it, overestimated over the past few years, where the view has been that shale growth would continue to slow. And actually what we've seen is that anything sort of well north of 60 and certainly into the 70s, you're still going to get healthy shale growth. And so at these levels, we don't think there would be any obstacle to that whatsoever in terms of the price incentive.
All right, Marcus Garvey, Head of Commodity Strategy over Macquarie, joining us this morning to talk about the price action we're seeing in the oil space. We thank you so much. Coming up, we're going to broaden out the conversation, talk about the future of the geopolitics and the role of the United States in terms of that escalation in the Middle East. Leslie Vinja-Murray from Chatham House joins the program next. Stick with us. This is Bloomberg.
Another art museum called the Guggenheim. Now, Louvre's big enough. Why do you need a Guggenheim as well, right next door?
I think it's a great question. I think the beautiful thing about the UAE and Abu Dhabi is we live with over 200 nationalities. And in doing so, they have become a part of the country's and the city's fabric. And we need to celebrate that. So we need to celebrate everybody's identity, everybody's background, everybody's heritage, everybody's history. And what a beautiful way in doing so in these beautiful institutions. These museums are educational institutions and they're community institutions. So we wanted to curate really a story where you come to Saadiyat Cultural District and you, if you allow me to curate the story, you start off at the Natural History Museum. And at the Natural History Museum, you get a glimpse and you get an understanding of how we came to be, how our Earth came to be, how our universe came to be, from a scientific perspective. Once you leave the Natural History Museum, you go to our National Museum, the Sheikh Zayed National Museum. There, you understand the history of this great land. Not just the history of the country, but the people of this land that have been a part of this land for over 300,000 years. You get a glimpse of what the past and the present and the future looks like here in the UAE. From there, you maneuver yourself to the Louvre Abu Dhabi, which is a beautiful universal museum. It is universal in its thematic approach. So there, you basically see a part of you on an equal pedestal with the entire world.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Mr. President, can you give us a sense of what you're doing to try to de-escalate the situation between Iran and Israel?
Well, I hope there's going to be a deal. I think it's time for a deal, and we'll see what happens. But sometimes they have to fight it out, but we're going to see what happens. I think there's a good chance there'll be a deal.
President Trump signaling a deal could be possible between Iran and Israel, but so far the conflict does not seem to be de-escalating, with fighting now into its 4th day. An Israeli strike into Tehran has killed another key military official, while Iran has fired several waves of drones and missiles over the last 24 hours. Joining us now, Leslie Vinja-Murray, Director of the US and Americas Program at Chatham House. Leslie, one of the things we are watching for, and where you can be really helpful to us this morning, is signs of US involvement. And we know that there is, in the sense of helping Israel to protect itself, to defend itself. There's been a role for the United States there. But what are you watching when it comes to a wider role, and what could trigger that for the United States?
Well, I think one thing that people would like to see is leadership from President Trump
that can really help to de-escalate what is potentially which is already very dangerous, obviously, for Israel and for Iran, but which could escalate to include the broader region and to pull the United States in. So people are really looking for U.S. leadership from President Trump to try and persuade both Iran but also Israel that this is a very very unstable situation. We're now seeing, of course, the question of whether or not there can be more talks, which I think for many people seems very difficult to imagine. But obviously, this is essential. Israel has launched these attacks because it has an existential concern about Iran having nuclear weapons. Iran has now made it clear that it won't give up its capacity to enrich uranium, but that it does want to negotiate a deal. And that is really where U.S. President Trump had been hoping to drive policy for quite some time. So I think that is really what we're sort of hoping for. But there is a real risk that this conflict spreads and escalates.
Right. And how would this go down domestically in the United States if the U.S. were to be dragged further in? I mean, I've seen some commentary over the weekend suggesting that those on the MAGA side didn't necessarily vote for entanglement in further foreign conflict.
Yeah, if you go back to President Trump's inaugural speech, January 20th, 2025, he said, I will be the president that is the peacemaker, that ends conflicts, that doesn't take America into new conflicts. He's really wanted to do a deal between Russia and Ukraine, a deal in the Middle East. We sort of know the scorecard. And that broader Middle East piece that he's so wanted, Iran and Israel, that relationship is critical to securing that. So this is not what the president wants. It's not what many people in his base want. It's not what he's been communicating to the American people that he was about. And certainly Americans don't want to end up in a direct confrontation with Iran. I think there are undoubtedly a few people in the Republican Party who for a very long time have been saying that we needed to strike Iran in order to prevent it gaining that nuclear capability. But I'd say that they're very much in the minority.
Quite a bit of restraint from a president who campaigned on the assassination of General Soleimani in his first term as well. Talk to us a little bit about who the arbiter of diplomacy here is. If not Donald Trump, maybe not the diplomats in Oman, perhaps Vladimir Putin?
There is a question about that. What role will Russia play? And of course, you can't really take that in isolation, because whatever Russia does when it comes to Iran and Israel, the U.S. is going to be thinking about this in the broader context, as are Europeans. But I think we shouldn't forget, right? The Europeans are sort of waving their hands, saying we'd really like to engage in diplomacy. We would like to use our skills. The Europeans were critical to that first Iran deal. They wanted that deal to stay in place. It became very difficult once President Trump withdrew. But I think they're sort of there waiting to contribute to diplomacy. We have the G7 taking place. Canada's leader, Mark Carney, is clearly also sort of stepping up and would like to play a vital role when it comes to being a leader, not only on questions of the global economy, but also on these broader negotiations. So I think there are sort of many willing participants, but at the end of the day, the U.S. and President Trump will be absolutely vital.
I think it's crucial that you mentioned that European role in there as well. Because if these strikes do ultimately bring Iran to a kind of more restrained negotiating position and put the U.S. in a better negotiating position on their end, I'm curious what the deal might actually look like. Would it resemble going back to something like the JCPOA?
There is a real concern, I guess a lot of skepticism, that whatever will be achieved as a result of, again, a very dangerous situation, and one that's very costly for consumers, for oil producers, for the stability of the international economy, let alone, of course, the first thing, which is the cost to human life across the Middle East. But the deal that might eventually be achieved is unlikely to be much better. And that's the unfortunate reality. But we are where we are today, and I think right now the goal has got to be to persuade Iran and Israel to lessen their attacks on each other, and really to bring Iran to the negotiating table, which again, it has said it would like to do. It's incredibly weak right now. This isn't really the way to have gotten them. It's not clear that this was necessary. I think this wasn't necessary to get them to the negotiating table. But they have clearly signaled that that's where they would like to be.
But let's say that Iran doesn't come to the negotiating table, and if we think about how else it could retaliate here, how likely do you think it is that it targets US bases in the region, say in Qatar? I mean, can it really handle the blowback from states like Qatar and what it could fund the US to do?
Yeah, I think it would seem like not a rational calculation. And, you know, those who spend their lives studying Iran, many of them will say Iran is a rational actor. Their war is a result not only of intentions, it's a result of mistakes in very difficult situations, so that potential that American assets get directly hit. And the energy infrastructure across the Gulf gets hit. All of those are very significant risks. And again, why those, you know, war is about diplomacy by other means. Diplomacy is absolutely critical, and making sure that it doesn't escalate to those broader set of interests that you've mentioned is absolutely essential right now.
I mean, you might conclude from all of this that Benjamin Netanyahu had lost faith in Trump's ability to negotiate with Iran when it came to a nuclear deal, hence the strike. What do you think the other Middle Eastern nations are thinking of Trump at the moment? When you look at the likes of Saudi Arabia, these nations that Trump prioritized in his first foreign trip, that tour of the Middle East, do you think they're reconsidering how they deal with the administration going forward?
Well, they're in a difficult spot. Clearly, they don't want to see this conflict escalate. Over the weekend, I was in Prague at the GlobeSec meetings, and we saw the UAE minister saying, we don't want this kind of escalation. Force is not a way to solve the problem of nuclear proliferation in the region, and so really condemning the actions. And wanting to see de-escalation, but ultimately, you know, there aren't a lot of options right now. So there might be people, leaders who are more critical of the U.S. position, but that doesn't mean that they have the ability to walk away. They're just in a very difficult place because, of course, people on the ground, right? Leaders are aware of it, and it's not only, of course, Iran and Israel. It's, as we all know, we have to go back to October 7th and to the situation in Gaza, which is really a very serious constraint on leaders in the Gulf and beyond.
Leslie, no doubt the Middle East news flow is going to dominate what happens at the G7, and lots of European calls for de-escalation seems to be their mantra. But there are other things that the G7 will be looking to talk about, and looking at Trump's entourage, the people he's taken with him, it looks as if trade. Do you have expectations that we'll get news flow surrounding tariffs and trade deals?
I do think the war will dominate this. I think the other thing to mention is, of course, that we're very close to the NATO summit. So even though two different meetings, the G7 and the NATO, a lot of overlapping members, and there's a very serious concern on the part of the G7, obviously, for what happens to the U.S. commitment within NATO. I think nobody expects the U.S. to withdraw, but, you know, what's the U.S. commitment in NATO? So those issues of security, they clearly flow right into the question of the G7 agenda. But yes, trade, tariffs. Mark Carney's really seeking to lead right now. So this G7 is very critical, and he's also widening it. He's invited Saudi, who are not coming, but he's invited India, who are, and the UAE. So he's really trying to broaden out that leadership. But you know, those traditional issues of the economy, of trade, of the tariff war, of the U.S., Mexico, Canada agreement. We're expecting a meeting between the American president, but it's going to be difficult to get away from talking about the war.
Thank you very much. Leslie Benjamin, Director of the U.S. and America's Program at Chatham House, we thank you. It's going to be a busy week with the G7, Chrissy. A lot of central bank meetings, though, also on the agenda.
Absolutely. It feels like the markets, we might just end the week on Friday where we are at this moment, which is we don't know what's going to come out of it. We actually don't know where these geopolitical tensions are going to take us and whether or not they actually move the markets beyond the oil move that you have seen in today, and I would argue Friday's session as well. Lots to digest in terms of the currency impact, lots to digest in terms of the bond market impact. We'll have it covered for you throughout the week. That does it for the opening trade. The Pulse is up next. This is Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
Bringing you up-to-the-minute tech news whenever and wherever it happens. I'm Ed Ludlow in Las Vegas, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
The flood of investment agreements.
Deals were once again on display.
The Saudis are open for business.
The cessation of sanctions against Syria.
Another big victory for the Crown Prince, concerned that not enough guardrails may be set up just yet.
Headline after headline.
Trust Bloomberg for on-the-ground coverage.
The numbers will be quite substantial.
Up-to-the-minute reporting.
Driven the price of oil down.
And the analysis you need.
He's basically going to vault this region into the same sort of sphere as the US and China.
No one covers geopolitics like Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
Hostilities between Israel and Iran enter a fourth day, stoking fears of a wider war in the Middle East. Oil extends gains, with the market bracing for any disruption in a region that produces about a third of the world's crude, while investors look ahead to a week of global central bank decisions. And President Trump lands in Canada ahead of the G7 Leaders Summit, with tensions, of course, in the Middle East and global trade set to dominate. Let's get a gauge then. Cross-asset. We talked about high oil prices in the session today. In fact, those prices are started to pair. You're still close to that $75 a barrel on Brent. Our team at Bloomberg Intelligence says that could get, in fact, WTI prices could get to close to $125 a barrel if there is major disruption in the Straits of Hormuz. We are not seeing that at this point, but clearly that is a dramatic card that could be played by Tehran. European markets, I should say, in positive territory across the breakdown. We'll see that shortly. But that is also giving a lift to the US futures story, where the S&P E-minis are pointed to gains of 0.5% after ending the Friday down 1.1%. Euro dollar at 115. The single currency getting a bit of a lift, up 0.2%. The session had started with dollar strength. That has faded to some extent. The oil pricing, I've touched on that. Gold, as a safe haven, actually losing 0.6% so far in the session. Are these markets becoming desensitized now to the conflict between Iran and Israel? It has yet to spill out, of course, to US bases in the region. That had also been a key risk for these markets. The yellow metal trading at 3,413, still close to those record highs. Let's check in on the European picture then. On a sector-by-sector breakdown, you are seeing gains in the energy sector. You're seeing gains in banks. You're seeing gains in travel and leisure. And broadly, again, across the Stock 600, a little bit of upside in the session after a week of losses last week. Here in the UK, the FTSE 100 is up 0.3%. The CAC current over in France gaining 0.5. A strong session over in Spain, with the IBEX up 0.9%, and the DAX in Germany also up around 0.3%. The countdown to the pulse starts right now.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Good morning and welcome to The Pulse. I'm Tom McKenzie, filling in for Francine Lacqua this Monday, joining you from London. The conflict between Israel and Iran is now into its fourth day with no sign of it ending. An Israeli strike in Tehran has killed another key military official. Well, Iran has fired several waves of drones and missiles over the last 24 hours. Loud explosions have been heard over Tel Aviv as missiles were intercepted by Israel's defense system. The Israeli military says 8 Iranian drones were intercepted overnight. In Iran, Israeli strikes have targeted nuclear facilities, a natural gas plant, and senior military figures. Let's get more from Bloomberg's Jumana Basechi in Dubai. Jumana, are we looking at this stage at a protracted conflict, or are we starting to see the closing chapters of this standoff between Israel and Iran?
Well, Tom, we're entering to a fourth day of conflict with no signs really of de-escalation. The Israel military saying this morning that since the conflict started, over 370 missiles and 100 drones have been fired from Iran into central parts of Israel, northern Israel. Most of those missiles have been intercepted, but there was an attack once again on Tel Aviv this morning, and several of those missiles were actually able to break through Israel's air defense system. The death toll now counting in Israel to as high as 23, with dozens other injured. As for on the Iranian side, the airstrikes continue. Israel continues to target those nuclear sites as well. Serious damage at the Isfahan uranium conversion site, key to part of the nuclear program, alongside those military targets, and some of those energy sites as well, with over the weekend a fire alighting at one of the biggest gas fields in the world. Now, Iran isn't a big exporter of gas, but it is notable that the scope of these attacks is also broadened to include energy infrastructure as well. The death toll in Iran now counting to at least 224 people, according to the Iranian Health Ministry, and that includes senior Revolutionary Guard commanders alongside some of those nuclear scientists. So at this point, the war of words continues as well. The Israeli Prime Minister vowing to continue against the existential threat from Iran, as he calls it. The Ayatollah also saying in kind that they will strike back very harshly. And also of note, Tom, the 6th round of those U.S.-Iran nuclear talks, which were scheduled to take place yesterday, were canceled indefinitely.
Yeah, and we heard from Trump, of course, over the weekend, the U.S. president saying that he believes the conflict can be resolved diplomatically, but perhaps not right away. Let's take a listen.
Mr. President, can you give us a sense of what you're doing to try to de-escalate the situation between Iran and Israel?
Well, I hope there's going to be a deal. I think it's time for a deal, and we'll see what happens, but sometimes they have to fight it out, but we're going to see what happens. I think there's a good chance there'll be a deal.
So, Jumana, we heard, of course, from the U.S. president. Those were his comments. Do we know if there are any lines, diplomatic channels at all, open between Israel and Iran, either via third parties or via the U.S.?
There's certainly an attempt to restart the diplomatic channels. There were reports over the weekend that Iran reached out to Qatar and to Oman to help restart those talks. The U.S. president himself saying there that he would like to see a deal reached. He used the word deal between Iran and Israel. But, of course, at the heart of this is whether the U.S. themselves want to get entangled in military conflict. At this point, I should note that the reason perhaps markets are so subdued today is because what we've seen is so far bilateral attacks between Iran and Israel. It hasn't broadened out into broader regional conflict. Iran haven't gone as far as looking to target or actually executing on targeting U.S. assets or even disrupting the Strait of Hormuz. So maybe this morning what we're seeing is a bit of a relief because so far it certainly appeared to be contained. But from this point onwards, we will have to see more efforts on the diplomatic front and also the U.S. actually exercising the leverage that they have in the region to bring down the temperature and perhaps push forward with that nuclear deal. Ultimately, the main objective that Israel has set out in this war, in the strikes that they conducted on Thursday, is to stop Iran from developing a nuclear weapon. Perhaps now is the opportunity for the U.S. to push more forcefully in terms of getting Iran to the negotiating table and enforcing some of those red lines that had been discussed in the run-up to these attacks.
Okay, Horizons Middle East and Africa anchor Jemana Pasenchi with the latest, of course, in that conflict. We'll get another perspective, or at least another angle to this story now, because Bloomberg understands the US president blocked an Israeli plan to kill Iran's supreme leader. We'll bring in Dan Williams from our Jerusalem bureau, who's in London because he can't get back to Jerusalem because, of course, the skies over Israel are currently closed. Dan, this is a shift in strategy and potentially a significant one. Israel now targeting senior political leadership in Iran and saying that regime change is something they're aiming for.
Yes, but it's worth noting that formally, at least, Israel has denied those reports. It says, as of a few hours ago, when the national security advisor of the country was interviewed on 2 major radio stations, that type of extreme regime change movement, at least in terms of an initiated Israeli assault specific on the supreme leader, is not in the cards, is not part of the planning. The line appears to be that Israel is moving against military assets, regime assets, and if that effectuates a downfall of a regime, potentially in sync with some kind of groundswell of movement within Iran among people opposed to the regime, Israel would certainly welcome that.
Okay, so they'd welcome it. Maybe we've got some mixed messaging then from senior officials. The Ministry of Defense in Israel, one of the senior government officials there, suggesting that regime change was a priority, but now they've moderated the language around that, which is important. So thank you for clarifying that, Dan. On some of the objectives that we know are front and centre for this Israeli government, one is the degradation, of course, of the nuclear facilities and capabilities of Iran. And the second, possibly, is the secondary consequence in terms of the regime itself. On the nuclear facilities, how much damage have they done so far? And ultimately, will they need the US to participate to take out particularly Fordow and the nuclear facilities there?
That's an excellent question. As Jemana pointed out, apparently major damage has been done to that conversion facility at Isfahan. A nuclear weapons program, if that's what Iran has, it denies having such a program, would require that, and they don't appear to have a replacement facility. The Natanz uranium enrichment site, that's the major uranium enrichment site that they've had. According to Israel, the damage there is big. The question is if it's irrevocable. There is a site that is so far untouched, Fordow, dug into a mountain expressly in order to withstand such an attack. It would appear that would require American firepower. B-2 bombers with 30,000-pound bombs. Israel doesn't have those planes and has no way of delivering such bombs. It has fighter bombers, the biggest of which is an F-15. But in theory, and I stress in theory, if they have dominance of the Israeli skies, they could continue flying back and forth, dropping bomb upon bomb into the same crater until they manage to burrow into the depths of that mountain.
Okay, Bloomberg's Dan Williams, thank you very much indeed on the Israeli strategy at this point as the conflict, of course, continues. Let's get a focus on the market reaction right now. A little bit mixed, of course, and in the session, question marks as to whether or not this is a market becoming a little bit more desensitized to that conflict and the geopolitical risk around the Middle East. You're actually seeing oil prices a little softer at the session, and of course, European stocks are up. Just 0.2%. US futures also flagged and called higher as well. Let's bring in from Morgan Stanley, senior global economist Rajiv Sibal, who's been waiting patiently around the desk. Rajiv, thank you for your time. I want to start on inflation expectations as you look at this economy in the context of these renewed Middle East tensions and the higher oil price story. Yes, prices are moderating somewhat today, but they haven't, of course, paired the gains that we saw that came through on Friday. Have you adjusted your inflation expectations for this global economy?
So I think the impact of inflation really depends on which economy you're looking at. In the United States in particular, actually one of the big surprises is that oil movement doesn't affect core inflation as much as many people would expect. And so for us, you know, taking that in combination with the fact that at $75, we're kind of back to the levels we were in March and at the beginning of the year. So when you're looking at this on a year-on-year basis, we don't really think things are going to move the needle that much for the Federal Reserve. Now, clearly in Europe and other regions, there's a lot more sensitivity to oil, so we keep an eye on the volatility. But for now in the U.S., we called our call, and we believe that, you know, nothing's really going to change at these price levels. Obviously, if we get a lot more volatility, we'll react and adjust.
Okay, on your call around the Fed, and you came out earlier in the year with a counter-consensus call that the Fed would not cut again in 2025. They would not be cutting in 25, in fact. And markets are still pricing in close to 2 cuts. And we'll see how that adjusts following Wednesday in the press conference from Jay Powell and the adjustments to the forecast as well. But you hold that view, no cuts in 2025. How does that tie you in and lead you into 2026 then? And just give us the rationale that underpins that call.
Sure. You know, when we made the call to move to no cuts in 2025, I think the futures were expecting 100 basis points of cuts this year. We're now down to 50, so we feel like consensus has come into our call.
They're catching up with you.
Well, the issue for us is that on our models, we see that there's a time lag between the imposition of tariffs and the actual readout of inflation. And we believe that's about 4 or 5 months. And so as inflation is rising, we just think it'll be difficult for the Federal Reserve to really react. And so we don't really see the inflation so much deeper in Q3 topping out. And it's after that that we can start having the conversation. But there's a whole mix of policies that are going on in the U.S. that are really changing not only the inflation side, but the labor market side, which is the other side of the Fed's dual mandate. And so when you take those in combination, that's why we had to take out our calls for cuts.
Do you price in a more dovish Fed on change at the top of the Federal Reserve come next year?
So independent of the change of the Fed, I think one of the biggest points we were trying to make with our call by taking out cuts in 2025 was we just moved them to 2026.
Right.
So whoever comes in next year, they're going to be facing a very different inflation and growth situation, and we think that leads to more aggressive cuts in 2026.
What does all of this do to the trajectory for the US dollar?
So this has been a tough one. I mean, obviously the dollar weakness is signaling kind of some of the forward rate cuts, and we've had a pause for a very brief moment of time a couple weeks ago, but then the dollar started getting weaker again. So, that's a signal perhaps of asset outflow, people looking for new domicile, gold, euro, other assets for central banks to hold their currencies in. So, for us, we do see dollar continuing to weaken as we look forward to these rate cuts.
Sorry, and specifically, is that because the outflow story is counteracting the higher rates, or at least rates higher for longer?
I think it's a combination of factors. I mean, we have to really remember that the dollar ran really far ahead of Trump's coming into office and then at the beginning of the year. And so in many ways, markets had overpriced the dollar. And so the beginning part of that move was probably somewhat of a correction. Now that we're going forward, it's the weaker growth outlook and the weaker inflation outlook in 2026 that we argue is going to continue to bring the dollar lower.
The other big central bank, and this ties, of course, to that in terms of the impact, is the BOJ this week. Can they continue to hike the Bank of Japan in the current environment?
So it's a tough one because right now the inflation data, the wage data is actually quite supportive. We do not have a call for a hike this year in BOJ. The reason is because we think with the tariff volatility, there could be risks to the downside for inflation, especially if yen continues to appreciate. And so these are headwinds to inflation in Japan. And so for the second half of the year, we think that'll overcome some of the positive news flow that we've had recently and restrain them from hiking. But clearly it's a risk in Q4 given today's data. We just think that in a quarter's time, the data is going to soften a little bit to prevent that hike.
Before we let you go, back to the US. Does the US skirt a recession this year?
Yeah, we don't have U.S. in recession as our baseline call-up. We have the U.S. consumer slowing down fairly materially once those price levels move up into tariffs, but we don't have a recession as our baseline. We think the U.S. can kind of stabilize, especially as the Fed starts cutting in 2026, because the real pivot point is going to be at the turn of the year. That's when the consumer is probably going to most feel the tariffs, and the Fed is going to have to be making tough decisions. And that's where we think the trough is, and then we kind of stabilize in the back half of 2026.
Okay, so look to the first part of next year for action from the Fed on a slightly softer consumer and maybe a slightly weaker labour market as well in the US as those inflation dynamics adjust. Rajiv, thank you very much indeed with the deep dive in terms of how to think about these central bank actions and, of course, the geopolitical impact as well on the inflation story. Rajiv Sibal, Morgan Stanley's senior global economist, of course, at Morgan Stanley. Coming up, what exactly is Israel's long-term mission in Iran? We'll get more analysis, of course, as the conflict continues in the region. Stay with us. This is Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Our global headquarters in New York, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need, live every weekday, only on Bloomberg. Context changes everything.
President Donald Trump arrives at the G7 meeting in Canada as the sparring conflict in the Middle East is set to test the unity of a forum already divided over trade and tariffs. Oliver Crook joins us now to talk us through the first big international summit of Trump's second term. Ollie, where do G7 leaders stand then on the conflict? How much unity essentially is there amongst the G7 when it comes to this conflict between Israel and Iran, and to what extent is that going to overshadow trade conversations that maybe others within that grouping would have wanted to have pursued in Canada?
Yeah, this may be a topic where there actually is some overlap among the G7 leaders. You know what I mean? I mean, we're talking a lot about this as a G6+1, right? The United States that basically stands in opposition to a lot of the sort of collective initiatives that the G7 has traditionally tried to put forward. And as a consequence, we're not really expecting to get a joint communique from this meeting of the G7 leaders. That being said, you know, as far as the sort of situation in the strikes of Israel and Iran and back in the other direction, there has been more or less seemingly consensus. And first of all, what everybody wants is de-escalation. They want to take some of the temperature out of the issues that we've been getting and trying to get to a diplomatic solution. That being said, there has been basically no criticism of the preemptive strike, as Israel puts it, on Iran by the Israelis. And basically everybody has said from the sort of Western leaders, whether it's Ursula von der Leyen, Friedrich Merz, Emmanuel Macron, their message has been very aligned. It's saying that basically Israel has the right to defend himself, that Europe will not stand for an Iran with a nuclear weapon, and that is sort of in some way sort of a tacit approval of what's been going on. As far as Europe is concerned, in terms of the conflict itself, I think it will bring to bear two things. So the first is that it will show once again basically the Europe's limited influence in the absence of the United States to bring any effect to bear on Iran or the Israelis. They're going to be spectators likely once again on this conflict. But the second, Tom, and this is something that's I think worth resting on for just a moment here, this is the sort of last pillar of support of Russia in the Middle East after the fall of Bashar al-Assad. The Iranians, as they get weakened, what is bad for Iran will be seen as being bad for Russia from the Europeans, so they'll probably likely continue to accept what Israel is doing and actually welcome it in some regards because it will diminish Russia's ability to exert influence and potentially strike in Ukraine.
Okay, Bloomberg's Oliver Crook, thank you very much indeed on the potential consequences of this conflict for Europe and other members of the G7 as they meet in Canada, a summit, of course, we continue to cover for you. Now, as strikes on Iran intensify, Israel is looking to exploit the Islamic Republic's weaknesses in an effort to foment economic unrest. Joining us now with more analysis is Roxanne Farmanian, lecturer at the University of Cambridge. Roxanne, thank you for your time. It seems there is, at least on the edges, an aspiration amongst this Israeli government potentially to foment and see an end to the regime in Iran. That seems to be becoming slightly more explicit in the last 24 hours or so. What is your expectation of the weaknesses, the vulnerability of the Iranian regime at this point?
Well, I think so far we're seeing a rallying around the flag more than a sense that the population is not supporting the government. I think there is a distinct feeling that this is Israel's war. It is the one that attacked Iran. And although Iranian parliamentarians are already considering the withdrawal of the Nuclear Non-Proliferation Treaty, the NPT, there is less voices being raised to develop a bomb. They're saying they still follow the fatwa, if you will, of being against the development of a bomb. And they have said that if Israel stops, Iran will stop. So there's definitely a sense that this is being generated by Israel, and the Iranians themselves are not supporting a war and this kind of slugfest that we're seeing.
And to be clear then, Roxanne, you don't expect to see large-scale public unrest in Iran that could pose a challenge to the regime, at least in the medium term, short to medium term?
Certainly in the short term. I mean, this could drag on for quite some time. And if it does, then, of course, there will be uprisings, perhaps, because of shortages, because of discomfort on the part of a population that will be suffering electricity shortages and this kind of thing. But at the moment, the feeling is very much that the country is under attack, and that many of the facilities that were originally described as not being at risk, so electrical infrastructure, the gas fields, for example, that these nonetheless are coming under Israeli strikes, and that is the feeling, therefore, in Iran is that this is attacking them as a people.
And the Iranian regime has long insisted that it is not pursuing a nuclear weapon, a nuclear bomb, that its nuclear capacities and facilities are for civilian use only. Does that assessment within the Iranian regime change as a result of this conflict? Does this push Iran closer to that nuclear weapon?
Well, certainly the fact that Israel has attacked it is one of those classic cases where it's always said those with a bomb do not get attacked. And so that's the North Korea and Pakistan type of situation. And I think what we're seeing is that there is discussion in Parliament about that for the first time, and in serious terms, I mean. And so if anything, this Israeli attack could push Iran towards crossing that red line that has existed inside the country up until now of developing an actual weapon. But of course, it depends on how badly the nuclear facilities and refineries are hit by Israel. And unless the United States gets involved, it is very unlikely that the nuclear program would be decapitated so totally that it would be dysfunctional.
Mm. And on the subject of the US, it seems for now at least Iran has not targeted US bases in the region, though it has threatened to do so. Do you expect that to be maintained by the Iranian regime? They don't want to pull the US into this conflict. Is that your understanding?
I think the Iranians are playing a double game here in the effort to try to reduce the temperature. I think there's quite a bit of conversation between the Iranians and the region. They're very much watching the fact that the region is not getting involved, and the foreign minister Al-Araghchi has said it does not want to see the region affected, that would be a completely a huge escalation, and that they would not want to be responsible for that. So on the one hand, I think they're hoping that there could be some kind of negotiation over the nuclear situation with the United States, which would then reduce the attacks by Israel. On the other hand, I think they feel a little bit entrapped by the U.S. One of the key reasons for the negotiations with the U.S. was to avoid an attack by the Israelis, and of course that has not been avoided, and so partially one of the reasons for those negotiations is moot. On the other hand, I think they are trying to find some kind of way to attack Israel on a par for par without escalating the situation. And I don't think it's very clear what President Trump meant about a deal. I think the deal that is available is only with the U.S. because Israel and Iran are not in negotiating terms.
Okay, Roxanne Farmayan, thank you very much indeed. Lecturer at the University of Cambridge with that expertise and those insights, of course, into the region with a specific lens there on Iran and how it may be thinking about the steps ahead. We are at the Paris Air Show, meanwhile. We're going to switch focus where blockbuster jet deals are likely to be overshadowed by safety concerns following the fatal Air India crash. Guy Johnson is on the ground for us. More on that next. This is Bloomberg.
Welcome back to the circuit. This time, we're taking you to the frontier.
Do we have a camera, or do we? We don't want to lose you, Emily, in all of this.
Stargate, put that name down in your books.
What we're undergoing right now is sort of the largest infrastructure build in human history.
To meet the people rewriting the rules of code and culture.
How do you personally grapple with the pace of it all?
It does feel like it's going very fast.
When did you realize, oh my gosh, my life is never going to be the same?
The day I got engaged, I was like, whoa, what have I bitten off here?
Where the future gets real.
How confident are you that AI's promise will outweigh the perils?
I'm not confident.
So the tech companies are lying or fudging.
And a little weird.
What's the point of this?
What is the point of any of this?
Tune into Season 3 of The Circuit with me, Emily Chang, Thursdays at 6 p.m. Eastern on Bloomberg Originals and Bloomberg TV.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question.
Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
Good morning. Welcome to the Pulse. I'm Tom McKenzie in London. These are your top stories. Hostilities between Israel and Iran enter a fourth day, stoking fears of a wider war in the Middle East. Oil prices waver and stocks stage a tentative rebound as investors temper their risk-off positioning. And President Trump lands in Canada ahead of the G7 leaders summit with tensions in the Middle East and global trade set to dominate. Now, despite global tariff threats and escalating geopolitical tensions, investors are still betting on emerging markets. EM currencies have had their best start to the year since 2009, and investors think there is room to rally further. We're joined now by Julia Pellegrini, EM Portfolio Manager at Allianz Global Investors. Julia, thank you for joining us around the desk this morning. So as we weigh up, of course, the Middle East tensions, we weigh up what happens in terms of global central banks with the BOJ and the Fed and the BOE this week. And then we cast a lens onto the EM space. Given that outperformance we've seen year to date, is there anything across that story that derails EM outperformance as we head into the back end of this year?
Well, of course, first of all, thanks for having me again on the show. It's interesting times, especially with geopolitics, as you pointed out in your opening statements around, of course, the escalation of tensions in the Middle East. Fourth day of conflict, tragic to see more loss of life in the region. And as EM investors, we're obviously watching it closely for the impact potentially on oil markets, but also on global risk sentiment. So we've seen the EM asset class performing very well this year. You've got EM hard currency bonds at over 4% return so far this year. Local currency touching 10%. Impressive story, really, since we haven't seen that in, as you said, a number of years. It can be derailed by an escalation in the Middle East. We are not seeing that. Of course, the permutations to that Middle East conflict are several. Should Iran, for example, escalate by closing the Strait of Hormuz, where about a fifth of the oil supply globally goes through every day, that would be a significant escalation for us, oil spiking probably above $100 a barrel. We are not seeing that at the moment in terms of the statements we're getting from the region. And most importantly, if you look at the EM side of the story, we've got a very resilient asset class we're talking about. And that's part of the reason why we're seeing these kind of returns this year. So, of course, U.S. exceptionalism, that whole narrative has been shelved. But we've also got a strong improvement in EM fundamentals with more rating upgrades than downgrades in the last 2 years. Half of the asset class being investment grade now. We've got reform stories from Brazil to Turkey to Nigeria to Pakistan, you name it. And, of course, we got central banks locally playing with a very nice cushion of real yields in the 6 to 8% region. That gives you a lot of room to maneuver as a local central bank.
There's a lot to unpack there, and some really interesting points that I kind of want to unravel.
Sure.
I want to start on the hypothetical risk scenarios in the Middle East then, and then we'll move it on to some of those other fundamentals, which is dollar per barrel at 100 and above, or the Straits of Hormuz maybe being closed by Iran. Neither of those things are happening right now. But in the hypothetical scenario that they do, how do you change your view on EM? Which EMs are most vulnerable in that scenario?
Well, the asset class is roughly divided 50-50 in oil importers and oil exporters. You could see oil importers being particularly negatively affected, but a good chunk of the asset class that gives you a lot of room to play as an investor, also benefiting from higher oil prices. Of course, there's the second channel I mentioned, which is global risk sentiment. Undeniably, such an escalation would be seen as very negatively from markets. The concern around inflation picking up locally across EM, and not only that. And so that would inevitably bring in more risk premium to the asset class. Provided that you can withstand those, you still have, as I said, a good half of the asset class to play with, particularly some of the oil importers, some of which, as I said, have also shown an impressive reform path over the past year or two. So there are stories to work with across the developing world.
What assumptions are you making about the direction of the US dollar as you push out your view on this EM outperformance story? Does the dollar have to continue to underperform to keep that story running?
I think that has definitely helped so far, and we think that EM currencies have effectively bottomed out cyclically against the US dollar. So we still see further room to run for these EM currencies. I think also, however, as I was saying, it's not just purely a story of the dollar and the end of US exceptionalism narrative that we were talking about just 6 months ago. I think there's a story of improving fundamentals, as I said, and really proactive central bankers that now have bought themselves the room to maneuver with real rates, in some cases in the 6 to 8% area, if you look at Brazil, South Africa, Mexico, Colombia. So you've got a lot of room to maneuver there to support your economy in the context of a global slowdown, perhaps even more so if oil prices increase, and also contain inflation, which is generally on a lower trend locally, all the while keeping an eye on your exchange rate so you avoid excessive volatility. So I think EM central bankers are in a particularly good position, which they have bought themselves by doing the good work over the last 2-3 years.
Okay, they've done the homework. What is the China story in that? I mean, you named some companies that are countries that are major trade partners with a China that still looks pretty vulnerable in terms of its economic trajectory, with the impact of tariffs, with a consumer that's not kicking into high gear, with that deflation story in China. What does the China read across to some of that positive fundamental story when it comes to EM?
I think China is still one that we're watching closely. It's an economy that is stabilizing, but arguably still working towards changing or containing that deflationary effect that its economy is still seeing. And that is a battle that they're still fighting, to be fair. They haven't quite nailed. Having said that, that has a read across to many of the sort of South Asian and Southeast Asian economies that we invest in. They have yields locally in around the 6-7% area. These are still pretty solid yields to work with. They've got room to cut rates across the Thailands, the Philippines, the Indonesias. So there's something to play there with, especially in the context of, again, slowing down global growth because of also trade tariffs that we're seeing still in a flux. We know that there'll be some more news come mid-July, but it's still in a flux.
So these EM central banks, they've got the space to be able to cut rates in that scenario. Is your base case that in 2026 we do get a slowdown that triggers those EM central bank rate cuts? Is that what you're pricing in for next year?
Well, there's certainly going to be a bit of a slowdown, undeniably, because some of the work is being done now, and inflation will tick up inevitably, especially if we see some changes again in global geopolitics and the like. But we think there's still quite some time to get there before we see inflation picking up again around this time next year, perhaps in some of those EM economies, a little bit earlier, only in a few cases. So there's still a lot of a runway to play with for investors globally. And we certainly see in terms of client flows as well. We've had a streak of 8 weeks of flows into EM local markets, which have effectively erased all the outflows we saw in the earlier part of the year. So end investors are clearly seeing this as well and moving their money accordingly, which in turn results into a virtuous cycle.
Where are those flows coming from?
across the board, investors, they look at the EM asset class. So
I'm just wondering if you're seeing pronounced moves out of the US. You talked about the end of US exceptionalism earlier.
Of course, yeah. I mean, what we're essentially saying is that investors are looking at alternatives to US assets, and they're seeing these very interesting markets that are showing better fundamentals, more proactive policymakers. They've already returned nearly 10% this year. What's there not to like? Let's try and diversify our portfolios, and that virtuous cycle for us is only just kicking in. Hence, we're saying, yes, of course, there may well be a slowdown into mid-next year, but there's still quite a lot of room to maneuver until then, and a lot of returns to peak up for an EM investor.
Okay, that's the constructive case for EM, and you're leaving the door is open for investors to get further exposure to that space. Before we let you go, is there one or two EM markets that you steer clear of, despite the overall constructive view that you have on this space? Is there anything that you're more cautious on?
We obviously have different weights depending on the market, but there isn't something we're particularly negative on. There's varying degrees of exposure there. Some of the ones we like the most is South Africa, still Brazil, despite some lingering fiscal issues. You've got interesting potential in the Turkish lira still, despite the moves we've seen, and some geopolitical risk there, also very locally brewed, as we know. So the opportunities are there. Perhaps we're better disposed towards some Latin American EMEA stories versus Asian stories that we discussed, maybe more at the epicenter of that China trade discussion. But all in all, we are active investors. We like to be selective in what we do. So we refrain from this broad categorization, not this region, yes, that region.
Giulia, thank you very much indeed. Opportunities, particularly in South Africa, Brazil and Turkey. Giulia Pellegrini, EM Portfolio Manager at Allianz Global Investors, on the opportunities within the EM space in this current environment. Now, Brent crude is currently lower on the session, having been as much as 5.5% higher earlier. The market bracing, of course, for an escalation that could disrupt supply from a region that produces around a third of the world's crude. So far, we have not had that major disruption. Brent currently down 0.3%. Let's bring in Anthony De Paola, Bloomberg's Middle East energy reporter. So we've seen a bit of a turnaround then in terms of prices lower, Anthony, in the session today. What is underscoring that? Is it an expectation that maybe Iran doesn't look to throttle the Straits of Hormuz?
Yeah, I think that we saw that jump earlier this morning based basically on concern about what happened over the weekend when we did see the first strikes against energy infrastructure in Iran. And that's seen as kind of a bad sign that if they do start going after energy infrastructure in Iran, that potentially does cause interruption of supplies. Or potentially some tit-for-tat assaults by Iran on other production elsewhere in the Gulf. But that hasn't happened. What those attacks were over this weekend were attacks on mainly domestic oriented facilities in Iran. So we had an attack on an oil storage depot in Tehran, where that refinery supplies a lot of domestic fuel supply around the capital. We had an attack on a gas processing facility in the south, and the gas is mostly used for domestic use. So we're not seeing strikes yet on Iran's productive capacity or on Iran's main oil exports. So those are continuing to go to the market. And without that attack directly on Iran's main oil production and export facilities, then that seems to lessen the likelihood that Iran would try to interrupt the supplies of others. So we talk a lot about the vulnerabilities around the Strait of Hormuz. Iran doesn't necessarily have to close that fully in order to create some obstacles there. They could, as they have done before, arrest some vessels to try to bring them into Iranian waters and claim there was some kind of security issue or some kind of safety issue. So there's a lot of things that they could do. So far, none of that has happened. We haven't seen any moves around Hormuz. Obviously, some vessel owners have said they're reluctant to send their ships into Hormuz because of potential war risk. But we haven't seen yet any activities that affect any vessels or any flows. So we're not seeing that yet. And that's why we're seeing the oil price come off now, because the idea of that threat has been a little bit diminished now, Tom.
Anthony, OPEC Plus looking quite prescient now, given that they made that decision, of course, prior to this conflict starting, to add more barrels onto the market. Do we know if this changes the calculus going forward for OPEC Plus? Do they reassess their strategy in light of what is taking place in the Middle East now?
Yeah, for sure. I mean, they're going to be assessing the situation as it goes along in any case, because OPEC Plus is taking these month-by-month decisions now. So they've got another decision coming up, depending on when they put the meeting, either at the end of this month or the beginning of next month, in order to decide the coming policies. So we've seen increases by OPEC Plus of more than 400,000 barrels a day so far for the months through August. So we're possibly going to be looking to see more on top of that, depending on how OPEC assesses the market. Now, going into this, going into the current conflagration, what we saw was that the market was strong. Refining margins were holding up, and that was a lot of summer demand. OPEC thought they could bring more oil into the market because they didn't see oil building up in storage and stockpiles. So they thought they had some room to bring some in. But then the prospect for later in the year, for the second half, was that we would see a weaker market, and that OPEC would have to then evaluate whether they do continue with those increases or whether they do decrease. So now they'll be looking to see what are the interruptions. Is there still that demand? Or are people scared off of economic activity because of this issue and demand decreases? So they're going to be looking at those issues, the underlying demand plus any potential interruptions before they decide, and as they decide to make that choice of whether to continue at the pace of 400,000 barrels, even perhaps putting more on the market, because they do still have more spare capacity. The issue is, getting that to market and making that decision. Yeah. So we'll definitely be watching that, as they will be watching the situation in the market, Tom.
Okay, excellent update. Thank you. Bloomberg's Anthony De Paola in Dubai with the line, of course, that OPEC Plus has that additional capacity. They will be watching this closely. WTI currently trading just below $73 a barrel, down 0.2%. Now, switching focus to what is happening in terms of the aircraft industry and what's happening on the ground in Paris. Airbus Chief Executive Guillaume Faury says it is an uncertain world with pressures on aircraft deliveries, trade tensions and conflicts around the world. Take a listen.
We have plenty of contradictions to manage. We have a very strong backlog of signed contracts, customers expecting those aircraft to be delivered, so we have pressure on deliveries. We have a challenging situation for supply chain coming out of COVID, now with the uncertainties on trade and also on conflicts around the world. So we're pushing hard to be able to fulfill our obligations toward our customers. They count on us, but it's an uncertain world.
And Faury was speaking exclusively to Guy Johnson at the Paris Air Show. And Guy joins me now. He's been on the ground, of course, through the day. How are tariffs weighing on the aviation sector then, Guy? This is a question, of course, you put to executives on the ground where they continue to wrestle with the tariff impact.
Tom, tariffs are just one of the challenges these guys are facing right now. This was an industry that was already facing problems from the supply chains that came out of COVID. They never really recovered from that. Then you put tariffs on top of what we're dealing with here. You put a changing foreign exchange story on top of it. You put what is happening in the Middle East, what has just happened with the Air India flight. This is a hugely challenging environment at the moment, not only on the ability to supply new aircraft, but the ability to put those aircraft to work. The tariffs are going to cause all kinds of problems with that. How do you get aircraft into Europe? How do you get them into the United States? Many of the people in this industry simply don't have the answers at the moment because we don't know what the tariff picture is going to look like. But tariffs are just one of the challenges that the industry is facing. We need clarity from the Trump administration on what is going to be happening. The July deadline is coming rapidly towards us on the 9th. At the moment, remember that tariffs do apply. We've got 10% tariffs on, for instance, Airbus aircraft going into the United States. Now, there's ways around this, but whether or not those last for much longer, we remain to have that question answered. So, yeah, I think I can't remember an air show, Tom, when you had more complicated factors, both on the demand side for aircraft and the ability to supply aircraft. Tariffs are but just one of those factors that we have to roll into the mix.
Yeah, and Faury really articulated that, didn't he, in that interview that you had, of course, with the CEO. Guy, what else are you expecting from the show, given all of those complexities, all of those issues facing this sector?
Yeah. Well, I think you're probably going to see a slightly quieter show, to be honest, Tom. Kelly Ortberg, who is the CEO of Boeing, is not here. A number of the Middle East airline CEOs are not here. They are not showing up because they're watching what is happening, obviously, with the evolving security situation in the Gulf, the ability to manage airspace in the Middle East at the moment, hugely challenging. Kelly Ortberg is not here because of what happened in India. So I think you're probably going to see a slightly lower intensity show as a result of that. I think some of the Middle East carriers that were going to be announcing big orders, maybe they push those to the right and announce some of those orders a little bit later. There's all kinds of theories going around the show about what happened to that Air India aircraft, so people are certainly talking about that. But from a normal kind of razzmatazz point of view, billions of orders are being placed here. I think you're going to see a much quieter situation, and certainly there are many fewer CEOs here than you would normally anticipate now. Some of that's simply down to what is happening with the day-to-day operations of carriers that are struggling to make their operations work in the Middle East. The other is what is happening with the Airbus story. But even those that are here are certainly being quieter than they normally would. So I think probably a more subdued situation. This is an industry that gets impacted by so many things. Consumer demand. You were just talking about the oil price story. That's another factor you've got to throw into the mix as well. Then there's a big defense story here as well that you've got to bear in mind as well. The French Prime Minister was here. Emmanuel Macron's at the G7 right now. He's going to be coming here on Friday. So that maybe comes to the fore a little bit more as maybe the civil side takes a back step because of some of the situations we've already outlined, Tom.
Bloomberg's Guy Johnson, great stuff. On the ground for us in Paris at the Paris Air Show. Of course, plenty more coming through from that show throughout the next few days. Now, Bloomberg has learned that Gucci-owned Kering is set to name Renault head Luca De Meo as its next CEO. Charlie Wells is here with the details. Major change at the top then for Renault and Kering. Charlie, talk to us about what we know, what led to the change at the top, particularly for Kering, given the challenges it's faced.
Pivot for De Meo, really kind of shifting out of the highways of Renault to the runways of the fashion industry with Kering. And De Meo really is an executive who's known as something of a turnaround expert. If you take a look at the share price of Renault versus Kering over the past 5 years, you can really see under his tenure, really that share price doubling during the period when he really kind of helped take this company out of some of the depths of COVID. We're launching new products, getting into new partnerships with a number of firms that consumers and investors like. It's a different story for Kering. Over the past 5 years, you really have seen that company struggling in that ultra-competitive luxury space. But this morning, on the back of this announcement, if you take a look at the markets, you see a flip of that narrative. You see Kering, the best performer in the Euro Stoxx 600, their share price getting a significant lift on this news, whereas Renault really struggling, the worst performer in that index, as analysts have been releasing notes about the strategic direction that Renault might take with De Meo gone. But just because we're seeing this lift this morning does not mean that De Meo has an easy ride when he gets to Kering. If you take a look at the revenue sources that this company has, 44% coming from Gucci. Gucci is a brand that has really struggled on some softness out of China, has struggled to navigate some of the shifts in the fashion industry regarding trends. So when De Meo arrives at Kering, he might want to think about buckling up.
Okay, Charlie Wells, very nice. Thank you very much indeed. With change, of course, at the top of Kering, which has seen that share price pressure down 80% since 2021. Can Luca De Meo turn things around? Coming up, our exclusive interview with the Prime Minister of Luxembourg, Luc Frieden. We're going to talk trade and geopolitics. That is next. This is Bloomberg.
trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
The flood of investment agreements.
Deals were once again on display.
The Saudis are open for business.
The cessation of sanctions against Syria.
Another big victory for the Crown Prince, concerned that none of the guardrails may be set up just yet.
Headline after headline.
Trust Bloomberg for on-the-ground coverage.
The numbers will be quite substantial.
Up-to-the-minute reporting.
Driven the price of oil down.
And the analysis you need.
He's basically going to vault this region into the same sort of sphere as the US and China.
No one covers geopolitics like Bloomberg.
The G7 summit is underway in Canada. The EU trade chief is attending the gathering, of course, seeking progress in negotiations with the US ahead of a July the 9th deadline. Geopolitics also high on the agenda. Plenty to discuss then with the Prime Minister of Luxembourg, Luc Frieden, who joins me on set right now. Prime Minister, thank you very much for your time. I want to start on the issue of the moment, which is the Middle East and the impact that's having on oil prices. The EU is considering further sanctions on Russian oil, potentially moving the price cap from $60 to $45. Given the recent increases in oil prices globally as a result of what's happening in the Middle East, does that have to be sidelined, that proposal?
No, we have to look at all these things together because diplomacy must prevail. At the same time, we need sanctions against those who do not comply with international law, and therefore I support all measures that sanction Russia, because Russia is the aggressor. At the same time, we need to make sure that we get a ceasefire in all the conflicts and we work on lasting peace. And therefore, I'm in favor of more diplomacy and less violence because of the escalation that entails, with all the consequences on oil prices, but moreover on the general stability in the world. So I'm very concerned about what's going on in Gaza, in Iran, Israel, in Ukraine, and we should not forget one of these conflicts.
On trade, we are counting down to that July the 9th deadline. If the US decides to impose additional tariffs on Europe, what should the response be from Brussels?
I believe that in the long term, we need to have a good relationship with the United States, independent of temporary events that take place in the US. So I think let's work for a sustainable, negotiated agreement with the United States. And I'm hopeful that we can achieve that. I think that we have to do with an administration in the US who is trying to push us against the wall. But at the same time, these are our friends, long-standing friends. And therefore, I'm confident that also at the G7 and thereafter, we can find a basis for the US to be and to continue to be a partner in security issues. And we discuss it at NATO and on trade relations. Let's not look at the short term. Let's focus on the medium and long term in our relations with
As that friend of ours pushes us against the wall and pulls back on areas like defence, there have to be new revenue streams for Europe to fund that defence, to fund that infrastructure. Yeah. Would you be open to joint debt along the lines that we had during the pandemic to fund that?
If it is focused on defence, which is a huge issue, if it is focused on specific items such as also the green transition, yes. Then
you're in favour of joint debt for defence and for the green transition?
Yes, because I think this is a common challenge. There's a common challenge that no country on its own can shoulder, especially now that we are increasing our defence expenditures.
OK, Prime Minister, we've run short on time, but we really appreciate you coming into the studio and giving your thoughts on what is happening, of course, when it comes to the question of trade and the need to fund defence and infrastructure in the EU. Luc Frieden, Prime Minister of Luxembourg, joining us in the studio. There's plenty more coming up. Stay with us. Bloomberg Brief is next. This is Bloomberg.
What is going to be the consequence for U.S. markets? We are basically
basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Let's talk about this villa. Very traditional. A lot of things of the past.
I live my very first independent life in the farmhouse. And I built it by the memory of the farmhouse, the philosophy they believe, yin, yang, 5 elements, the concept of the life, of the happiness. They build this kind of roof, like boat, and man and woman, and bowl of rice. Everyone should be happy if have somewhere to live, something to eat, and someone to love.
So you're defined a lot by your past experiences.
Yeah, actually, I'm a lucky man because not everyone should have the experience of the war and peace, poor and rich, technology progress, a change during my life, rich by experience.
There's an appreciation for what you have now.
And therefore, peace is the most important thing for today, for Vietnamese, and I think for human being, for the world.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
It's 5 a.m. in New York City. I'm Danny Berger with your Bloomberg Brief. Here's what you need to know this morning. No signs of easing. The conflict between Israel and Iran continue to day 4. President Trump says the two may need to fight it out before a deal is reached. Touchdown in Canada. World leaders gather in Alberta for the G7 summit as geopolitical tensions intensify. And all of that ahead of a big week for central bank decisions from the BOJ, the Fed, BOE, all on deck. It is a world where we are seeing more and more geopolitical shocks, but you would not know it from the price of oil this morning. In fact, we are down nearly 1 whole percentage point for Brent crude this morning. When markets first opened last night, they were up 5.5%. Not a lot of change in the price, perhaps because not a lot of change when it comes to disruption of oil markets. Across risk markets, you're also seeing a comeback from Friday when you saw stocks fall more than 1% into the close on Friday. This morning, we are higher by 0.5% for the S&P. For NASDAQ, we are higher by 0.6%. The move that does appear to be sticking is the move higher in bond yields. Across the curve, we have been moving up and will continue to do so this morning. 2.5% for your 2-year yield, 10-year yield at 3.7%. 4.43 is where we stand. 6 out of the 10 most traded currencies will see their central banks deliver results this week and rate decisions. Let's get you now some stocks to watch. Here with that is Bloomberg's Joe Easton. Good morning, Joe.
Hey, Danny. So we've got a really interesting move in terms of some management changes here in Europe. The CEO of Renault, Luca De Meo, swapping Renault Clios for Gucci handbags, moving over to Kering, according to reports over the weekend. We have got confirmation that he is leaving the car maker. We're waiting for Kering to confirm the news. But Kering stock up 10% in Paris, and Renault falling as much as 8% earlier today, down around 6%, but that will be a bit of an ego boost for De Meo, seeing those stock moves as he changes jobs. Then over in a couple of others to bring you US Steel, this long-running saga, this takeover by Nippon, finally edging even closer following some extra approvals announced on Friday by the two companies. So that stock gaining around 5%. in the pre-market. We'll be glad to see the back of that one when it does come. And then finally, one more to bring you. Cisco upgraded at Deutsche Bank, which reckons that AI trade is going to boost the company's margins. And as usual, check out the Before the Bell opening wrap on the terminal very shortly.
Joe, thank you very much for that, and we'll catch up with you later this hour. Also coming up this hour, we're going to be speaking to Air Lease CEO John Plueger live from the Paris Air Show, and Bob McNally of Rapid Energy on the moves in oil, which have started to abate since the Israel-Iran attacks. Let's get back to that top story, though. The conflict between Israel and Iran now into its fourth day. No sign of ending. An Israeli strike in Tehran has killed another key military official, while Iran has fired several waves of drones and missiles over the last 24 hours. For more, we are joined by Bloomberg Horizon's Middle East and Africa host, Jomana Bersecci. Jomana, just given the contours of this changing conflict, does it seem like we're headed to something that looks protracted?
It certainly does appear to be the case, Danny. We are, as you mentioned, heading into the fourth day of the attacks and counterattacks between Israel and Iran. Those attacks intensified over the course of the weekend, with Israel hitting over 80 targets dotted around various sites in Iran, be they military sites, also defense sites, and then, of course, those nuclear sites as well, with the IAEA saying that serious damage has been sustained in that Isfahan nuclear site. So that is a key part of the nuclear program that Iran conducts, and that it is a uranium enrichment, part of the uranium conversion facilities that they have, and a key part of the program could set them back by several months. But in terms of the death toll, the latest numbers put out by Iran suggest that at least 224 people have been killed, including 6 very senior commanders within the Revolutionary Guard, and then alongside those nuclear scientists that were also killed on the initial wave of strikes on Friday. As for on the Israel side, they have said this morning, the Israeli military has said that Iran has fired over 370 ballistic missiles towards central and northern Israel, over 100 drones. Most of them have been intercepted by Israel's air defense system, but several of those missiles did actually manage to penetrate and have sustained damage, especially in Tel Aviv this morning, the death count there going as high as 24. So what we are seeing is a continuation of this back and forth between the two sides. No signs of de-escalation. The Israeli Prime Minister saying that they will continue to strike at every site and every target of the Ayatollah regime, and the regime itself, the Ayatollah, saying that they will continue with their harsh response. And also worth pointing out as well, Danny, that those 6th round of U.S.-Iran nuclear deal discussions were actually pulled off yesterday. They were supposed to take place in Oman. What we do know, though, is that Iran has been trying to reopen the diplomatic channels via Qatar and via Oman to restart those discussions. So we'll see what comes out of that, if potentially there is an off-ramp.
Joanna, is there a clear understanding at this point of what Israel's aims are, if it is to dismantle their nuclear program or engineer something of a regime change?
So the National Security Advisor didn't say that explicitly earlier on. What he did say is that the original objective was to ensure that Iran does not develop the means and the intelligence to go on to build a nuclear weapon. And all of the intelligence that had been collected in the run-up to the attack, they say, suggests that Iran was months, if not weeks, away from developing those nuclear weapons. So the strikes, as we know, overnight on Friday, were targeting some of those nuclear sites. Isfahan, one of the main ones, but then also the deeper site that is one of the main hubs of nuclear and uranium enrichment is one called Fordo, and that is buried deep into the mountains. It's buttressed by almost 500 meters of ground, and so it's very difficult to get access to that. And the reason I bring this up is because it is unlikely that Israel will be able to take out that site without the assistance of the U.S. military. So at this point, it becomes a question of whether the U.S. themselves want to get entangled in this militarily, or whether they will resume pushing for a diplomatic solution to it.
Jomana, thank you very much for that context. That is Jomana Bersecci. Now, Washington, President Trump continues to want a deal brokered with Iran, but he suggests one may not come before hostilities continue for some time.
Mr. President, can you give us a sense of what you're doing to try to de-escalate the situation between Iran and Israel?
Well, I hope there's going to be a deal. I think it's time for a deal, and we'll see what happens. But sometimes they have to fight it out, but we're going to see what happens. I think there's a good chance there'll be a deal.
For more, we're joined by Bloomberg's Kasia Klimanshinska, who leads our breaking news coverage in D.C. Kasia, great to see you this morning. We also had Trump putting out on Truth Social over the weekend that we will soon have peace between Israel and Iran. Many calls and meetings taking place now. What has been the U.S.'s role in this conflict so far?
Good morning. Thank you for having me. Indeed, we saw right there President Trump talking to reporters yesterday as he was departing for the G7 meeting in Canada. And, you know, he said that perhaps the two countries might have to continue to fight, might have to fight it out before there is a deal. Still, as you mentioned over the weekend, President Trump urged Iran to come back to the negotiating table, kind of threatening before it's too late. He also said in an ABC interview that the U.S. could get involved. He emphasized that right now the U.S. is not involved, is not helping Israel in the attacks, but that could change.
And Trump heading to Canada for the G7, Kasia, just how much is this meeting going to be colored by what we're seeing in the Middle East?
Yeah, this is Trump's first kind of international forum of his second term. However, from the first term, we know that he really doesn't like those. He doesn't like to look for a joint consensus. He's more about one-on-one talks. And so I think it will be difficult for those global leaders to find a joint stance on this conflict.
Yeah, we've certainly seen that in past instances. Kasia, thank you so much for joining us this morning. We'll catch up with you later. That is Kasia Klimanshinska joining us live from Washington, D.C. Let's now get you some other top stories that are trending on the terminal this morning. President Trump has directed federal officials to expand deportation efforts in the largest U.S. cities. In a Truth Social post, he cited Los Angeles, Chicago, and New York. That move coming despite protests and court challenges. Elsewhere, China's retail sales growth unexpectedly accelerated to 6.4% in May. That is the fastest pace since December of 2023. The strong consumption may have been boosted by an annual shopping festival and government subsidies. Economists warning it might not represent a turnaround in sentiment. Japan's bond market roaring back to life, a surge of volatility taking hold. Analysis by Bloomberg shows that treasuries have become more sensitive to the moves in Tokyo. Fluctuations in Japan's $7.8 trillion debt market have soared to the highest level in 2 decades. Coming up, we're live from the Paris Air Show with Air Lease CEO John Plueger. That comes next as oil markets continue to decline after a 7% rally on Friday. We'll have a look at that and more coming up throughout the hour. You're watching Bloomberg.
To Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Ottawa, Canada, and this is Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
Wednesday, the Fed decides.
You can't set policy because you don't know what policy is going to be.
The Fed is codependent on the president.
They're worried about stagflationary shock.
Trust Bloomberg to bring you the fastest coverage and exclusive analysis, including Powell's press conference.
We're going to be watching the data.
The policy tool that is communication is now filibustering.
The economy could go either way. They're watching like we are.
Tune in to Bloomberg Surveillance. The Fed decides, starting at 1:30 p.m. Eastern.
We have plenty of contradictions to manage. We have a very strong backlog of signed contracts, customers expecting those aircraft to be delivered, so we have pressure on deliveries. We have a challenging situation for supply chain coming out of COVID, now with the uncertainties on trade and also on conflicts around the world. So we're pushing hard to be able to fulfill our obligations to our customers. They count on us, but it's an uncertain world.
An uncertain world for aviation. Airbus CEO Guillaume Faury speaking earlier to Bloomberg's Guy Johnson at the Paris Air Show. Pleased to say that Guy joins us now for another interview from Paris. Good morning, Guy.
Good morning, Danny. Yeah, thanks for the time. Thanks for bringing the Paris Air Show to your show. We were just hearing from Guillaume Faury there, talking about some of the challenges, the myriad of challenges that this industry faces right now. If you want to get a good understanding of kind of what is going on from a supply-demand point of view, the people you want to talk to are the leasing companies. They are the kind of the market makers, you could argue, within the aviation sector, and have got a really good idea of what is going on. One of the best people to talk to is John Pluger. He is the CEO of Air Lease. Nice to see you, John.
Thanks, Guy. Nice to be here.
We just heard from Guillaume just a moment ago, talking about all the challenges that we face right now. You've got what is happening with the supply chain story. You've got the tariff story that we need to fold into that. We've got a Middle East conflict now that we're rolling into the story as well. And we've just had a major air disaster, a tragic air disaster out in India. Let's start with the latter. Any feedback coming from customers at the moment as to how they feel about the aircraft, what they think may have happened?
No, not really. I think most people are waiting to get further indication of exactly what happened, and I don't think that it'll take all that long. I think when both black box, I think the flight data recorder has been recovered. I don't think the cockpit voice recorder has been yet, but I think those two pieces of equipment will yield a lot more information, and what comes of that, people are just waiting to see.
One of the things I think probably that then comes off that conversation is what is going on at Boeing.
Yeah.
We don't know yet, so we don't know how Boeing ultimately is going to respond. Kelly Orberg, the CEO, is not here. He would normally be here. This was going to be his first Paris Air Show. He's obviously managing that situation. But it felt like Boeing was beginning to get its ducks in line.
Yes, absolutely.
Do you worry that this could be something that knocks it off balance again?
Well, Guy, it will depend upon the findings.
Sure.
If the findings implicate a problem with the aircraft, certainly that's a concern. But I will say that Boeing has been getting its act together. We had a most recent delivery forecast from them in November, and from that forecast, all of our deliveries this year have been pretty well spot on, and probably more importantly, the quality has been much better. So kudos to Boeing for getting that together, focusing on quality. I think it's bearing fruit, and I think we and our customers that are taking these airplanes will tell you that.
But another big hit would obviously knock them.
Yes,
quite
it would not be. It would be a difficult development. Yeah.
Okay. Let's talk about tariffs.
Yes.
What is your degree of visibility right now? What are you planning for? How can you plan in this kind of environment?
Yeah. Look, it's a tough environment to plan for because things are changing. You know, you read about tariffs being announced either by our administration and then reciprocity, but it's unfolding, it's up and down. And so from our perspective, we have no Airbus airplanes coming in the United States to deliver to U.S. carriers in our order book so far, so we're okay from that perspective. We're waiting to see what the European response might be, the EU response, if any, to a reciprocal tariff on Boeing aircraft going into EU countries. that remains to be seen. That's all trying to be worked out. I think July 9th is the deadline that both sides have set to try and reach an accord. It wouldn't surprise me if that was pushed out further.
Yep.
So I think it's just a matter of negotiation. As I told my board, it's premature to really overly react. But for the most part, we have very little, we at our company actually have very little exposure of airplanes going into EU airlines in our forward order book. We have a lot going to the Middle East, a lot going to Asia. So our exposure is relatively minimal.
Is there an argument there that says, you know what, Boeing needs to have some financial stability right
Absolutely,
now.
yes.
They need to get paid. And they're not getting paid because they can't deliver airplanes. Actually, that's bad.
That's a bigger problem.
And the president's been quite supportive of Boeing. Is that quite a legitimate argument to go to the president and say,
yes,
you can't put tariffs on because our balance sheet, we need to have some stability.
Clearly,
here.
yes.
This is going to mess with that.
Yeah. You have to have a strong Boeing, and don't forget that the president awarded the 6th generation advanced tactical fighter to Boeing for its development. You need a healthy Boeing to develop that airplane. And that was something that President Trump announced with a lot of pride. And that's what he wants. He's been quoted as saying, I don't want to produce T-shirts. I want meaningful engineering. And that's aerospace. So any hindrance that would impede Boeing or Boeing's customer from wanting to take delivery of aircraft in Europe's a huge market for Boeing. And so Boeing has been able to go along okay, not delivering in airplanes in China for a while, but if there were a prolonged tariff that was implemented by the EU on importation of Boeing aircraft, again, depending upon how much, you're going to have most airlines really, even though it's their responsibility, you're going to have a lot of airline resistance to that. That's a more difficult challenge.
You price your contracts in dollars.
Yes.
We're starting to see a depreciation of the buck.
Yes.
If that went further, I don't know, but people in the foreign exchange market are talking to me about 120 euro dollar. I'm hearing 130. Somebody said 140 to me the other day.
Yeah, that sounds a little high to me.
Okay.
But yeah, you're right. Our contracts are dollar denominated. So when the dollar weakens, since 95% of our business is outside the United States, that's actually helpful for our leases.
Okay.
But it's not dependent. I mean, we've been trading in aircraft leasing industry, and largely aircraft transactions globally are all U.S. dollars. And so that's become the common standard. So I really can't point to anything significant that's going to have an influence there over time.
Let's just talk about airplanes.
Yes.
Boeing's 777X.
Yes.
Still's not flying.
Right.
Orders are starting to come in.
Yes.
When are you going to...
Well, to be frank, we're watching the development of that airplane, and importantly, the certification in a very heightened environment of scrutiny and certification. We'd like to see a little bit more end-user customer, because for us, it's not necessarily the delivery of the airplane when it first delivers. It's what do you do with the airplane after 8 years or 10 years, there will be enough of a secondary market of customers to be able to recycle that airplane, lease it to somebody else. So we like to see the market develop a little bit more.
Guillaume Faury is talking about a new narrow body, 2030 onwards.
Yeah.
Is that too early for you?
That sounds really early to me, yeah. I mean, look, their order book is full. The Neo is a spectacularly successful product. It's got the market share, a larger market share now. You've heard them talk about the stretch A220. I think that sounds like it might be more likely.
Yeah.
But a whole new single
but not a stretch. They're not talking about a stretch, though. They're talking about basically, well, they are talking about a stretch, but they're not talking about a new wing or new engines.
Right, exactly.
Is that good? Is that bad for U.S. customers?
No, I don't think it's bad. The airplanes are strong there themselves, and we've reached kind of the limits of current power plant technology in terms of efficiency. There are these, open rotor concepts now, like, the Rise engine and that sort of thing. That still has to be proven. There's still some certification issues on that, icing, blade penetration of the fuselage, that sort of thing. So I think that's still premature. So nothing quite yet on the power plant side. And on the airframe side, look, the market has spoken. It's strong. And it's hard to see a commercial incentive for either Boeing or Airbus today to really launch for a new airplane. There will be at some point this who's going to go first.
Yep.
But I think 2030 sounds a little early.
Great to see you, John.
Great. Thanks, Guy. Appreciate it.
Stopping by. Really
you bet.
John Kluger, CEO of Air Lease. Danny in New York, back to you.
Guy, thank you so much. A fascinating conversation and the widespread desire, I should say, for a strong Boeing to come back. Coming up on the show, the suspect in the killing of a Minnesota lawmaker and her husband has been taken into custody. That's in your front page news. We'll have you the rest of the headlines coming up on your brief.
AI should be for everybody, from leaders to the working on floor. And we can save 90% of time, 50% of workforce. AI is core in centers of change. And therefore, we invest heavily to AI. Actually, we started more than 10 years ago because we think the machine in the past helped our hand and legs. Now the machine helps us in brain.
Are you betting all your money in this right now?
When the OpenAI appeared, immediately I asked whole corporations study how will you bring generative AI to their job.
Our global headquarters in New York, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday only on Bloomberg. Context changes everything.
A flood of investment agreements.
Deals were once again on display.
The Saudis are open for business.
The cessation of sanctions against Syria.
Another big victory for the Crown Prince, concerned that none of the guardrails may be set up just yet.
Headline after headline.
Trust Bloomberg for on-the-ground coverage.
The numbers will be quite substantial.
Up-to-the-minute reporting.
Driven the price of oil down.
And the analysis you need.
He's basically going to vault this region into the same sort of sphere as the US and China.
No one covers geopolitics like Bloomberg.
You are watching Bloomberg Brief. I'm Danny Berger in New York. Let's get you some front page news now. A look at what's making headlines on some of the top papers. First up, the New York Times leading with the man suspected of killing a Democratic state lawmaker and her husband in Minnesota has been taken into custody. 57-year-old Vance Bolter was arrested Sunday evening and has been charged with second-degree murder. He possessed a notebook that mentioned about 70 potential targets that included politicians and business leaders. Next up, the Financial Times, and indeed many outlets leading with this morning with the conflict in Iran and Israel, that entering a fourth day. Both sides traded strikes over the weekend and into this morning with Iranian rockets hitting several locations in the greater Tel Aviv region today. Prime Minister Netanyahu has warned that the regime change could certainly be a result of Israel's attacks. And the Wall Street Journal reporting that Southwest Airlines is adding a new cockpit alert system, to help pilots avoid dangerous situations. The alerts are similar to ones in modern cars that detect other cars in blind spots or if a driver is about to back into another vehicle. It comes after the carrier recently experienced a number of close calls into U.S. airports. Now, a quick check on your markets this morning. S&P 500 futures continue to gain, up about 0.5% after declining more than 1% on Friday. The move that is sticking is that move higher in 10-year yields, up 3 basis points ahead of a holiday-shortened week and a Fed decision. Coming up, conflict rages on between Israel and Iran. We're going to bring you the latest on the tensions in the Middle East next on your Bloomberg Brief.
There is a nice confluence between the long-term investor and what we're trying to do. We have an operating principle that's in our handbook, take the long view. When we went public, we put a timeline up on the screen for the whole company in an all-hands meeting. And that timeline went from founding to 100 years out. And the IPO was one dot in 1 year on that timeline. And we tried to orient the employees to, this is a wonderful event, this IPO, but it's a moment in time on a very long journey.
This is a company that you want to exist in 100 years.
We do.
Wall Street doesn't think in...
No, they think in like hours. Yeah. And what I've learned of Wall Street, and particularly Wall Street investors, when they say they are long-term investors, that means they'll keep your stock for like a month. There has been one instance where I did something that was just for short-term stock, and I felt so bad about it that I don't think I'll do it again.
What was that?
There was one quarter, a few quarters ago, we were not going to beat the quarter. We were going to probably just hit it. And so far, we beat every quarter. So we were all like, wait, what? Our perfect record. We're like a 4.0 student that is going to get a B for the first time. This is not good. And I decided that for a short period of time, at the end of a lesson in our app, we would show 2 ads instead of 1. Turns out that that by itself was good enough to beat the quarter, but it's bad for the product. It's not good. After that, I'm never doing that again.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
It's 5:30 a.m. in New York City. Good morning. I'm Danny Berger with your Bloomberg Brief. Here's what you need to know on this Monday. No sign of easing. The conflict between Israel and Iran continues to day 4. President Trump says the two may need to fight it out before a deal is reached. Meanwhile, touchdown in Canada, world leaders gather in Alberta for the G7 summit as geopolitical tensions intensify. And all of that ahead of a big week for central bank decisions with the BOJ, the Fed, BOE all on deck. Sure, geopolitical disruptions becoming more commonplace, but you wouldn't know it from this oil market down 0.7% this morning after gaining more than 7% on Friday, perhaps with no change to oil and energy output from Iran. This picture remains unchanged. You're also going to rally back in stocks after those fell yesterday on Friday more than 1%. For your future session, about 4 hours away from the start of U.S. trading, NASDAQ futures up 0.5%, S&P up 0.4%. The move that continues to stick, though, are concerns about inflation and a repricing of this Fed. The front end moves up 2 basis points for your 2-year yield ahead of their decision this week. 10-year yield up 3 basis points at 4.4%. Let's now get you some stocks moving underneath the surface. Here with your stocks to watch is Joe Easton. Hey, Joe.
Hey, Danny. So really the big moves here in Europe today coming in the luxury and the car space. We're seeing the CEO of Renault, Luca De Meo, jumping ship. He's swapping Renault Clios for Gucci handbags, moving over to Kering, according to reports over the weekend. We have got confirmation from Renault that he's leaving the company. We haven't yet had Kering confirmed, but that is what the Bloomberg reports are saying, and others as well. Kering up 10%, Renault sliding around 6% this morning. Then, in terms of US Steel getting approval on this takeover by Nippon. Nippon, the Japanese firm, committing to spend tens of billions of dollars in investments in the United States. In order to get approval on that, we had a joint statement from the firms on Friday. Does look finally we're going to get the seal of that deal in terms of the next few days at least. Then in your rating changes, Cisco is a new buy over at Deutsche Bank. They initiated on that stock 4 years ago, but this is the first time they've ever rated it by, at least on that analyst, and that stock gaining around 2%. It's all about the AI and the systems benefit given their exposure to the hardware on Cisco. That one rising as Deutsche Bank upgrades it to buy this morning.
Joe, really appreciate your coverage this morning. Joe Easton there. Let's now get back to our top story. Israel and Iran continuing to trade blows for a 4th straight day. Loud explosions have been heard in Tel Aviv. In Iran, Israeli strikes have targeted nuclear facilities, a natural gas plant, and senior military figures. For more, we're joined by Bloomberg Horizon's Middle East and Africa host, Jomana Bersecci. Jomana, the fighting continuing throughout the weekend. What is the latest on the ground?
Yeah, no signs of de-escalation, Danny. The fourth day of conflict, strikes, counter-strikes between Israel and Iran continuing. Israel, over the course of the weekend, hitting over 80 sites around Iran. And the target of those sites were nuclear facilities. That we know from the IAEA that one of the key uranium conversion sites in Isfahan was targeted as well, sustaining quite a lot of damage, which would set them back several months in terms of how long it would take to restore some of the damage sustained there. So big blow to their nuclear program, but then also a lot of damage sustained at some of those defense and military sites as well, in addition to the taking out of senior IRGC leadership, as we spoke about on Friday. The death toll in Iran, per the latest figures, at 224, including 6 high-level commanders and those nuclear scientists as well. Now, from the Israel standpoint, Iran have fired over 350 ballistic missiles and 100 drones towards Israel in the last couple of days of conflict. Most of those ballistic missiles have been intercepted, but some of them managed to penetrate the air defense system, causing as well damage to buildings. The death toll in Israel, the latest figure suggesting 24 people have been killed during the course of the last couple of days of conflict. So no signs of de-escalation. The Israeli Prime Minister is saying that this is an existential threat and they will keep going. They will strike at every site and every target of the Ayatollah regime. The Iranian side also saying that they're not going to let up and they would not think of stopping with their responses until Israel stopped their attacks on Iran.
Well, Jomana, to that point, are there any diplomatic channels open at this moment? Are there any negotiations for something that looks like a ceasefire?
Well, President Trump put out a post on Truth Social yesterday saying that he hopes that there could be a deal between Israel and Iran. He used the word deal. He said they should make a deal, will make a deal. Many calls and meetings are taking place, which suggests that the diplomatic channels are actually being worked. And we know that over the course of the weekend, Iran also spoke to Qatar and to Oman to help restart some of those diplomatic channels and also perhaps restart those U.S.-Iran nuclear discussions. Remember, the 6th round of those talks were set to take place on Sunday yesterday. They didn't proceed given the events over the last 24 hours. But if there is an off-ramp for de-escalation, it will have to involve the U.S. because the only way that you get out of this is to secure the objective of stopping Iran from getting a nuclear weapon, but at the same time, the U.S. avoiding a full military engagement. And the way that they do that is by getting Iran to agree to a U.S. deal.
Jomana, thank you so much for your coverage this morning. That is Jomana Brzezinski. Now, as Jomana mentioned, the response from Washington has been to try to put pressure on Iran to arrive at a deal, but one might not come before the conflict rages on for a while longer, according to the president.
Mr. President, can you give us a sense of what you're doing to try to de-escalate the situation between Iran and Israel?
Well, I hope there's going to be a deal. I think it's time for a deal, and we'll see what happens. But sometimes they have to fight it out, but we're going to see what happens. I think there's a good chance there'll be a deal.
Bloomberg's Kasia Klimanshinska joins us now from Washington, D.C. Kasia, the president is also on his way to Alberta for the G7 meeting. How much is this conflict now going to cover the meeting of the world leaders?
Hello, thank you. Yes, we just saw President Trump there talking to reporters yesterday as he departed the White House on his way to Canada, where he will start meeting global leaders today. It's interesting that the Secretary of State, Marco Rubio, is traveling with him, but so is the Secretary of Treasury, Scott Bessent. And we know that there is more than a dozen of global leaders waiting for Trump in Canada, hoping to talk to him, not only about the conflict between Israel and Iran, but also about Russia's invasion of Ukraine and possibly about trade, hoping to get some trade deals done.
What's the likelihood that this can result in trade deals? Kasia, just what you're saying is an incredibly busy agenda for the president and for the secretaries joining him.
Yes, so for example, Claudia Sheinbaum of Mexico will be there, eager to discuss trade with President Trump. So will be the leaders of Japan, the EU, South Korea, for example. They all are facing a threat of higher tariffs starting next month.
Okay, Kasia, we'll catch up with you after the G7 to see what comes of it throughout the week. That is Kasia Klimanshytska in Washington, D.C. Now, it's also a big week ahead for global monetary policy. The Bank of Japan's decision comes on Tuesday, the Fed on Wednesday, the Bank of England on Thursday, among others. For more, let's go to Bloomberg's Zoe Schneeweiss, who leads our economics coverage from Europe. Zoe, I think the statistic is 6 out of the 10 most traded currencies will see their central banks deliver rate decisions. The concentration, obviously, among the Fed, but what has the most potential to surprise these markets?
The most exciting one for me actually is the Swiss rate decision. Switzerland is one of the few central banks this week, and you just went with the data with those statistics. The statistic that I found fascinating was it's 18 central banks accounting for 40% of the world economy. So the Swiss meet on Thursday, and they are likely to cut to 0. So putting them just on the brink to negative rates is one of those that actually is a huge headache for banks, because if you've got negative rates, you at least can pass on those costs to clients. If you've got positive rates, obviously you're making money anyway, but 0 puts you in no man's land, and that is one of those really interesting and maybe painful decisions for central bank.
Well, perhaps we put Japan to the side for now, Zoe, but besides Japan, we have a Fed that's likely to hold. You're talking about the Swiss likely to cut. Just how big of divergences are we starting to see among these central banks around the world?
Overall, this is a week where we will be seeing mostly holds. As you mentioned, the Fed is going to hold. The Bank of Japan, even if you put them aside, is going to hold. The Bank of England is going to hold. The cuts we're going to see are few and far between. So Switzerland, I already mentioned. We've also got Sweden. The Reichsbank is likely to cut. And then in the Philippines, there also is likely to be a cut. But otherwise, hold is one of those prevailing situations we've got right now. And that's all back to Trump and those trade wars that just put so much uncertainty over central banks, so they just don't want to make a decision right now.
Yeah, fair enough. So perhaps a hold when it comes to the Fed. But Zoe, the more exciting thing might come from the SEP, the Summary of Economic Projections. What are we expecting there?
Yes, anything with the U.S. with a lookout on what could happen with the Fed is an exciting thing here. As we know, economists are only expecting a Fed cut in the autumn. As we know, Trump has repeatedly said he wants the Fed to cut right now. So given that also Jerome Powell's term is going to be is ending. All those things just play together and make watching anything regarding the Fed very exciting.
It's so true. We're going to get the dots for 2026. How much of that is going to change when Powell is no longer at the helm? Zoe, thank you so much for that excellent coverage. That is Zoe Schneeweiss. Coming up, oil erases its gains this morning as the conflict between Israel and Iran intensify. Rapid In's Bob McNally will join us next on your Bloomberg Brief.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
But what about the diagnosis? If the diagnosis at the end is worries about growth rates,
yeah.
How do you get from point A to point B? Why do you worry so much about that end goal of better growth?
Because if we can't grow, you're going to have a much more inflated debt to GDP and federal deficit, and that's not good for the economy. growth is really critical. And I think what's underappreciated is what the inputs are to get to the growth number. And so we talked a little bit about productivity. I hope that we can continue to produce at 2% indefinitely on productivity. I think that would be great. But you got to make sure you have the other levers in place, I think, to buoy that. So if you look back over the last several years, we've had 8 million immigrants come into this country in the last 4 years. And that's helped growth. And by the way, that's deflationary.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
If you're talking about really extreme scenarios, we've considered a case where even if only very temporarily oil prices could get, for example, above $200 a barrel, if you're just looking at historic relationships of the sensitivity in changing price versus the amount of supply that could be disrupted in that scenario. But I would stress that neither is that, as I say, a base case, nor is that something that inherently would be very sustainable if it were to occur.
Plenty of people out there gaming out the worst case scenario for oil disruption, but that we have not yet seen. Indeed, we saw some of the geopolitical tension priced into the oil market on Friday, gaining some 7%. But that only put prices to the highest since around March, and oil falling again this morning. Joining us now is Bob McNally, founder and president of Rapid Energy Group. Bob, so wonderful to see you this morning. Let's just start with the price of oil. What is and isn't priced into it right now?
Good morning, Danny. You know, the oil market has gotten pretty inured to the risk of a major oil market disruption. If you go back to September of 2019, when Iran hit the Abqaiq stabilization plant, 7 million barrel a day facility, hit the largest open on that Sunday afterwards in the crude oil markets in Asia. And after a while, it reversed because the damage was light and reversible. And you had the Russian invasion, Israeli-Iranian blows last year. So oil markets have learned scary things happen, but we don't see a oil market disruption develop. And so we're off a little bit today because while the conflict is expanding beyond military targets to economic targets on both sides, and that's concerning, the market is saying, you know what, I'm still seeing Hormuz flow. I don't see disruption to any of those stabilization plants or gas oil separation plants or terminals. So maybe this is just more of the same. I think we're getting a little bit of more of the same complacency here this morning.
Bob, is that complacency misplaced? Should this be a market and others, and indeed your clients, that should be prepared for more disruption, be it the Strait of Hormuz or other energy facilities?
I think we should be building more risk premium into the market, and we will. Why? Because while sprawling and extensive and audacious, the Israeli attacks and now the Iranian responses are spreading beyond military facilities. We're up to well over now a dozen, I believe, Israelis killed, hundreds of Iranians. We're hitting energy facilities in both countries, albeit not ones connected to the global oil and gas markets, domestic ones. But this is a sign that this conflict, and it's likely to go on. Israel has a long list of targets it needs to hit on the nuclear side now that it's established air superiority. So it's going to go on for a while. It's expanding, and when it expands, it's getting closer to becoming a regional conflict with all that entails. So yeah, I think a little more risk certainly is deserved.
Just out of curiosity, Bill, what is that little bit more of risk? Brent crude trading around $73 right now.
Yeah, I think we easily could put in another $3 to $5 of risk. I think if we're Iran to threaten Hormuz flows of oil or LNG, or threaten attacks on Gulf infrastructure, again, as it attacked at Abqaiq in 2019, just the threat of that, I think, would put another $3 to $5 a barrel. And here's the deal. Iran, of course, needs to export, and Iran can't win in a conventional battle with the United States. However, risking an oil price spike is really the only leverage Iran ultimately has over Israel. President Trump is deathly afraid of $120 oil. And so in some ways, Iran's only card is to threaten that spike to try to generate U.S. and international pressure on Israel to desist. And there's a real risk Iran, if it's pushed into a corner, if the attacks don't stop, may feel compelled to play that card.
Bob, what should be the U.S. administration's role in this then? As you say, this is a president who came in as he was campaigning in day one with his objective of bringing energy prices down, of seeking to ease inflation. If that is the risk, what should this administration be trying to do in order to alleviate it?
Well, and again, I worked on a Gulf War, working for President George W. Bush in the White House some 20 years ago. So I think, number one, you have to be deterring Iran against even thinking of attacking Gulf energy production and flows. Even though we're a net exporter of oil, that would translate immediately into a devastating price spike here for consumers and the world. You don't want that. You got to warn Iran. If you do that, it'll be the last thing you do. You have to make sure, of course, you're working with Saudi Arabia, UAE, to ensure that they're adequately and safely flowing as much oil as they can, or they're willing to. And finally, you have to protect those Gulf facilities. Abqaiq stabilization plan, I'll mention it again, probably the most valuable piece of real estate on planet Earth, literally. Were you to subtract the Abqaiq stabilization plant from the world, you'd lose more GDP than just about any other few square miles I'm aware of. You've got to protect those facilities if Iran decides to play that card. And then finally, working with our IEA partners, International Energy Agency partners who hold strategic stocks, Japan, Germany, other countries, to make sure we're ready, willing, and able to use those. It's really unfortunate, Danny, that we've sold down about half the SPR for no good reason. But that being what it is, we got to be ready to use what stocks we have left if there is a disruption.
Bob, is there a real concern that perhaps some of the sway that the U.S. has in this conflict has ebbed? You've seen it with Israel, with the fact that the U.S. tried to discourage Israel from attacking before the negotiations with Iran. Is this a U.S. that's coming from a weakened position in its ability to influence the region?
You know, I don't think so in this case. I think President Trump, unlike his predecessors, really doesn't want to see Iran develop a nuclear weapon. And I think Iran is very close to developing a nuclear weapon. So the only difference between, I think, President Trump here and Israel is that President Trump would truly want, and maybe he believes there is a diplomatic option, that Libya model, dismantle the centrifuges, and then go to Tehran, establish an embassy, sell them Boeings, but end that nuclear program in a way Muammar Gaddafi did. I don't think the Israelis are expecting Iran to do that. But I think President Trump, if that diplomatic option were to fail, I think he's willing to accept a military option to prevent Iran from crossing over. I do think that makes him very different than his predecessors' willingness to use force, not to acquiesce to an Iranian nuclear capability.
Bob, if it is more of a military solution, and if we do see a prolonged conflict that targets not just nuclear facilities from Iran, but something that tries to engineer a regime shift, you mentioned Libya, we've seen Syria, Yemen, all have this type of environment where what you get afterwards is fragmentation. If that's something what the long term of Iran looks like, and I know it is very soon to be calling for something like that, how do you understand how energy and that sort of thing develops in the region?
You know, if we imagine a regime change in Iran, considering that Iran has the second most pro-American population in the region after Israel, and that Iran historically has been a great friend of the United States and Israel, and there's millions of Iranians in the United States and so forth. I mean, we're talking about the world's, second largest gas reserves, third largest oil reserves. I mean, if Iran were to become a normal country where its government was like its people, Danny, I can think of few things that would be more positive for global growth and peace than that, including energy stability. You would reduce terrorist risk and violence risk to oil production and flows across the region. You would be able to take gas and oil out of the stands, out of the former Russian republics, and get them out of Russia and send that out to global oil markets. So, I mean, it may be a very tumultuous and difficult and painful conflict if it comes to that. But in a normal Iran with a normal government is one of the few most positive things I could think about.
Hey, Bob, we're going to have to end it there. Please come and join us again soon. It has been far too long. Your insights are incredibly valuable. Bob McNally of Rapid Energy Group, thank you so much for your time this morning. Now, coming up, we're going to get you set up for your week ahead with a marathon of central bank decisions and a G7 meeting. This coming from Handelsblatt ahead of that G7 meeting in Canada, that the EU is ready to accept a flat 10% U.S. tariff if it is under consideration. Again, a 10% flat tariff from U.S. to the EU. That coming from Handelsblatt. There's going to be discussions likely just about that in Canada throughout the week. We'll bring you what's coming up next on your Bloomberg Brief.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
Bringing you up-to-the-minute tech news whenever and wherever it happens. I'm Ed Ludlow in Las Vegas, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Up-to-the-minute geopolitical news wherever and whenever it happens. I'm Anne-Marie Hordern in Buenos Aires, Argentina, and this is Bloomberg.
It's your Bloomberg Brief. I'm Danny Berger in New York. Let's get you set up for your trading week this week. A busy one. We're going to start off with the Bank of Japan rate decision on Tuesday. That same day, we'll also get U.S. retail sales. The Fed will announce its rate decision on Wednesday, and then it's the Bank of England's turn on Thursday, with U.S. markets closed for the Juneteenth holiday. Because of that, again, a very compressed week to the start of it. Tuesday, Wednesday, a lot of central bank rate decisions. When it comes to your individual movers, we are seeing U.S. steel moving higher, as Nippon Steel has indeed secured approval from the President Trump to buy the steelmaker. Those shares up 5% in the pre-market trade. Victoria's Secret Barrington Capital has built a stake in the lingerie retailer, and it plans to urge changes to its board and strategy. We had seen Victoria's Secret try to adopt a poison pill strategy to avoid a takeover of 2.5%. Sarepta Therapeutics, that one down this morning, 35%, reporting a second patient death from acute liver failure after being treated with the firm's gene therapy. Let's get you a check on oil as we head to the end of the hour, because it continues to fall this morning, down 7% for WTI crude. It did rise as much as 5% at the open. That quickly unwinding. Bob McNally from Rapid saying, we're not pricing in the risk that there could be some serious disruption. He thinks oil prices should be somewhere between 5 to 6% higher should we see any disruption in the Strait of Hormuz or other energy facilities. That Iran backed into a corner, that this is their card that they can play to try to get the U.S. involved for brokering a truce. All right, that's it for your Bloomberg Brief. Surveillance. We'll take things from here. This is Bloomberg.
How much does the geopolitical volatility emanating from the United States perhaps undermine the bull case for Mexico? Is that a scenario you've plotted out?
Structurally speaking, we do still have a very positive view in Mexico. On the macro side, it is a very attractive investment geography for the U.S. Mexico is hugely competitive in terms of costs. The wages in Mexico are much more competitive than the wages in China. So why would the U.S. companies not take advantage of that?
And this structural cost advantage is going to lead Mexico to continue to contribute to the growth of U.S. as well. The value chains, the supply chains are so integrated that Mexico has to play a continuing role in the further development of the U.S. And U.S. is growing very healthily, very nicely. It will benefit Mexico this way or that way. It will benefit Mexico.
Mexico for BBVA is, a source of resiliency of earnings, and it generates and complements the diversification that we have from the footprint. But there's another topic that is very important, which sometimes we don't focus a lot about, and why we're so convinced that Mexico is going to continue to do well, which is the leverage in the country. Because the leverage in the country is only 33%. And when you've seen Mexico grow and BBVA grow in Mexico, structurally speaking, the leverage is so low that just a little bit of growth in the leverage is going to be able to support that bull case in Mexico. So that's why we're structurally positive in Mexico.
What is going to be the consequence for U.S. markets? We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
It's very hard to see the U.S. walking away from Israel if the Iranians are mounting a massive counterattack.
This White House has been consistent. They do want to see a diplomatic approach.
A tremendous amount of damage has been done to Iran's ability to respond.
We'll have to kind of wait and see what that situation in the Middle East plays out.
You're more likely going to see people fade those geopolitical risk events rather than double down on them.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome back to Bloomberg Surveillance and another week of risk roulette. Markets uncomfortably numb as fighting escalates between Israel and Iran, a potential oil shock making the Fed's job that much more difficult when it meets on Wednesday. And U.S. President Donald Trump heading to the G7 meetings at a time when trade tensions and geopolitical risks are high. Right now, markets are on edge, but waiting to make more big moves after a more than 7% surge on Friday. Oil futures now down just slightly this morning. Stocks trying to look through the noise to find a reason to rally. S&P futures down from some of the earlier highs, but still up 0.4%. 10-year yields, bonds, arguably the most interesting space as yields continue to climb for a second straight session, even in the face of geopolitics. Coming up, someone with a lot to say about that, Kelsey Barrow of JP Morgan Asset Management, as stocks try to rebound. And bonds, what are they doing? Terry Haynes of Pangea Policy as Israel and Iran enter a fourth day of conflict, and Steve Rasciuto of Masuho counting down to a Fed rate decision. We begin this hour with our top story, the conflict between Israel and Iran extending into its fourth day, stoking fears of a wider conflict. Joining us now is Anne-Marie Hordern from the G7 in Canada and Jumana Bersachi in Dubai. Jumana, I want to start with you. What's the latest overnight in this conflict that has been going on for now 4 days?
That's right, Lisa. So the conflict has been going on for 4 days. No signs really of things letting up. We have seen an intensification of strikes on both sides over the course of the weekend, with Israel over the last couple of days targeting key sites dotted around Iran, be they nuclear sites. One of the main uranium facilities, Isfahan, has been severely damaged per the latest assessment by the IAEA, a crucial part of the uranium enrichment process. But not just there, they've also been targeting key military sites. The Israeli army this morning saying that they've managed to take out about 1/3 of Iran's missile launchers. Those are surface-to-surface missile launchers, in addition to the number of casualties as well. On Friday, we spoke about the number of senior commanders that were taken out by the IRGC. That number has now extended to 6. In addition to those nuclear scientists, the total death toll, though, in Iran is now 224. As for on the Israel side, they have said that over the last couple of days, they have received almost 400 ballistic missiles targeted both at central and northern parts of Israel, alongside 100 drones. Most of those have been intercepted by Israel's air defense system, but some of the missiles did actually manage to penetrate through the system, causing significant damage, as you can see on those images there. And the death toll in Israel, per the latest figures, now sits at around 24. In terms of whether the off-ramp is coming, at this point, the rhetoric from both sides is still extremely hawkish. The Israeli Prime Minister, over the course of the weekend, reiterating that this is an existential crisis for Israel. They're going to keep going, keep striking at various sites around Iran. And from the Iranian perspective, the only potential avenue for de-escalation came from the foreign minister this morning, and he said that Iran would only stop their attacks on Israel should Israel cede their attacks on Iran. So no real signs of things thawing. And of course, one major other development over the weekend is that sixth round of talks between U.S. and Iran that were scheduled to take place in Oman were canceled. And the latest being some reporting suggesting, and this hasn't been confirmed yet, that Iran is seriously considering pulling out of the non-proliferation treaty, which would be one step further and would indicate that they have pretty much given up on the diplomatic angle to contain their nuclear enrichment program.
Yeah, and that's the backdrop right now for President Donald Trump. And Anne-Marie, he is heading over to Alberta in Canada for that G7 meeting. I believe he already got there after leaving last night. You are there on the ground. And the question now isn't so much how awkward is this family photo going to be that they're going to take, but even, is this a family anymore, Anne-Marie?
Well, when it comes to the G7, they are, and sometimes you have to have the toughest conversations with your friends and family. But to the point you're making, Lisa, is it's going to be very difficult for this group to find common purpose on a number of issues when it comes to potentially Ukraine. President Zelensky will be here, things like climate. But then, of course, this meeting will now be overshadowed by the conflict in the region. What is going on between Iran and Israel? Could we see a statement of unity from the G7? You have individuals like President Emmanuel Macron speaking yesterday, talking about the fact that he wants to see de-escalation, saying the United States could be the partner that brings everyone to the table. But Trump has kept his options open, really, if you read between the lines on some of his statements before departing the White House and heading here to Canada. He talked about how basically both parties need to fight it out, but he thinks there'll be a deal in the end, maybe giving Israel some time to continue going after those nuclear facilities. And then he told ABC News, we're not involved in it. It's possible we could get involved, but we are not at this moment involved. He left the path open for U.S. involvement. The U.S. would get involved potentially in Iran. There's a growing question if they were trying to strike the Israelis, one particular nuclear facility, Fordo, which is buried deep into a mountain. At the moment, the United States has not been involved except for the defense of Israel. This is going to be the topic that overshadows this G7 meeting, even, Lisa, when you have the likes of South Korea here, Mexico here, and other countries that came to hopefully also strike trade deals on the sidelines. Anne-Marie Hordern, Jumana Borsechi, to both of you, thank you so much for that reporting. Right now, let's get the view from Wall Street this morning. Joining us now for the hour is Kelsey Barrow of JP Morgan Asset Management. Kelsey, good morning. How much do you look at everything that's going on and say that markets should be responding more than they currently are? Because what we see right now is a level of, let's take this in stride, let's not overreact. We haven't seen the disruption to oil supplies in a massive way just yet.
Yeah, I think you hit the nail on the head in terms of the reaction has been rational. It's been muted, particularly in emerging markets. We've seen the price action is very contained to the areas of interest. You know, when I think about the implications of the tensions in the Middle East, I think of two very important parts of the macro landscape. One is oil, and two is the dollar. And the themes for this year have been stable to lower oil because supply is plentiful, and it's been a weaker dollar. And the question was, as the headlines emerged around the Middle East and the conflict between Israel and Iran was, are those trades going to be disrupted in any way? Oil because of a risk of supply, the dollar because of that safe haven, does that start to reverse? And I think what we've seen is there was maybe a temporary concern around those. We've seen a repricing in oil higher somewhat. We saw some temporary strength in the dollar, but both of those seem to have stabilized here. And you know, our view generally has been that we are going to expect a weaker dollar this year, and that the oil market is well supplied.
Hold on a second. Let's unpack some of this, because there are a lot of aspects to what you just talked about. Putting oil aside, this idea of the disinflationary shock, which we'll get to in just a second, and whether that's durable in the face of some conflict that we've been seeing in the Middle East, the dollar is weakening again today. We are seeing that versus the euro. We are seeing that across G10. There is a question about whether the lack of the dollar's ability to rally is a real question about the haven status of the United States, especially when paired with the sell-off that we've seen in treasuries for 2 straight sessions, including on Friday. Why do you not say this signals that there is a very different mechanism right now in U.S. markets where classic havens no longer act as such?
Yeah, so I think we are at risk of maybe reading into the price action of the last 2 days, maybe a little bit too literally. So, you know, when I looked at the move higher in yields on Friday, to me, what stood out to me was not the fact that, you know, U.S. Treasury yields were moving higher, but the fact that it was a global move. So boons were moving higher, gilts were moving higher, oats were moving higher in yields. Now, if you were to tell me that there was a safe haven demand on Friday that wasn't being met by Treasuries and people were piling into something else, well, I'm not sure what that something else was, because the U.S. was actually outperforming on a relative basis, meaning Treasury yields were rising less than they were throughout the rest of the world. Now, I also do think that you need to differentiate, though, between the de-dollarization trend as it relates to asset allocation and also hedging strategies. So what we've seen is that foreign investors are holding on to their dollar assets. They see value in those dollar assets, but what they're doing is they're reevaluating their hedging strategy. So they're taking a portfolio that may have been 20 or 30% hedged back to their home currency, and they're hedging back a larger percentage of that portfolio.
Okay, that said, there still is this remarkable incidence that we're seeing right now in bond markets. The fact that on Friday, which was a massively risk-off day, the fact that we saw oil prices surging and we saw stock prices falling, the fact that people were talking about how this was going to potentially, you saw RBC this morning, cause a 20% decline in equities should it prolong and should it end up escalating in any kind of way. To not see long-duration bonds in the United States rally, maybe it's a global trend, but doesn't that change the equation if developed market bonds no longer provide that counter-cyclical hedge against some sort of risk-off event?
Yeah, so I think what we need to differentiate is the type of shock that treasuries are hedging and where on the curve is best to position yourself for that shock. So the shock that treasuries and high-quality fixed income best hedge for is a negative growth shock. Now, I don't necessarily think that you can translate the tensions in the Middle East to a negative growth shock. If anything, the biggest direct first-order impact is inflation, which is the #1 enemy of fixed income. Inflation is the type of shock that bonds can't hedge against. But the things that I learned over the last week in terms of economic data, to take it back to the inflation report and the CPI report we got last week, is actually that we're seeing disinflation among a number of different categories. And that when we did see that, we did see bonds rally.
Okay, in fairness, though, for Wednesday, when the Fed meets in Washington, D.C., how much does this push off the potential for any sort of rate cut, given the fact that not only do you have the potential ramifications from tariffs, but you now have the potential for an oil shock that, yes, long-term could be deflationary or disinflationary, but short-term, very direct hit to some of the progress that we've been making in CPI?
So I don't think that you can expect much from the Fed this week. I think there is an argument to expect the dot plot to perhaps show one less rate cut in 2025 and move that into 2026. That's just a function of what I'll call time decay. Yeah, there's only 6 months left in the year. But what I actually think that they're going to do, and this is a close call, is they're going to keep everything the same. They're going to upgrade inflation. They're going to downgrade growth. They're going to say these things are all still offsetting. We can't make a judgment yet about what's going to happen yet next. And so let's just keep it all the same. That is the path of least resistance. But if you're in a world where the Fed is on hold, but the bias is to cut, you know, I see yields as range bound around here. And that's basically the price action we've been seeing. There's been volatility day to day. If I look over the last week, 10-year yields maybe a couple basis points lower than they were, but essentially unchanged.
Kelsey Barrow of JP Morgan Asset Management will be sticking with us for the hour, which is a good and beautiful thing right now. Let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Yahaira Anand. Yahaira.
Good morning, Lisa. Fighting between Israel and Iran is now in its 4th day. Iran fired several waves of drones and missiles over the last 24 hours, while Israel continued hitting the Islamic Republic's capital, Tehran, killing another senior military official. The Iranian government says 224 people have been killed, while Israel says Iranian attacks killed 23 people and injured more than 400. Meanwhile, China's retail sales beat estimates, rising 6.4% in May. That's the fastest pace since December 2023. The strong consumption may have been boosted by an annual shopping festival and government subsidies for home appliances, though economists warn it may not represent a turnaround in sentiment. And Nippon Steel shares rose in Japanese trading after President Donald Trump approved its $14.1 billion purchase of U.S. steel. Nippon has been keen to add the U.S. business to help offset its declining sales in Japan. That's your Bloomberg Brief. Lisa?
Thank you so much, Yahaira. Up next, hoping for a deal.
Well, I hope there's going to be a deal. I think it's time for a deal, and we'll see what happens. But sometimes they have to fight it out, but we're going to see what happens. I think there's a good chance there'll be a deal.
Coming up next, we're going to be speaking with Terry Haynes of Pangea Policy to understand the likelihoods and the contours of what that deal could look like. This is Bloomberg. Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning.
This is Bloomberg Surveillance.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Starting the week trying to move on from the geopolitical risk over the weekend that really is causing concern among some pockets. Right now, markets not showing it too much. You're seeing S&P futures claw just a little bit higher off some of the earlier highs, but up about 0.5% on the S&P and the NASDAQ. What you see in bonds is actually interesting because it is the second straight day of yields rising, bond price down in the long space in particular ahead of that 20-year auction later today. 30-year bonds up almost 3 basis points, same as 10-year yields, after also rising on Friday, 443 for the 10-year. Meanwhile, in the oil space, trying to get some sort of rally, some sort of sense of a bid into oil. On Friday, we saw a 7% rally. Today, we're taking off some of that risk, but just still up about 6% overall from when this conflict first ignited. Under surveillance this morning, hoping for a deal.
Well, I hope there's going to
Here's the latest. Well, if we can get you that sound in just a bit. A fourth straight day of attacks between Israel and Iran, stoking fears of a wider war. At least 23 people have been killed in Israel and over 220 in Iran. This as world leaders, including President Trump, gather at the G7 summit as the conflict shows no signs of easing. Bloomberg's Tyler Kendall joins us now. And Tyler, let's just start with what the U.S. response has been. President Trump has talked about looking for a deal, but also has raised the prospect of the U.S. possibly entering the conflict against Iran, especially should any U.S. troops get attacked. What's the latest in terms of the D.C. response?
Yeah, hey, Lisa, good morning. Well, we know U.S. officials in Washington have been in close touch with their Israeli counterparts as this moves forward. And even as you've been discussing, though, there's been very little indication that either side, Israel or Iran at this moment, is looking to de-escalate the conflict, even as President Trump has said that they should and ultimately they will. Now, as you mentioned, the U.S. has helped Israel defend itself, but at the moment has yet to move to that point of going on the offense when it comes to these ongoing strikes. But we have seen sort of a renewed public pressure from Israeli officials, including Israel's science minister over the weekend, calling on both the U.S. but also European allies to help them when it comes to the offense. Of course, this is going to take center stage during the G7 summit this week in Canada. But we should note that President Trump had a phone call over the weekend, not with a G7 ally, but instead with Russian President Vladimir Putin. And President Trump said that he would be open to the Kremlin potentially mediating talks between Israel and Iran. And we should, of course, note the context that Russia is a strategic ally of Iran, but it all comes amid the broader geopolitical backdrop that the White House is contending with here, including the ongoing war in Ukraine. Now, no matter how the U.S. gets involved, President Trump has made it clear that their message to Iran is not to retaliate against any U.S. personnel or interests in the region. Of course, this is going to be very important moving forward, and it's something that congressional leaders have highlighted as well, Lisa, including Senate Majority Leader John Thune, who also in an interview over the weekend suggested that Iran had become, quote, defiant when it comes to the nuclear talks. Of course, this would be the diplomatic off-ramp here if that is still on the table. Our analysts at Bloomberg Economics say for now it doesn't look like that's going to resume anytime soon.
Tyler Kendall of Bloomberg, thank you so much for the reporting. Joining us now, Terry Haynes of Pangea Policy. And Terry, I just want to start there. How likely is it that the U.S. gets involved in a more material way in a conflict that a lot of people are waiting and watching with bated breath to see whether or not it escalates?
Well, good morning, Lisa. And it is, I think the
the likelihood is low. I don't think it's vanishingly low, though. And the question basically involves what kind of assistance we would provide under what sort of circumstances. That seems obvious, but I just want to say that to make clear that we're not talking about troops on the ground here. I think what we're talking about is whether or not there might be air or sea support in any sort of operation. But we are, to emphasize your theme this morning, we're in the very early stages of this, and both sides are very much in a I win, you lose sort of posture. And as long as that's the case, this is a particularly difficult situation, and not like the other ones where risk was easily figured out by markets pretty quickly.
Well,
not like those things at all.
Especially, Terry, because there's sort of this lack of clarity around what President Trump wants to do. He's been saying that he doesn't want a new war, he doesn't want to start one, he doesn't want to be involved with one. How much is sort of the split opinion within the MAGA base, within a lot of the Republicans and, frankly, the Democrats, the reluctance to get involved, complicating a lot of this calculus?
I think the domestic politics are overemphasized here. What's gone on here mostly is a situation where I think Trump's hesitancy, rhetorical hesitancy, gets overemphasized. We are still providing a lot of support in Ukraine, for example, more than we had before. We're providing a lot of support for Israel. We're trying to ring fence in Taiwan to make sure that they're supported. Trump certainly doesn't want to be in a war, go to war, but at the same time, we are still pretty interventionist across the board here. So I don't think there's going to be any hesitancy on Trump's part in providing assistance to Israel should she need it.
Terry, if I could take a step back here, it feels to me like the administration's focus is very stretched right now in a number of different directions, both domestic agenda, international agenda. Where do they focus their attention this week? And do we risk taking a step back in terms of progress on trade or on the economic objectives because of all of this noise?
Good morning, Kelsey. And I think the answer is yes to all of those things, frankly. This is an administration that is stretched, but it's stretched in part by design as opposed to events. And what they see is a situation where the economic policy of the United States is essentially being in service to geopolitics very explicitly. And what they see is a situation where over the next few weeks, what they want to do is they want to wrap up the tax bill, which provides a growth boost, puts the United States in a better position. Their view of this. At the same time, they continue to want to conclude trade deals and continue to negotiate on those fronts. And finally, they're supplying aid and comfort to allies, and trying to negotiate a couple of conflicts. So this is a situation where the geopolitics, of course, is pressing on the Trump administration, but at the same time, what they've been trying to do is address that geopolitical situation, both in the traditional sense and by using economic policy to bolster the United States position.
Terry Haynes of Pangea Policy, thank you so much for that insight. I'm sure we'll catch up with you soon. I am wondering, Kelsey, I'll turn that back on you in terms of where the focus is for markets and how this affects the market's view of any progress or not on both the tax bill as well as what we're seeing with respect to trade negotiations.
Yeah, so, I mean, we have the G7 happening at the same time, and obviously the deadline of July 9th for the trade negotiations is looming large. Also, the deadline of July 4th, which is the self-imposed deadline by the Congress to try to get this one big, beautiful bill to the Trump administration, to Trump's desk, so they can get it ahead of the August potential X date for the debt ceiling. So there really is quite a lot that the market needs to be focused on. I'd probably say the one that is potentially to provide bigger surprises this week is maybe on the tariff side rather than the one big beautiful bill. I don't know if we're going to hear a ton on that. We kind of at least at this point have a sense of the big picture. The CBO has given us the scoring. We can now look at it. We can compare it to the amount of tariff revenue. We can estimate the growth impulse. I think on the tariff side, there's still a lot of kind of uncertainty about, we have an effective tariff right now of 14 to 15%. Is the risk that it's going lower, or is there a risk that it actually could still go higher from here?
That's the reason why we're playing Risk Roulette, and we'll continue playing Risk Roulette throughout the week. Coming up next, we're going to be speaking with Aaron David Miller of the Carnegie Endowment for International Peace to understand the contours of the conflict between Iran and Israel and what the off-ramps could potentially be. Interesting right now, markets trying to shrug it off with equity futures rallying just a touch into the open. This is Bloomberg Surveillance.
Bloomberg launches our inaugural 25 African startups to watch list.
About 2.5 years ago, we created a solution. We are able to generate refrigeration using the sun and water. We're able to store energy in the form of ice, as opposed to storing energy in the form of lithium batteries. We integrated in every refrigerator a pay-as-you-go technology, allowing individuals and small businesses to be able to pay as low as $10 to own a refrigerator.
Uncover is a women's wellness brand that is specifically made for women of color. It's based in Africa, which is the most underserved beauty market in the world. We are making Africa a priority and not an afterthought. We believe that the population on this continent deserves to be formulated for, heard, and we are giving this consumer a voice.
Of investment agreements.
Deals were once again on display.
The Saudis are open for business.
The cessation of sanctions against Syria.
Another big victory for the Crown Prince. Concerned that none of the guardrails may be set up just yet.
Headline after headline.
Trust Bloomberg for on-the-ground coverage.
The numbers will be quite substantial.
Up-to-the-minute reporting.
Driven the price of oil down.
And the analysis you need.
He's basically going to vault this region into the same sort of sphere as the US and China.
No one covers geopolitics like Bloomberg.
Coming into a new week with the eyes squarely focused on the Middle East, the rising conflict between Iran and Israel, with a question of what is the off-ramp. Right now, equities are trying to stage some sort of rally after selling off on Friday in response to this geopolitical issue. You're seeing NASDAQ futures and S&P futures both up about 0.5%. You're seeing bonds selling off for the second straight session, and you're seeing the dollar weakening versus the euro as maybe there's just a tinge of a risk on feel. 3 hours away from the cash open. Here are your morning movers with Yaira Anand. Yaira.
Hi, Lisa. We start with U.S. Steel. Those shares are rising 5% after President Trump greenlit Nippon Steel $14.1 billion takeover of the U.S. company, a deal he once opposed, but with major concessions, including a golden share and $14 billion promised in U.S. investments, Trump got on board. As a result, this will create the world's second largest steelmaker. Next up, we have shares of Sarepta. Those are moving in the opposite direction, down more than 42% now in the pre-market on some tragic news that a second patient has died after taking its gene therapy for a rare muscle disorder. As a result, the company halted trials and paused shipments of the treatment called Elevities. The news has spurred a number of downgrades by Wall Street analysts. And ending on a more positive note, we have Cisco. Those shares are rising 1.8% after getting a boost over at Deutsche Bank, which upgraded the stock to a buy. The analyst saying that he sees steady growth ahead for years thanks to AI, and he also says that its expansive supply chain will help shield it against tariffs. Deutsche Bank now has a $73 price target on this stock, which is about 12% higher from here. Lisa?
Thank you so much, Yahaira. On our radar this morning, the conflict between Israel and Iran entering a fourth day with no sign of easing. Tensions erupting into full-blown conflict on Friday. Israel continuing to attack Tehran while Iran fires drones and missiles, some of which have gotten through. Kelsey, what has struck me, and we're going to put aside the geopolitics, we're going to get into just the strategy and what's going to happen and what the potential off-ramp could be. I am curious about the ramifications for oil and how you view that as a market risk at a time when potentially this was one of the tailwinds for disinflation that we've seen so far this year.
Indeed, it has been a tailwind for disinflation. It's been a mixed bag as it relates to, for instance, emerging markets, where you have about 50% of the market being oil importers and 50% being oil exporters. But it's undoubtedly been a nice tailwind for the U.S. consumer and something that the Trump administration can hang their hat on. I think more broadly, when our analysts look at the demand-supply picture within the oil markets, we generally feel that the market is fairly well supplied. And, unless we're seeing a real concern in terms of supply disruptions to the major oil producers, so, we're thinking about Saudi Arabia, Russia, there's generally, a fairly good balance there where OPEC can step up and has been stepping up to improve the supply-demand picture and keep the oil price on balance.
Which is part of the reason why maybe you're getting a little bit of a dip right now in oil prices as people take a look and say, it doesn't look like the Strait of Hormuz is going to get blocked off, so it seems like maybe this isn't exactly the state of permanent affairs. Meanwhile, President Trump looking for some sort of response as he arrives at the G7 meeting in Canada amid two global hot wars, as we were just talking about, and trade negotiations hanging in the balance. Trump saying Israel and Iran may need to fight it out, while other world leaders call for both sides to avoid escalation. And Kelsey, you asked a great question earlier. This idea of how much what's going on with Israel and Iran takes away some of the attention for some of the other issues that we've been focusing on. And you pointed to trade in particular and how that's really become something of an increasing risk for markets.
Right. So, we're sitting here with an effective tariff rate around 14 to 15%, and there's still a lot of uncertainty about the direction from here. So on one side, we're heading into the G7. There's a number of countries that maybe can negotiate lower tariff rates or prevent the tariff rate from going up on July 9th. On the other hand, we've been watching in the background, they've been setting up to do many more sectoral tariffs. And those could actually bring the tariff rate in the other direction. So, I would say in general, that's an area where there's a fair bit of still two-sided risk. And when I think about the inflation report last week, and I see the disinflation in services, that's something I expect to stay. I think that's an indication of the weakening growth prospects underneath the surface in the U.S. economy. Where I do expect we're still eventually going to see that inflation is on the good side. The tariff impact is showing up. It will show up in inflation in specific categories within goods.
So this is really going to be what a lot of people are watching and parsing through as we get additional inflation reads. Meanwhile, of course, there's also the bill negotiations. This question of whether the tax bill will pass and how much it will increase the deficit. Senator Rand Paul signaling he's willing to negotiate on Trump's big, beautiful tax bill, as other GOP hardliners also appear to soften their stance, with few willing to go against the president on one of his biggest priorities. We'll get into that later in the show. We do want to turn back to the conflict in Israel and Iran. Attacks continuing on both sides. Bloomberg's Ethan Bronner joins us now from Tel Aviv. Ethan, can you just paint a scene in terms of the damage that's been done and what the public sentiment is about continuing this war?
Sure, Lisa. There have been several hundred missiles that have come here and a whole bunch of forays since Friday late evening. The most recent was this morning here, Monday morning. And they do enormous damage. They weigh 1,000 kilograms. It's like a school bus filled with explosives falling on a building. There have been in Israel 24 people killed, about 500, 400 wounded. And of course, there's also huge damage and killing on the other side in Iran.
That's the reason why I think a lot of people are looking to see how really this conflict can end, or what kind of off-ramp to de-escalate there is. Bloomberg's Ethan Bronner, stay close. We're going to be catching up with you later on. Right now, Aaron David Miller of the Carnegie Endowment for International Peace joins us. Aaron, I just want to get your sense of how realistic it is for the calls for de-escalation to actually resonate with either Netanyahu or with Iran at a time where both of them seem to be really digging in.
Great question, Lisa. Thanks for having me. I think it's completely unrealistic and detached from the current reality for three reasons. The Israelis want to destroy as much of Iran's nuclear program as possible, but they're going to have a very difficult time doing it. And they have escalation dominance and air superiority and political superiority. There's absolutely no pushback from anyone in the region, in Europe, from the United States, from the Trump administration, for the Israelis to stop. As one Israeli general put it, retired, we're playing soccer with the Iranians, but they have no goalie. The Iranians have invested $5 trillion in this nuclear program, and having been embarrassed and humiliated to a degree that is unprecedented probably in the history of the Islamic Republic, are not going to yield on this. How deep their ballistic missile inventory is, what, 2,000, 2,500 ballistic missiles? They can keep this up for some time. And the Americans, I think, Trump administration is faced with a dilemma. He does not want to enter this war, but he cannot stop it. It reminds me of Lyndon Johnson's description in the Vietnam War of a hitchhiker in a Texas hailstorm. I can't run, I can't hide, and I can't make it stop. Question for Trump, for all of us, I'm not sure Trump wants to make it stop.
Well, that's actually something he's hinted at, this question of maybe they have to fight it out and just complete it from that perspective. What is the ultimate goal, though, Aaron? I mean, given the fact that you just said that, as one general told you, Israel is playing soccer and Iran has no goalie, what's the ultimate aim? Is it regime change? How do they achieve something that actually can be sustainable for the entire region?
I mean, critical question. Had you told me on October 8th that 18 months into the Israeli-Hamas war in Gaza, there would be absolutely no sign of this conflict abating, I would have said you're a bad analyst. The fact is, the prime minister in Gaza has identified total victory as a goal. I think what he would like to do, his aspirations, would be regime change on one hand, and number two, deploying the United States, if he can, to do what the Israelis cannot, which is to destroy Fordo and really make not a dent, but a major crippling of the Iranian nuclear program, which would set it back at least 2 years. So I think right now there's no reason for Netanyahu to stop. Ballistic missiles in Israel are very problematic. I mean, the Iranians are launching maybe 10 to 15% are actually getting through and striking, but Ethan reported, you've seen some of the damage, 24 Israelis killed. I think the public will endure this for quite some time. So right now, I see absolutely no way, no off-ramp, no possibility. And then you, of course, raise the question is what, in fact, would a negotiation other than cessation of hostilities, what would a negotiation between the United States and Iran produce? 2 months of negotiations produced an impasse. And I think the Iranians are in no mood, frankly, right now for compromise.
Aaron, I hear you saying that there is not a likely off-ramp in the near term, but for investors, what can we watch to look for any signs of de-escalation or escalation from here? You know, what are the key points that you are looking for?
Right. I mean, de-escalation, I think, right now is not in the cards. I think there's a really good chance that we'll be in for weeks of this. It's the escalatory possibilities that concern me, and this is your guys' business, not mine, would concern investors as well. And escalation, I think, could occur in one of two ways. Number one, Iranian ballistic missiles actually end up surging, and you end up with a mass casualty event in Israel. Hundreds of Israelis are killed or wounded. The Trump administration, under those circumstances, Congress, are going to be hard-pressed, I think, to enter the conflict. And the second path to escalation, or maybe there are three. Second path to escalation would be a bad decision on the part of the Islamic Republic to go after American assets, U.S. forces in Iraq, Syria, or obviously forces 30 to 35,000 Americans that are deployed in the Gulf. And they have many short-range ballistic missiles, thousands of them, that could produce that. The third possibility is that the Iranians try some sort of asymmetrical strategy in which they go after Israeli interests abroad, Jewish interests abroad in a terror attack. I think that's a back door that would also probably bring in the United States. But again, we've watched over the course of the last 18 months, we've steered clear of the one thing that investors worry about, the one thing I would worry about, the one thing the region worries about, and that would be a major regional war. We've avoided that. This is bringing us, or the longer this goes on, the greater the chances of an escalatory cycle, and an Iranian-Saudi conflict, and a U.S. conflict, which would essentially push oil prices probably well in excess of $100.
Aaron, just quickly here, one thing that the market keeps focusing on that could catalyze that kind of regional war would be shutting down the Straits of Hormuz. How realistic is that, given the fact that would anger everybody in the neighborhood?
I mean, the Iranians could probably close it, and the Americans would definitely open it. But again, we're talking about a prolonged delay filled with uncertainties, all sorts of exit ramps of an unpleasant nature that is going to make this extremely unpredictable.
Aaron David Miller of the Carnegie Endowment for International Peace, thank you so much for the insight. Right now, let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Yahira Anand. Yahira.
Hi, Lisa. The man suspected of killing Minnesota Democratic state lawmaker Melissa Hortman and her husband, Mark, is in custody. The FBI had offered a $50,000 reward for information leading to the arrest of 57-year-old Vance Fulcher. 2 other people, including a state senator, were also injured in Saturday's shooting. Meanwhile, shares of Kering are surging in European trading. The owner of the struggling Gucci fashion label is preparing to name the CEO of Renault as its next chief executive in a bid for a turnaround. Sources telling us here at Bloomberg, Luca de Maio will be appointed to the job in the coming days. Meanwhile, shares of Renault are trading lower in Paris. And another activist investor is seeking changes at Victoria's Secret. Sources telling us here at Bloomberg that Barrington Capital Group, which has built a stake in the lingerie retailer, plans to push for a board overhaul. Earlier this month, one of Victoria's Secret's largest investors, BBRC International, also called for major board changes. That's your Bloomberg Brief, Lisa.
Thank you so much, Yahira. Up next, the Fed's inflection point.
We're now at the inflection point. It's very difficult to gauge what the outlook is going to be under different circumstances, and as a result, what the Fed's reaction function is going to be.
Steve Rasciuto of Mizuho joins us next as we parse through some of the fundamentals of the U.S. economy, and frankly, that have been really interesting. This is Bloomberg Surveillance.
in case you missed it on Bloomberg Insight.
I just think there's a chance that you'll have stagflation. So I'm not saying it's going to happen. I don't want the reader to say he's predicting this. I'm not. But we have to be prepared for something like that. I think the global fiscal deficits are inflationary. I think the remilitarization of the world is inflationary. The restructuring of trade is inflationary. And this is not all an American thing. You know, with all those things taking place, yeah, you may be surprised.
I spoke to Jamie Dimon. He says that we should actually prepare for stagflation. How do you square that?
I think there's no question that the shock of tariffs are stagflationary. The question is going to be ultimately how high do they settle at? Right now they're at a very high level, highest in 100 years. And how long a period both is this uncertain environment and how long are the tariffs going to last? And the question now is the magnitude of the stagflationary impulse, and we just don't know yet.
Don't miss Bloomberg Insight live weekdays.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Bloomberg brings you breaking news 24 hours a day. Powered by more than 3,000 journalists and analysts in more than 100 bureaus across the globe. Bloomberg Television. Context changes everything. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
It is Fed Week. It doesn't feel like Fed Week because the focus seems to be squarely elsewhere as we play Risk Roulette. Right now we're looking at a bond market where yields are up for a second straight session, even in the face of a major conflict between Iran and Israel and a potential threat to the entire Middle East region. Right now you're seeing 10-year and 30-year yields up 3 basis points, 4.43%. Under surveillance this morning, the Fed's inflection point.
We're now at the inflection point. We're going to start to see stronger inflation as a result of the tariffs feeding through. In this environment that is highly volatile, where you have tariffs, where you now have the potential risk of higher oil prices, higher financial market volatility, tightening financial conditions, it's very difficult to gauge what the outlook is going to be under different circumstances, and as a result, what the Fed's reaction function is going to be.
Here's the latest. The Federal Reserve's two-day meeting kicking off tomorrow. The FOMC widely expected to hold rates steady, but updated its economic forecast, giving markets a clue about how officials will handle tariffs, inflation, and more. Joining us now for that potential scenario analysis is Steve Rasciuto of Mizuho. Steve, great to see you. Thank you so much for being here. Just before we get into what the Fed does, I want to bring you into the debate that Kelsey and I were having earlier. How important is it that in the face of risk on Friday and today, you are not seeing bonds, full faith and credit, rally?
I think there's a number of things. People have questioned the dollar's reserve currency status. People have questioned a lot of interesting information about where people are going from a global perspective in terms of investing in the United States. The reality is we haven't seen much, okay? So, yeah, the dollar is down a little bit, but on a DXY basis, it's still very, very healthy. Under Joe Biden, we were at 90 on a DXY basis, and we're talking about 97, 98 now. What's the big deal? The reality is when you look at most markets, there's very little impact of anything. And I think this goes to the fact that there is no systemic risk in the economy. There is no balance sheet related risk. There's excess liquidity. There's excess global savings. And there's a lot of oil floating around in the world. And I think when you put all of that together, you can easily see why markets are just sitting there saying, okay, we've tried to sell off several times. We've tried to rally several times. We've had 8 recession calls since 2022. None of them have worked. Let's just get on with life.
So you're essentially describing a bit of an equilibrium where everything is just kind of at this steady state. And so that gets me thinking about this concept of the neutral rate, which the Fed estimates in the dot plot, and they're going to do another crack at that. That neutral rate has been ticking higher. It's about 50 basis points higher over the last year, but the Fed still thinks that the current level of policy is restrictive. What do you think?
I don't think the current level of policy is restrictive, haven't for quite some time. I think the Fed rate cuts last year were a disaster. I think trying to repeat that again this year would be a bigger mistake. I think when you look at a 2% real rate of growth in the economy, an inflation rate that's running about 2.5%, you're looking at 4.5% neutral rate from a nominal Fed funds rate perspective. And to me, where are we right now? 4.5%. I think we should be ending the year closer to 5% because I think inflation will be 3%. And I think the only reason why you haven't seen inflation from tariffs coming through is because in this environment, while there's negotiations going on, a lot of CEOs are sitting there saying, I'm not going to be the first one to move to raise prices because I don't want to lose market share. I pre-inventoried a lot of stuff. I've got time, I've got opportunity. Let's see how this plays out before I make any decisions.
Well, we would certainly agree with you in terms of the inflation assessment. We also took a look at that and said, yeah, I mean, you're not going to get negative goods prices month over month on a persistent basis. But I do want to kind of drill into this idea of Goldilocks and how long it can persist, this equilibrium, particularly on the labor market side, because what caught my eye last week was continuing claims, which continue to rise. Just those cracks under the surface. Do you see those as a concern? Is there anything there for the Fed to be worried about?
Claims and continuing claims on a 4-week moving average are at exceptionally low levels. When you look at them at covered employment, they're even at a lower level. There's no risk whatsoever in this labor market, and I think that's the key. I think if you're looking for one market where there's potentially a movement out of equilibrium, it is the labor market. But that is only a move towards a tighter labor market. Okay, once you get this tax cut done, and this tax cut I think will be bigger than anyone still currently thinks, I think you'll wind up seeing with a much tighter labor market and a much greater push on inflation. And therefore, I question whether or not the Fed's going to get the so-called 2 rate cuts out this year.
So you think that maybe the Fed's not going to cut? Is that kind of your call?
Our call has been the Fed shouldn't cut whatsoever, and therefore we believe the Fed won't cut.
So there's a question here about longer-term bonds and how that really bleeds through at a time when people have not seen this as a haven. And there's been a real question about the inflation risk being priced in or not. And I'm just wondering, do you see yields going higher from here with questions about U.S. assets as a haven, as well as potential inflation that's only exacerbated potentially by inefficiencies and oil shocks that might come up along the way?
I mean, I think we're supposed to get to 5% on the 10-year note. I don't think that's a disaster. When you look at what's happening in the BOJ market, for example, they're having a significant amount of problems there as yields rise in Japan. You look at Europe. European rates probably aren't going to go up because Europe's a mess. And Christine Lagarde doesn't think she needs to cut interest rates, and she does. So I think you've got this situation. Well, I'd rather buy Europe because Europe's more likely to go into deflation than buy the U.S., where we're likely to have 3% inflation. So I don't think we have to get beyond the macro into this geopolitical concern about, you know, solvency and sovereignty and all this other garbage and reserve currency to explain what's happening in markets. What's happening in markets is you're reflecting relative interest rate differentials based on relative inflation differentials and relative real growth. And there's nothing that's mysterious about this. It's traditional macroeconomics.
So we're continuing to work through one big, beautiful bill that's going on underneath all of these headlines that we've been dealing with. And I was curious, you know, the way I think about deficit expansion is there's deficit expansion and then there's fiscal impulse. So some of the improvement or deterioration in the deficit is a function of just extending the tax cuts, which isn't necessarily a fiscal impulse. How do you differentiate between the two? And you mentioned already that you see the risk is actually to more fiscal impulse and more deficit expansion from here.
Yeah, no, I agree with you. I mean, if you were just going to extend the tax cut alone, you would not have a major positive impulse into the economy. But we're not going to do that. And I think the interesting thing is all this stuff is going on and the bill is working its way through the system without the news oversight to it that it would normally deserve to get. And this is what happened when suddenly the House passed the bill, okay? When it came out of committee in the House, suddenly people woke up, oh my God, it's not just extending you know, the Trump tax cuts. And I think, you know, this is part of the process of this, how the bill is getting done as quickly as it is. And I still think their game plan is to get it done by July 4th and have it implemented by October 1 so they could have a full year of real tax cuts coming through the economy going into the November elections.
And I think that's the game plan here. I think the game plan is tariffs are the diversion to get the tax cut. Tax cuts are the reason to get the midterm. The midterm is to get to what they really want to do, which is drain the swamp.
Well, this is what we're going to try to focus on as we parse through all the different risks that are coming up and dominating the news. Steve Risciuto of Mizuho, thank you so much for being with us. Kelsey Barrow of JP Morgan Asset Management, thank you so much for being with us for the full hour with some fantastic insights as markets shrug off a lot of risk, try to get some sort of rally underway. Coming up next, we'll parse through that with Dan Skelly of Morgan Stanley, Henrietta Trays of Veda Partners, Riyadh Air CEO Tony Douglas, don't miss that, and Earl Davis of BMO as the potential risk for rates very much front and focus ahead of that Fed meeting. This is Bloomberg Surveillance. Good morning.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
We're building another art museum of the Guggenheim. Now, Louvre's big enough. Why do you need a Guggenheim as well, right next door?
I think it's a great question. I think the beautiful thing about the UAE and Abu Dhabi is we live with over 200 nationalities. And in doing so, they have become a part of the country's and the city's fabric. And we need to celebrate that. So we need to celebrate everybody's identity, everybody's background, everybody's heritage, everybody's history. And what a beautiful way in doing so in these beautiful institutions. These museums are educational institutions and they're community institutions. So we wanted to curate really a story where you come to Saadiyat Cultural District and you, if you allow me to curate the story, you start off at the Natural History Museum. And at the Natural History Museum, you get a glimpse and you get an understanding of how we came to be, how our Earth came to be, how our universe came to be, from a scientific perspective. Once you leave the Natural History Museum, you go to our National Museum, the Sheikh Zayed National Museum. There, you understand the history of this great land, not just the history of the country, but the people of this land that have been a part of this land for over 300,000 years. You get a glimpse of what the past and the present and the future looks like here in the UAE. From there, you maneuver yourself to the Louvre Abu Dhabi, which is a beautiful universal museum. It is universal in its thematic approach. So there, you basically see a part of you on an equal pedestal with the entire world.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
You have concerns about growth, you have geopolitical concerns, and the latter pushing some safe haven demands.
The risk here for markets is whether or not there's an escalation.
Frankly, I think markets might have sniffed some of this out.
This is exactly the kind of opportunities that you want to buy.
There are lots of opportunities for investors. They're just not looking in the right place.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
The good morning. Welcome back to Bloomberg Surveillance, where our heads are spinning to start the week. The fourth day of a conflict still ongoing between Iran and Israel. Questions around trade partnerships as President Trump heads to Canada for G7 meetings. And oh yeah, it's Fed Week. That's right, where the central bank will be putting out projections as they sit in a dark room with blindfolds on and try to figure out the state of the economy. John is off for the week. Danny Berger, we're very lucky to say, is stepping in for the next 2 hours. Danny, it is striking that amid all of this risk roulette, and that's all I can call it, markets pretty quiet this morning and trying to feel positive.
Is it quiet? Is it positivity? Or is it complacency? I think that's a big question to ask. Trading ranges have been so narrow, even heading into the escalation of the conflict. Now oil is lower. Now stocks are higher. It's not even a hot war. It's also, as you say, I think it's 40% of the world's economy will have central bank decisions this week. It's a bond auction today. It is the G7. There is so much event risk. And here we are just quietly trotting along.
And it really goes to what Steve Rasciuto was talking about earlier, just a glut of liquidity in a sense that this has been a resilient economy. And yet one thing that's interesting is, we haven't even mentioned this, that we've got retail sales tomorrow. I mean, all of these indicators that we normally would be parsing through, how much is the consumer falling off at a time where there are signs that the labor market truly is starting to weaken?
Or how much are they just starting to become immune to the back and forth? The University of Michigan Sentiment Survey on Friday showing an improvement for the first time in 6 months. Is it much like investors? They just see the back and forth between trade, they see another geopolitical conflict, and they start to get numb to it.
And right now what we're seeing in markets is that numbness, or at least a bit of a rally. Equity markets, S&P futures up about 0.5% earlier, have retraced a little bit of that, up now just about, same thing, about 0.5%. And NASDAQ futures up more. What you're seeing in the bond space, yields up for a second straight session. They were rising even on Friday in the face of geopolitical risk, really raising a question of the response function for this haven asset. And crude prices lower after rising 7% on Friday as people take a look at the likelihood of some sort of disruption and or not as the conflict does remain between Iran and Israel. Coming up this hour, don't miss this, Dan Skelly of Morgan Stanley Wealth Management. As stocks try to rebound, Henrietta Trace of Veda Partners as the Senate debates President Trump's tax bill, and Earl Davis of BMO as inflation concerns resurface ahead of that Fed decision. We begin this hour with our top story. Israel and Iran exchanging attacks for a fourth day with no signs of easing. Joining us now, Anne-Marie Hordern from the G7 meetings in Canada and Jumana Bersetchi in Dubai. Jumana, I want to start with you. What's the latest in terms of the back and forth between Iran and Israel?
Yeah, no signs really of things letting up over the course of the weekend. In fact, we've seen an intensification of strikes from both sides between Iran and Israel. The latest being that Israel, over the course of the weekend, targeted over 80 different targets within Iran, be they military, defense. This morning, the Israeli military say that they've taken 1/3 of Iran's surface-to-surface missile launchers out, so 1/3 of their capabilities from the defense side, in addition to strategic targets on nuclear sites as well, one of them being Isfahan, a key part of the uranium enrichment process in terms of making the feedstock that's necessary for the enrichment process. So very targeted, but then also the death count has continued to climb. The Iranian Health Ministry putting out the latest figures at 224, of which about 6 of them are senior IRGC commanders and several dozen of nuclear scientists as well, key to the nuclear know-how. As for on the Israeli side, Iran have fired what the Israeli military has said is north of 350 ballistic missiles towards central Israel and northern Israel, also including 100 drones. Most of them have been intercepted, but what we've seen in the last 24 hours is there actually have been several of those missiles that managed to penetrate Israel's air defense system, causing damage. The death toll in Israel also rising, the latest figure being 24, with some damage being sustained to buildings as well. But no real signs of de-escalation at this point. And if anything, the war of words, the rhetoric, has increased. The Israeli Prime Minister saying that they will continue to target all of those sites, strike at every site and every target of the Ayatollah regime. The Iranian side saying that they will hit back unless Israel decides to de-escalate and stop their attacks on Iran. One thing I would say for markets, though, is so far we're avoiding the worst-case scenario of this spreading out into a regional conflict. It has been bilateral. There hasn't been a closure of the Strait of Hormuz. No infrastructure, key energy infrastructure has been hit. And, of course, U.S. assets have also been spared. But the longer this takes on for, of course, the more probability there is for this to get more broad and for the broader regions to get involved.
involved.
Anne-Marie, meanwhile, over in Canada, what's the international response and how much is the U.S.'s response in the focus right now at a time when there already are fraught relations?
Well, it's going to overshadow the G7, and frankly, it already has. These partners are going to be meeting here, and they're supposed to be speaking about trade, especially when you have the likes of the European Union, Japan here. Mexico's president is here. She wants to get in the room with the president, as well as Prime Minister, the host country, Mark Carney, to discuss U.S., Canada, Mexico trade. But what's going on in the region, this conflict between Israel and Iran, and Israel's strikes on Iran, is definitely overshadowing this G7, especially when it comes to the U.S. response and what that response might be. We know that the United States at this point has not joined the offensive. And the president, though, said to ABC News that it is, quote, possible that they would get involved. We do know, of course, that the United States is part of the defense of Israel and in the region. A key question when it comes to if the United States was going to get involved, would it be in trying to attack these nuclear sites that experts have long held, like Fordo, that are incredibly challenging for Israel, and they wouldn't be able to do it alone. There was one moment, though, Lisa, over the weekend, some reporting, a U.S. official telling us here at Bloomberg that the president did discourage and veto an Israeli plan when the Israelis said they had the opportunity of taking out the supreme leader, Ayatollah Ali Khamenei. So that is one moment where we did see the U.S. have restraint. But this will completely overshadow the G7. Lots of concerns about this becoming a regional conflict, what it means for shipping in the region, as well as the price of oil that can impact all of these economies. So this is going to be the focus. I'm not sure, though, you're going to get a statement of unity.
Anne-Marie, Jumana, both of you, thank you so much for that wonderful reporting. Here's the view on Wall Street. Dan Skelly of Morgan Stanley writing, if the conflict in the Middle East escalates, higher crude prices could push out the Fed's timeline to cutting and put downward pressure on consumer wallets. At the same time, the tariffs are impacting goods prices. Dan, trying to parse through all of this, joins us now. Dan, thank you so much for being here.
Good morning.
Do you feel like markets are being overly complacent at a time where you're seeing pressure on the consumer in various ways with the potential added shock of some sort of oil price spike?
Absolutely, Lisa. And so I think the key word is complacency, as Danny alluded to earlier. And, I think it's mostly a Mag 7 story. We saw a big rebound in NASDAQ and Mag 7 over the last 6 or 7 weeks. If I look further underneath the surface at the ratio of cyclicals to defensives, at gold to equities, or at small caps to large caps, those cohorts are telling you a very different story. They're all trading near their April lows, and they're saying that growth is more concerning going forward, which we tend to agree with.
And the Fed's going to have to be parsing through that, and we'll get there in a second. There is this question, though, RBC put out saying that stocks risk a potential 20% drop if there is some sort of high inflation type of scenario on the back of some sort of oil disruption. Do you agree that there could be this kind of bear market should there be some sort of escalation in the Middle East along with the inflation from the tariffs?
So 2 things, Lisa. First, I think a retest of the bear market close to 5,000 is unlikely. We've already seen the flexibility of a White House pivot, number one. Number 2, as I just referenced, tech is in a much better place today than it was a year ago, and the market is sniffing out an AI adoption cycle for the rest of the market earnings picture as well. So we don't see us going back to the lows, but we do have to keep an eye on the Middle East. I would say offsetting the Middle East concern at the moment is 2 things. First, Israel has hit close to 300 targets, but very consciously avoiding hitting the key oil infrastructure. And that's why I think oil is giving back a little bit today. And then second, let's think about where OPEC supply was going into this event. They were obviously bringing on more production, so that helps maybe absorb some of the geopolitical risk factor in oil today.
Should anything be priced in, though, Dan? Because it is a market that's learned time and time again that geopolitical issues raise and they flare up. They get priced in for a moment, and then we rally again. Is there any reason to suggest that we shouldn't be treating this conflict the same way in terms of how an equity market, how risk markets might react?
So excellent point, Danny, and I would concur. This event, this scenario should be similar to previous events. I think the fact that the White House is already trying to de-escalate and talk down the situation and look to negotiate is key to that. But with all things, geopolitics, earnings, tariffs, this is a year to adapt, and forecasts have been less relevant.
Well, to your point, part of the adoption is adoption of AI. To what extent is that, do you see that saving the market? That if there is growth concern, if there is pressure on margins starting to come in, that AI is going to come in and save the day for many industries?
Yeah, so look, that's the key question for the fundamental parts of the market, which have been somewhat lacking for the better part of the last week or so. But look, number one, Mag 7 wore this really unique hat as the biggest spender and the initial biggest beneficiary of AI. You're starting to see that broaden out within technology across software monetization and consumer internet. But the key question, back to your point, Danny, is when does it hit the rest of the Fortune 100, the financials, the healthcare sector, the industrials? We think that moment's going to come closer to 2026. So to answer your question, it doesn't save the market this year. We avoided the sell in May, but we're still fearful of a summer swoon. And the reason for which is we consider the tariff situation completely unsettled. Only something like 10% of companies in the S&P took tariffs into their guides in 1Q. No one has any clue as to what the picture looks like for the rest of this year.
How important is it whether the Fed looks through it and still sees this as a short-lived or short-lived, as they say, inflationary shock versus something more sustained that would cause them to keep rates higher for longer?
So that's a key question, Lisa, and I think the Fed is very much looking at it, as many of the economists at Morgan Stanley, as a one-off event. We're feeling that the tariff-related hit takes inflation back above 3%, closer to 3.5% towards the end of this year. But it's very much a one-off event that gets settled and really realized this year and starts to move forward next year.
Do you get the sense that markets disagree, given the fact that bonds haven't provided the haven type of status that they have in the past two trading sessions, when we are worried about what's happening in the Middle East? Does that raise a question about the markets pushing back about this being really short-lived versus something much more prolonged?
So that's a fair point, but I would argue the markets are also focused on fiscal, and this idea that we're going to have probably by the end of July more clarity related to the big beautiful bill. And look, the Senate version of this is likely to add another $1 trillion onto the deficit. And so I think the bond market is not just feeling out traditional safe haven status, but also thinking about fiscal expansion going forward.
Dan Skelly of Morgan Stanley Wealth Management, you'll be sticking with us. And honestly, all I can say, Danny, when we talk about the big, beautiful bill, when we talk about the trade, when we talk about G7, it sort of feels like, where are we? Head spinning, just given the fact that the narrative just changes every single day.
It's so true. And we are looking forward to the Fed decision for their summary of economic positions. If companies don't know how to react, to Dan's point, only 10% have started to incorporate tariffs. What is the Fed going to do? Are we going to be putting too much into what they're saying for the future when, let's be honest, they don't know, nobody knows.
And probably that press conference will be uncertainty, 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 very uncertain. Right now, let's get you an update on some more certain stories elsewhere this morning. Here is your Bloomberg Brief with Yahira on it. Yahira.
Hi, Lisa. President Trump says he believes Israel and Iran could eventually reach a peace agreement. Speaking to reporters before leaving for the G7 summit, he said the two countries may have to continue their conflict before coming to the negotiating table. In an earlier interview on ABC Sunday, Trump said U.S. involvement in the conflict is possible. Meanwhile, California is urging a federal appeals court to maintain a lower court's order limiting the Trump administration's use of National Guard troops in Los Angeles. Lawyers for California argue that allowing the administration to continue directing troops in the city would escalate tensions and increase the risk of violence. The legal fight follows days of unrest amid protests against President Trump's immigration raids. And another activist investor is seeking changes at Victoria's Secret. Two sources telling us here at Bloomberg that Barrington Capital Group, which has built a stake in the lingerie retailer, plans to push for a board overhaul. Earlier this month, one of Victoria's Secret's largest investors, BBRC International, also called for major board changes. That's your Bloomberg Brief. Lisa?
Thank you so much, Yahira. Coming up next, Trump calling for a deal.
Well, I hope there's going to be a deal. I think it's time for a deal, and we'll see what happens. But sometimes they have to fight it out, but we're going to see what happens. I think there's a good chance there'll be a deal.
He was talking about Iran and Israel. He could have also been talking about the big, beautiful bill. He could have also been talking about some of the trade negotiations. Henrietta Trey's Aveda Partners joins us coming up next. This is Bloomberg Surveillance.
global headquarters in New York. I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday only on Bloomberg. Context changes everything.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Markets are trying to figure out what to focus on and how much to care. Right now, geopolitics, as Danny was pointing out, not necessarily weighing as much on stocks because they've been punished every time they do care. So stocks are starting to rally just a bit to start the week, up about 0.5%. In the dollar space, continuing the weakening trend, almost 116, 115.79 on the euro dollar, and 10-year yields higher ahead of that 20-year auction later today, as well as the Fed meeting that starts tomorrow and ends with a rate decision on Wednesday. Keynote, they will not raise rates. They will not lower rates for 43%. Under surveillance this morning, Trump calling for a deal.
Well, I hope there's going to be a deal. I think it's time for a deal, and we'll see what happens. But sometimes they have to fight it out, but we're going to see what happens. I think there's a good chance there'll be a deal.
Here's the latest. Fighting between Israel and Iran continuing for a fourth day. Neither side showing signs of de-escalation. At least 23 people have been killed in Israel and more than 220 in Iran. The conflict will be at the forefront of talks at the G7 summit kicking off in Canada today. Bloomberg's Tyler Kendall joins us now. And Tyler, we were just saying, let's make a deal could be for absolutely anything, whether it's between Israel and Iran, whether it's between trade partners. How much is the White House able to keep track of all of the potential agendas that it has going right now at a time when they are very key for markets and, frankly, for what a lot of people see as the global trajectory for trade relationships going forward?
Yeah, hey, Lisa, there was a lot of moving parts here that the White House is contending with as the G7 summit really does kick off. And of course, the White House had been wanting this summit to really be focused on trying to make some of those trade deals come to fruition as we now are within the less than a month mark from that July 9th deadline. And it's clear the administration wants to show forward progress, particularly as we see some of these other allies start to make their own deals between themselves. We know Canada and the United Kingdom, for example, are going to talk on the sidelines about how they can shore up their economies against President Trump's tariff threats. But at the end of the day, the ongoing conflict now in the Middle East really is going to take center stage. And perhaps it will be a binding way for these countries to move forward together, since we know that Israel is calling on both the U.S. as well as European allies to assist them when it does come to the offensive part of their operation. For example, we had the Israeli science minister over the weekend saying that those allies really should come together to assist Israel. But it's worth pointing out, Lisa, that over the weekend, President Trump didn't have a call with a G7 partner. He had a call with Vladimir Putin of Russia, who, of course, is a strategic ally of Iran, in bidding to try to mediate these talks going forward. So no doubt there's a lot of different tricky areas here that this White House is going to have to contend with as they kick off this week.
Tyler Kendall, great work. Thank you so much for that. Joining us now, Henrietta Trey's of Veda Partners. And Henrietta, I want to go to that point. How much does, and this is something that Kelsey Barrow was saying earlier, how much does the eruption of conflict between Iran and Israel distract the White House from some of the other measures that it was working on, in particular issues with trade negotiations as well as the tax bill?
You know, it's not just the White House, it's also Republicans in Congress. I've been with leaders of the Republican Party for the last couple of weeks, most recently in London. And one of the things that I keep remembering is that they called on Trump, and the reason that they support him at their core is that he's a stabilizing force. And they were referencing the uptick in war between Russia and Ukraine. And to think that now this has evolved into Israel and Iran when President Trump was actively trying not to have this occur really cuts to the center of that argument and proves that it's not accurate. The president's going to continue to try to solve for peace there, but saying, you know, they maybe just need to fight it out is certainly not a stabilizing force as people assess, is this going to escalate or not? I think what it does is it puts attention back on members of Congress to get down to brass tacks and finish this bill. My expectation is that they will be successful. It's going to take another month, though. The senators are going to pass their legislation by the end of probably next weekend into the 4th of July recess, but we're still going to have a long way to go to square the House bill versus the Senate bill, which are at least $1.3 trillion off from one another right now.
Henrietta, this is also a president that had campaigned and touted once he was in office, keeping energy prices low. The threat of higher oil, of higher energy prices, how much does that color what the Trump administration, how they approach Iran and Israel?
Yeah, this is a critical point, and it really hits to the ability of the president to escalate the tariffs that he has pending, massive increases, 50% for some nations, more than that, in less than a month. I think that the point the administration makes over and over and over again is that low gas prices versus 2023 or 2024 is worth $200 to the American consumer and the average household. It masks or blunts the negative $3,200 hit from the tariffs. So having gas prices rise limits the president across a whole host of sectors, both in terms of being able to make cuts to pass the tax bill, which will cost, $4 or $5 trillion, and they need to cut from federal savings programs, Medicaid, federal safety programs, Medicaid, SNAP, et cetera. When you have higher gas prices, that becomes more difficult. And it also decreases the president's maneuverability to impose sanctions on Russia, for example, or secondary sanctions on China and Iran, which we know members are chomping at the bit for the president to do. But again, back to that destabilizing force, instead of stabilizing, he's not willing to sanction Russia and is instead calling Putin when Israel invades or attacks Iran to have them help negotiate a peace. So we're definitely very concerned on oil prices right now.
Henrietta, just from a very practical standpoint, we had talked a lot about the idea of reaching trade agreements with so many different partners in 90 days itself was complicated. If you add in a hot war, you add in the talks that have been going on with high-level partners, rather high-level cabinet officials rather than those lower down, just how difficult will it be in the coming days to reach agreements with partners, with this also on the mind of the White House?
Yeah, and I think it's important to maybe migrate away from thinking about agreements as opposed to short-term punts and deals that allow the president to push out July 9th into the future, into September, October, November. The base case that I have for tariffs is, as you've been mentioning all morning, there will be sectoral tariffs. That is the goal of the administration, to ultimately move away from IEEPA into Section 301 and 232. So pharmas, lumber, copper, semiconductors, all those pieces are on deck for higher tariff rates. So if you're an analyst exposed to those sectors, you need to be up to speed on what 232 and 301 are right now, because those tariffs will come for the remainder of Trump's second term. And then when you think about the short-term deals that he's going to try to reach to delay the Liberation Day tariff rates, what we're seeing is a mixed bag. We're going to get higher tariffs on Vietnam. We could be seeing higher tariffs on Nicaragua, Indonesia, Malaysia, and very specific countries that we have long-standing problems with, whether that's transshipping or human rights, in which there's already Section 301 investigations launched, and we can more narrowly target our tariffs towards them. And then there are going to be other nations like the UK, hopefully Japan and South Korea, where we haven't reached a broad deal yet. India, for example, is going to have a three-pronged, phased-in negotiation process that very likely will take years. China obviously will take years. So some of these tariff rates are going to be paused where they are. I don't know of any that are going to come off. The sectoral tariffs on Mexico on steel and aluminum may come down from 50% to 25%, but that's as far as we're going to go. So net tariffs are rising, not lowering.
Henrietta Trace of Veda Partners, thank you so much for that. Dan Skelly, we were joking about how it feels like when you enter too many commands into a computer and it just says, I'm buffering. It feels a little bit like how we all get the sense every morning when we wake up. How do you figure out what to focus on?
So I think the buffering year is a perfect metaphor for what's going on. Listen, I think as it relates to our key clients, you have to stay focused on their objectives and their goals, which is longer-term compounding, risk-adjusted outlook. And so, look, within the broader market, we're saying have some safe haven in terms of gold, have some alternative assets that give you some better risk-adjusted outlook in terms of hedge funds and other privates. You can't be complacent in terms of the index level outlook.
I heard that Costco sold out of their gold bars, but I'll look for other places. Dan Skelly, thank you so much for being with us of Morgan Stanley. Coming up next, we'll take you to the Paris Air Show, where Bloomberg's Guy Johnson has an interview with Riyadh Air CEO Tony Douglas next. Don't miss that. This is Bloomberg Surveillance.
Of investment agreements.
Deals were once again on display.
The Saudis are open for business. The cessation of sanctions against Syria.
Another big victory for the Crown Prince. Concerned that not enough guardrails may be set up just yet.
Headline after headline.
Trust Bloomberg for on-the-ground coverage.
The numbers will be quite substantial.
Up-to-the-minute reporting.
Driven the price of oil down.
And the analysis you need.
He's basically going to vault this region into the same sort of sphere as the US and China.
No one covers geopolitics like Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Markets looking to retrace some of the losses from Friday. Good morning. Even as the conflict between Iran and Israel enters its 4th day, the market's trying to game out worst-case scenarios and seeing potential upsides for maybe not an off-ramp, but not necessarily a broadening out of the conflict, with futures up about 50 basis points for the S&P, 2 hours away from the cash open. Here is your morning movers with Yahira Anand. Yahira.
Hi, Lisa. We start with Roku. Those shares are up nearly 10% now on news
announced that it's teaming up with Amazon to build a new connected TV ad platform. It'll launch later this year and cover major apps like Prime Video and the Roku channel, reaching about 80 million U.S. households. So at a time when cable viewership is declining, this move shows how streaming is becoming the new battleground for TV advertising. Next up, we have CoreWeave stock down, actually up about 0.7% now after B of A cut its rating to neutral. Analysts say that with the shares up 145% since Q1 results, any near-term gains are likely priced in. But interestingly, they did raise their price target on the stock, pointing to strong signs like that reported deal with Google and OpenAI, which was announced last week. And last up, we have Victoria's Secret shares. Those are up 3.3% on hopes that change could help turn things around for the struggling lingerie company. That's because another activist investor is knocking on the door. This time it's Baring Capital, which has built a stake in Victoria's Secret and wants changes on the board and overall strategy at a time when it's being pressured by major competitors, by Skims, which we all know is owned by none other than Kim Kardashian. Lisa.
Thank you so much, Yahira. We'll be watching that closely, I am sure. On our radar this morning, the conflict between Israel and Iran entering its fourth day. Iran firing drones and missiles overnight. Israel claiming it targeted military bases with airstrikes. President Trump says the two countries may need to fight it out before reaching a deal, Danny.
Well, it is a market that certainly sees a more optimistic outcome. But is that wrong? I was speaking with Bob McNally of Rapid Energy earlier today, who has advised many presidents on various regional conflicts, saying that Iran's only card they have to play right now is to hurt their energy output, is to do something in the Strait of Hormuz, because the president of the United States is deadly afraid of oil in the triple digits. Iran can't win a conventional war with the U.S., so maybe what they need to do is play that card to force the U.S.'s hand to say, you need to come in and help with negotiations to get Israel to back off, or else we will be backed into a corner and we will have to do something.
I just was struck by the idea that oil prices rose 7% on Friday. They rose at one point as much as, I believe, 14%. There was a real feeling that maybe this could be a real change, sea change in the region. Now they're trying to decline just a touch, but there is a feeling that even if it is a short-lived kind of disruption, this is going to affect supplies, and it is going to affect the region. I just wonder how we parse that into inflation at a time where that's been the tailwind for so many consumers.
And inflation, when it comes to energy-driven inflation, that is the kind of thing that does tend to be transitory. So is it a Fed that, confronted with that, needs to look through it? I mean, I doubt they'll say transitory again, ever again, perhaps, but that is typically what happens when you get those energy shocks.
Should be an interesting meeting later this week. Meanwhile, President Trump arriving at the G7 summit in Canada for the first major international gathering of his second term. More than a dozen world leaders are expected to look to strike trade deals with the United States. The group will also address the escalating Middle East crisis that we've just been talking about, and a real question here about also the trade deals that are on the table. I mean, honestly, how do they come together with any sort of cohesion at a time of so much dissonance?
Well, in 2018 at the G7, when Trump was there, the last one he attended, there was a huge rift. He basically called for the nations to not set aside Russia as severely as they had. Ties since then between the G7 leaders, you could argue that they've only gotten worse because of the trade deals. Where can you see agreement? Not just on trade, on Ukraine, on what's happening in the Middle East. There is a lot for these various leaders to try to parse through. I don't know how they're going to get it done.
There was a quote that Max Bergman of the Center for Strategic and International Studies had, and it was in the New York Times, saying this: the previous G7 summits, as well as NATO summits, were sort of awkward family gatherings. The question now, I think, is not so much, is this an awkward family gathering? I think the question is this still a family? And this really brings us to this question of how are other countries dealing with fissures in the G7? Chinese President Xi is in Kazakhstan to meet with leaders of Central Asian countries. A key focus for the gathering is reported to be future-proofing China's economy for a potential rift with the U.S. by strengthening ties with the resource-rich region. I believe Kazakhstan provides about 40% of the uranium globally, but it really points to this question of how the global global world order is completely changing.
Yeah, and look, it's no mistake it's Kazakhstan that she tends to visit the most. For one, again, the resources are very important in a resource-rich nation, but also this is kind of the land bridge between Asia and Europe, and that's another place that we've seen the closening of ties. Ursula von der Leyen went to China, Giorgia Meloni went there just last month, so you also see Europe maybe looking at China in a different way because of the push from the United States, and again, Central Asia plays an important role in that.
Well, let's head to Europe right now, to the Paris Air Show, where Bloomberg's Guy Johnson is joined by a special guest. Guy, thanks so much.
Lisa, thank you very much indeed. Yeah, welcome to the Paris Air Show, the 55th Paris Air Show. And all the subjects you've just been talking about are very much on the agenda here. I'm joined by Tony Douglas, the CEO of Riyadh Air, one of Saudi's new airlines that is coming to fruition over the next few years. Just placed a big order for Airbus A350s. You're a big buyer of Boeing aircraft as well. We've obviously just been talking about what's been happening with the crash that's happened in India, and also what's been happening in the Middle East recently in terms of the conflict between Israel and Iran. Let's start off with the latter. How big a problem is it for regional airlines currently to be operating? You've operated in the region for a number of years. Airspace in this area is getting smaller and smaller and smaller. Do you think this is a permanent feature of the landscape?
Look, our part of the world has always been very dynamic, and recent events have yet again illustrated that. It's deeply disturbing, and of course, airlines, as usual, have to make sensible contingent measures. So route changes, a new phenomena in other parts of the world, have actually been around quite regularly in our part of the world. And as you mentioned, I've been in the region for quite a long time, and hopefully this conflict, we hope and we pray, will come to a conclusion very, very quickly in a peaceful way, and we can get back to normality.
Let's talk about what's just happened in India. You're a buyer of, you haven't got them yet, but you are a buyer of the 87, the Boeing 787. You're still confident in the aircraft?
We're 100% confident in the aircraft. We placed an order for 72 787 Dreamliners back in March of 2023. Obviously, what's happened in India is shocking, and our condolences go to everybody who's been affected by this horrible affair. Far too early for anybody to speculate. Obviously, the process will determine what root cause was, and when that becomes apparent, everybody will act upon it. But at this stage, there's no change in status on 787.
You've also, here at the air show, just a few minutes ago, ordered a load of Airbus aircraft as well, Airbus A350s, the competitor to the 87. Is there any pressure on Saudi Airlines, given the politics at the moment, to lean more heavily towards Boeing? Or is it a purely commercial decision on which you're making these big purchases?
Yeah. It's a purely commercial decision, and perhaps if I explained what we've done earlier today, we've placed an order for 50 A350-1000, so an incredible aircraft. That's 25 fixed and 25 options, and we'll probably have a configuration around 360 seats with an incredible first-class product in the aircraft as well. So that will be our flagship airframe. In October of last year, we placed an order for 60 A321neos, and one of them's here on the apron in our resplendent Riyadh Air livery. And before that, it was 72 Boeing 787 Dreamliners. Again, there's one of them here in our incredible livery today. That's 182 aircraft ordered in 2.5 years. The brand is Riyadh, and if ever there was a demonstration of the intent and how important this is to have a new capital carrier, it couldn't be bigger than that.
Are you worried that all those aircraft may not be delivered? There's tariffs coming in. You've got supply chain bottleneck issues potentially being caused by those tariffs as well. I spoke to Larry Culp of GE the other day. He's talking about price rises coming through for engines as well. There's just been a multitude of complicating factors coming through at the moment. Is it getting more complicated to buy aircraft, set up an airline, do the things that you're trying to do at the moment? How much are these other factors complicating some of that process?
So are there lots of complexities out there? The answer, of course, is yes, there are.
Are they getting more complex, though? I guess
think
is the
in
question.
some places they are, and in some places they're getting easier. So where I was 2.5 years ago, I was clearly 2.5 years further back than where we are today. In 787s, there's 4 of them going down the production line now, a final assembly in Charleston, South Carolina, as we speak. And you can probably imagine that gives a gentleman like me a warmer heart and an awful lot of excitement and confidence as we see these aircraft going from a configuration plan into hard build. And we start taking deliveries of 321neos this time next year as well. So for us, exciting times. Will it ever be easy? Of course it won't. But and that's why we love aviation.
But is it getting more complex? You've got all kinds of other factors coming into the fore at the moment. Are there issues with you importing aircraft? Are there issues exporting aircraft? The euro-dollar rate is changing dramatically at the moment. Aircraft are priced in dollars. I'm hearing 120, I'm hearing 130, I'm hearing 140 in terms of the price of euro-dollar. Now, Saudi obviously is a different case in terms of the way that the currency is managed. I'm just kind of wondering, have some of the factors that you started off dealing with 2.5 years ago changed in terms of the factors you're dealing with now?
Well, I'll probably draw a slightly different parallel first, and that is pre-pandemic, we had oil prices over $100 a barrel, which of course is the #1 cost in commercial aviation.
Could be going back there again.
And we had ticket yields at an all-time low in 30 years in relative terms. So in those days, it was actually difficult making any money in commercial aviation. Here we are post-pandemic, where ticket prices have obviously now increased significantly in terms of yield, and oil prices, notwithstanding what's happened in the last week or so, have come down significantly. And we've seen lots of airlines now posting big profits in recent times. So in one sense, the commercial landscape has eased. But the world of other complexities, of course, has continued to stack layer and layer of challenges on there. And guess what? It's pretty much always been that way, one way or the other. The trick is play what's in front of you and also embrace ambiguity, because it's an ever-present in commercial aviation. The things that have happened that you've referred to earlier over the last 3 weeks ago, 4 weeks ago, nobody imagined.
Yep.
It's the way it is.
Tony, great to see you. Thanks very much indeed for stopping by. Congratulations on the order. Tony Douglas, the CEO of Riyadh. Guys in New York, back to you.
Guy Johnson there from the Paris Air Show. Thank you so much. Great work as always. And what really stood out to me, Danny, was just how much there is this feeling of resilience. When you talk to corporate executives, they say, look, we've got to look long term. We always deal with uncertainties. We've been trained by the pandemic, and this speaks to the resilience that we've been hearing about and seeing right now in markets.
I was going to say, how many executives are just saying, we got through the pandemic, so surely we can get through this? But also, how many executives looked at their peers, mentioned something about the tariffs and a worst case scenario and saw their shares get crushed and say, maybe we shouldn't be talking about that right now?
Yeah, on the flip side, of course, there is that, of course, the reality of maybe don't game out the worst case scenario, but there's also a feeling, particularly for airlines, that lower oil prices were met with the incredible consumer demand, and now you have potentially higher oil prices, but demand is still going to be resilient. I mean, they've dealt with so many uncertainties that kind of balance each other out at the end of the day. Right now, let's get you an update on stories elsewhere. Here is your Bloomberg Brief with Yahira Anand. Yahira.
Hi, Lisa. Multiple cities in the U.S. saw protests opposing President Donald Trump as he held a military parade on his 79th birthday. Nationwide demonstrations displayed the banner of No Kings to denounce what they say are Trump's authoritarian tendencies. The protests were largely peaceful but saw sporadic violence, including a shooting in Salt Lake City. Meanwhile, Southwest Airlines is adding a new cockpit alert system to help its pilots avoid dangerous situations. The Wall Street Journal reporting the cockpit alerts are similar to warning systems in modern cars that detect other cars in blind spots or if a driver is about to back into another vehicle. This comes after the carrier experienced a number of close calls in U.S. airports in recent years. And JJ Spaun won the U.S. Open on an unforgettable walk-off putt on the 72nd hole at Oakmont. After falling behind on Sunday with 5 bogeys in 6 holes, Spaun stayed focused and sunk the 64-foot putt for the win. He finished 1 under 279 and was the sole golfer to finish under par at one of the
world's most difficult golf courses. The win marks Spawn's first ever major championship. That's your Bloomberg Brief. Lisa?
Thank you so much, Yahaira. And somewhere, Jonathan Farrow, while he is on his vacation, is watching that game. And I'm sure very excited, of course, on this set. Probably neither of us are particularly.
No. It was on in the background in Casa Burger, but was I paying attention to it? I regret to say I was not.
And this maybe is a reason why. Up next, uncertainty clouding the Fed's path.
We have seen some speculation that the Fed may not be able to cut rates as much as had been anticipated recently. I think what's going to happen is the market is going to hold steady and just kind of wait and see where this is going.
Earl Davis of BMO joining us next as we take a look at the dual competition for the Fed between slowing growth and potentially higher hits to inflation.
AI should be for everybody, from leaders to the working on floor. And we can save 90% of time, 50% of workforce. AI is core in centers of change. And therefore, we invest heavily to AI. Actually, we started more than 10 years ago because we think the machine in the past helped our hand and legs. Now the machine helps us in brain.
Are you betting all your money in this right now?
When the OpenAI appeared, immediately I asked whole corporations study how will you bring generative AI to their job.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jemana Bersachi in Doha, Qatar, and this is Bloomberg.
It's a calmer market heading into this week, but it has not retraced the losses that we saw on Friday. We are staging something of a rebound. S&P futures up about 0.6%. They were down well more than 1% on Friday in the face of escalating Iran and Israeli tensions and conflict. The euro dollar is seeing ongoing weakening of the dollar. We're seeing 115.71. The dollar weakening once again. 10-year yields higher and continuing to climb, now up about 4 basis points, 4.44%. And this really is the question. How does the Fed deal with dueling roles, given the fact that you've got inflation and the concerns about the oil prices, as well as potential deterioration in the economy? Under surveillance this morning, uncertainty clouding the Fed's path.
we have seen some speculation that the Fed may not be able to cut rates as much as had been anticipated recently. And on the other side of that equation, obviously, you have concerns about growth, you have geopolitical concerns, and the latter pushing some safe haven demand. So that's kind of what's happening in the U.S. Treasury market. There's a push and pull there. I think what's going to happen is the market is going to hold steady and just kind of wait and see where this is going.
Here's the latest. War in the Middle East and rising energy prices complicating the outlook for the Fed. Earl Davis of BMO writing, although oil prices increases are immediately inflationary, it is a consumption tax on growth, the perfect environment for stagflation. Earl joins us now. Earl, thank you so much for being with us. Welcome. Good morning. There is a feeling that this does complicate the equation for the Fed at a time when, yes, longer term, you could see some sort of deceleration to growth, but in the short term, this is only going to exacerbate the month-over-month comps, if nothing else, for the inflation rates.
Yeah, it complicates it from an explanatory perspective in case they did want to ease. Now you can't use inflation, or at least I wouldn't say the lack thereof, but consistent inflation as opposed to rising inflation as a reason to ease. How it does, in my mind, make it a little bit easier, I think it puts a high amount of focus on the unemployment rate. From our perspective as an active manager, what we're looking at, and right now we don't anticipate any eases from the Fed this year, but one thing we are looking at is the unemployment rate. If that hits 4.5 or above, I do think that that allows them to ease. So that's the thing that we're focused on now in this environment.
And there is a question of continuing claims rising to the highest since 2021, and whether that's sort of a forward-leading indicator that that is going to happen. You are going to see that increase. Just how high is the bar, though, for the Fed to cut rates, given the fact that inflation potentially could resurge on the heels of tariffs and oil prices? Is that enough, a 4.5% unemployment rate, even if inflation is not back to their 2% goal for a sustained period of time?
Well, the interesting thing is the bar is not actually the numbers on the economic data. The bar is time. Given that Powell's term is coming up, do we see those numbers before his end of the term? It's our take that, if we were to see a 4.5 unemployment rate, it's not till late Q4, early Q1 2025. So we see more the bar is time, and then all things change depending on who the new Fed governor would be.
Well, Earl, just given that, the uncertainty around global conflicts, around trade, the fact that in 2026 we won't have Powell at the helm of the Fed, how much value can we put in the SEP at this point?
That's a great question. I'm going to rephrase my answer from the perspective of fixed income and risk assets. Like, how much do you buy riskier assets? How much value do you put in? I think we're in a well-defined, you have to look at two things. What's the range? And then where are the tails? So we're in a well-defined range in regards to, it's going to be very difficult to make 10% higher new highs and easier to make 10% lower new lows from today. So that says the bias is towards the downside. There is still a good economy happening in the U.S. underlying it. So you don't want to be short, but you do want to get a bit more defensive. And you do want to ensure that you're in liquid risk assets, something that you can liquidate in case that left-hand tail, which is a worst-case scenario, is realized, which is not our base case. So how we're looking at it, it's a range trading environment, and I look at it from fixed income. If you look at U.S. 10-year treasuries, you buy U.S. 10-year treasuries between a yield of 4.5, 4.75, and you sell it between a yield of 4.25 and 4%. From becoming safer, you stay away from 30-year bonds. There's too much price risk with that. We don't mind duration, but it's limited to those levels and 10-year treasuries.
Could the front end, though, also be vulnerable, Earl, from a Wednesday decision where last time we got the summary of economic projections, it was a 2.8% core PCE they saw for 2025. Is there a risk that that moves meaningfully above 3% and then that forces a repricing of the front end?
No, again, we see the tail towards higher yields or less discounting of eases, right? So it could move higher, I think, because of where inflation is now. That reduces that downside risk, that pricing with a 3 handle. But the front end will be stable. We're seeing a lot of money go into the front end from, as people reduce the amount of risk they have. So it'll be supportive, but we don't see a meaningful repricing coming to the downside anytime shortly.
Earl, did it bother you on Friday when we saw a risk-off move in equities, we saw oil prices surge, and you saw bonds sell off, the traditional haven asset not performing as such?
Yes, it did bother me. There's two reasons why people own fixed income. One is for the coupon, and that's where you go into corporate bonds, you get a higher yield. But the one is for capital appreciation, exactly what you said, those risk-off moments. We feel it's still there, but it's very level dependent. So it did disappoint us. We went underweight, more underweight treasuries after we saw that. But between 450 and if we come close to 475, you definitely want to buy. And the reason why you definitely want to buy is what we saw in last week's 10-year and 30-year bond auctions was increased participation by foreigners, which are usually foreign governments. So we know there is support on the upside, and that's where the value comes from, risk off. You have to buy it at those levels, not at these levels.
Earl Davis of BMO Global Asset Management, thank you so much. Really interesting, especially ahead of that 20-year auction later today. $13 billion of 20-year bonds being sold at 1 p.m. Eastern at a time when there's really question about where the marginal buyer is going to come from, Danny.
Well, it was last month, this very same auction, that you did see a tale that concerned the market, and it led to these fears starting that maybe we're going to get a buyer strike, or at least a foreign buyer strike. As Earl was kind of mentioning, the thing that is helping us out is the 10 and 30-year auctions last week went off fine. There was plenty of demand. But things have changed since then, as they do seem to change really quickly, so maybe we have a rethink of it.
You know, it's so interesting. People say that when they talk to some of the foreign asset managers, they all say they want to really hedge some of their dollar exposure, move away from the U.S., and then you ask how many of them are actually selling, and it's a little quieter. It's not necessarily that clear who's selling right now.
It's true. Sometimes it is very painful to bet against the U.S. It hasn't always worked out. It has so far to start the year, but you know, it's a painful trade to try to take.
Coming up, we're going to be speaking with Cameron Dawson of New Edge Wealth, Ellen Wald of the Atlantic Council, Jonathan Pingle of UBS, and Amanda Mlynam of BlackRock. This is Bloomberg Surveillance.
And Davos, you were asking a question of President Trump, and he didn't quite answer the question, and he asked you a question. So the question he asked you was something like, why are you not banking certain groups? What is the answer? I don't think he gave you a chance to really answer that question, but what is the answer to that question?
Well, first off, the Bank of America has 70 million consumer customers and millions of small businesses all over the country, all over the world, and so we bank everybody. But the real question was about overregulation, frankly. And so as you look, what's happened is because the interpretations of AML, anti-money laundering, BSA, Bank Secrecy Act, KYC, know your customer's customer, you know, there's a lot of burden upon the banking system to both report suspicious activity reports and do a lot of analysis. And we have to close accounts, so we can't tell people why we did it. And often we're told by authorities to close accounts. That creates confusion. Another area comes out in this discussion is in the crypto area where the regulator said you can't bank crypto operating companies, employees of crypto companies, et cetera. We are allowed to do, we bank everybody, but the operating company, they said that's a high-risk activity. Ask us for authority, and guess what? You would have never gotten the authority. So that came up as an issue. So at the end of the day, it's about getting these regulations right.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
But what about the diagnosis? If the diagnosis at the end is worries about growth rates,
yeah,
how do you get from point A to point B? Why do you worry so much about that end goal of better growth?
Because if we can't grow, you're going to have a much more inflated debt to GDP and federal deficit, and that's not good for the economy. Growth is really critical, and I think what's underappreciated is what the inputs are to get to the growth number. And so we talked a little bit about productivity. I hope that we can continue to produce at 2% indefinitely on productivity. I think that would be great. But you got to make sure you have the other levers in place, I think, to buoy that. So if you look back over the last several years, we've had 8 million immigrants come into this country in the last 4 years. And that's helped growth. And by the way, that's deflationary.
to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Ottawa, Canada, and this is Bloomberg.
It's very hard to see the U.S. walking away from Israel if the Iranians are mounting a massive counterattack.
This White House has been consistent. They do want to see a diplomatic approach.
A tremendous amount of damage has been done to Iran's ability to respond.
We'll have to kind of wait and see what that situation in the Middle East plays out.
You're more likely going to see people fade those geopolitical risk events rather than double down on them.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome back to Bloomberg Surveillance. It's Fed Week and Bank of Japan, Bank of England, and Riksbank Week. Central banks around the world grappling with the inflationary shocks and potential hits to growth. There are trade fissures, and now we have the fourth day of Israel-Iran conflict, possibly disrupting oil supplies. John is off this week. Danny Berger is joining me for the next hour and throughout the week. And Danny, I mean, it just strikes me. This is like a central banker's nightmare as we face off with a potential hit to growth at the same time that people are worried about a disruption to oil supply that could cause prices to surge.
This is the remarkable thing. The last time we got projections from the Fed was their March 19th meeting, and so much has changed since then. The world has changed, trade has changed, geopolitical tensions have changed, but will the Fed be changing their tune? They might very well still adopt this wait-and-see approach because it's a hard time to have high conviction in anything, especially for the Fed right now.
Meanwhile, we do have a host of economic data in this shortened week. Thursday is a holiday in the United States. Tomorrow we do get retail sales, which a lot of people used to watch. We get jobless claims a day early on Wednesday, as we also do get that Fed decision. Everyone's minds are completely distracted because we're watching what's going on in Israel, in Iran, and trying to understand what this actually means for oil prices, what this actually means for some of the trade negotiations that are going on with G7. I mean, how do we get our hands around how exactly we focus our minds on which item to watch?
Well, that might be the problem. Lori Calvasine of RBC was talking about this over the weekend in a note basically saying we're already coming from a really fragile place, that we're already really hamstrung by uncertainty around tariffs. You add in Israel, Iran, what does that do to sentiment when you see valuations really stretched? If you do have an inflation uptick, you mentioned this earlier, she says that she could see stocks falling some 20%.
Yeah, and this partly comes because valuations have been really elevated. Right now, that is not the case in any way, shape, or form after Friday's sell-off, and it wasn't a massive one. You are seeing a retracement with stocks futures near their session highs, up 0.6% on the S&P. You're seeing dollar weakness yet again. The euro gaining versus the dollar, 115.72. And this, to me, is possibly the most interesting of all of the moves, and that is an ongoing sell-off in the 10-year note. You're seeing 4.45%, up 5 basis points in terms of yield ahead of a 20-year auction later today, even as crude prices are lower. And this is a retracement of what we saw from the spike, the 7% spike on Friday. Crude prices down 1.2%. Coming up this hour, Cameron Dawson of New Edge Wealth. As traders react to the latest strikes between Israel and Iran, Ellen Wald of the Atlantic Council on the shock to energy markets, and Amanda Mlynam of BlackRock as inflation fears resurface for the Federal Reserve. But first, we begin this hour with our top story. Attacks between Israel and Iran entering a fourth day with no signs of any kind of off-ramp. Anne-Marie Hordern is following President Donald Trump and joins us now from the G7 in Canada. Anne-Marie, you're in a fantastic position to understand the sort of collective response from this group of 7 nations at a time when there are myriad challenges, both with Israel and Iran, as well as with trade relations.
Well, exactly, Lisa. Israel, Iran, this conflict that many G7 leaders, all of them are really concerned that this could become a wider regional conflict, is now overtaking the agenda items that were set for the G7, notably when it comes to trade negotiations with the United States, as well as trying to find a solution when it comes to Ukraine, given the fact that President Zelensky is here. So now you have the issue of Iran and Israel top of mind for all of these leaders, especially since the United States, we know, was given a heads up about this, and the United States is coming to the defense of Israel. They are just not involved in the conflict offensively. But the president left the door open. Speaking to ABC News over the weekend, he said, "We are not involved at this moment, but it is possible." He also said to reporters before he came to Canada, leaving the White House, that these two need to fight it out, and then I think at the end there could be a deal. Potentially what the president wants to do is see a weakened Iran without immediate access to potentially build a bomb come to the negotiating table. But it's anyone's guess how long potentially this may take and when the U.S. or if the U.S. may actually get involved, especially if they think they could take out the nuclear capabilities at the center of Fordo, which is buried deep into a mountain. We should note there was one moment of restraint we saw from the United States on the Israelis over the weekend, and that is a U.S. official confirming to Bloomberg that President Trump did veto the Israelis when they said they had this opportunity potentially take out the Ayatollah.
Anne-Marie, great work. Look forward to catching up with you throughout the week as you are on the ground there from a beautiful Banff, Canada. Here is the view from Wall Street. Cameron Dawson of New Edge Wealth writing, "It's all about oil. If prices are contained, markets will move on. But if prices begin to drift higher, this could throw a wrench in both the economy and markets." Cameron joins us now. Cameron, after a very restful weekend, thank you so much for being here. So here's a question. Are markets being overly complacent to the risk that there could be some sort of oil shock, or are they being realistic? The geopolitics tends to be not that lasting.
Well, it really all does depend on oil. If oil prices change their trend from being in a downtrend over the course of the last 3 years to start to trend higher, this is when this turns from being a contained geopolitical risk to being something that will have a more lasting impact on markets. So if we take the objective look of just looking at the oil technicals, it's overbought, in a downtrend at resistance. Usually that would cause you to want to fade the move, and maybe that's some of what we're seeing this morning. But because we're dealing with exogenous shocks, we have to be very attuned and aware that if oil starts to trend higher, this is a big issue for inflation readings, it hamstrings the Fed, and it causes pressure on the consumer, all things that this equity market would not like.
How much can you act on that now? How much can you seek out hedges? Because in the past, when we've tried to trade geopolitical conflicts, it fades out pretty quickly.
We think this is exactly why you need to have some energy exposure within equity portfolios, because it hedges against a risk that nothing else in the market does very well, which is why when we own energy stocks, we're trying to own the highest quality parts of that market, but we're not owning them for necessarily distinct upside, but to be able to have something that can zig when the rest of the market is zagging in the event of geopolitical events, exactly like what we're seeing.
Elsewhere, though, you have started to see sentiment improve, despite the fact that we still have tariffs, we don't have more agreements, and now another and intensifying hot war between Israel and Iran. Does the sentiment uptick in general make sense to you?
Yeah, we wrote a note over the weekend inspired by tools saying that we don't want to become victims of our own certainty. And there certainly seems to be a fair amount of certainty that it's come back into this market as you've seen sentiment really chase the 20% rally higher. Now, there's certain pockets of positioning that still are light, which suggests to us that the pain trade overall still could be higher, but we think you're bumping up against a resistance of a ceiling on valuations. We're trading at 22 times earnings. That's a half a turn lower than the peak that we got back at the end of 2024. That was the peak of American exceptionalism. And to your point earlier, a lot has changed since that point that calls into question that exceptionalism and that ability to trade at such a fulsome valuation. So we don't think that we're priced for any kind of risk or downside, which just means that expect more volatility if the headlines come.
Risk and downturn and potential downside is sort of in the eye of the beholder. What is that risk, right? Is it the risk of inflation and a reacceleration of growth, some sort of stagflation, some sort of disinflationary shock? And I say this at a time you say about valuations remaining in question really goes to the heart of the rate picture. And the fact that you did not see a bid into long bonds on Friday at the same time that you saw a risk-off move, how much does that alone truly threaten and undermine some of the valuations that seem pretty elevated here?
The 10-year Treasury yield on Friday was Sherlock Holmes' dog who didn't bark. It was so peculiar to see, as you're having this risk-off move throughout the rest of the world, that duration around the globe did not do well. And that's because of exactly what you said on stagflation. When there is an inflation overlay to a potential growth scare, duration does not do well. We learned that lesson in 2022. too. And so that is what we think is the key risk here, is that your typical safe havens don't do well if you do see an uptick in inflation, which brings you back to why oil is so very important.
Because if oil prices go up, that just speaks even more to the stagflationary shock. It's sort of telling that this is weak. We have so many central banks. I think Danny put it at 40% of the world's central banks coming out with decisions. Imagine making a decision at a time where you're in a dark room with a blindfold, bumping into chairs. But there's a real question here about where they weigh the risk more heavily. Do they see, I don't want to use the word transitory, but a short-lived inflation risk when it comes to both trade as well as with respect to oil, or do they have to weigh that more seriously with also some of what we've seen in the terms of the hangover from the pandemic?
If we think about their two mandates, if we think about the labor side first, it's not bad enough to get them to act, meaning that you're not seeing enough employment weakness, you're not seeing enough growth weakness overall to get them to move and push inflation to the side. And because inflation still has such a big question mark about where it will trend through the rest of the year, because of oil, because of tariffs, they don't have the reason to act now. So it just says to us that they will continue to sit on their hands, they'll continue to say we're being patient, and Powell will probably say that he will continue to wait for clarity. But clarity probably is the scarcest asset of any asset that we can find right now.
Well, I'm sure we'll still dig through the SEP to see where the dots are, to see what their inflation and unemployment projections are, to get some sort of signal. Should we be putting less value in it, just given what you're saying?
Yeah, because it very much is a shot in the dark, and I would be looking at the growth line. So it was at 2.1% in December. They marked it down to 1.7% in March, but consensus right now for 2025 real GDP is at 1.4%. So if they move their GDP estimate lower, Powell is going to get questions to say, why aren't you talking about more rate cuts if you're cutting growth estimates even further? Then you'll have to compare that to the inflation forecast, and will they actually mark that lower, because inflation has come in shock to the downside, or surprise to the downside year to date. So then you'll have a scenario where they could be marking down inflation and growth and yet not doing anything to rates because the forward outlook is so uncertain.
So you're buying gold bars or Bitcoin?
Well, I do think that when we think about safe havens, gold proved to be a better safe haven on Friday than Bitcoin did. And we think the reason for that is that inflation overlay and what that means for global liquidity. If inflation is higher, that suggests that central banks have to be tighter, which means you're constraining liquidity. Bitcoin needs ample liquidity. So in a high inflation, kind of uncertain growth environment, gold, we think, wins over Bitcoin. And gold is probably one of the best charts in the market right now. Super powerful uptrend.
Yeah, we've seen that record high again and again. Cameron Dawson of New Edge, thank you so much for being with us this morning. Right now, let's get you an update on stories elsewhere. Here is your Bloomberg Brief with Yahaira Anand. Yahaira.
Hi, Lisa. President Trump appears to be doubling down on his mass deportation policy. In a Truth Social post last night, he called on ICE agents to expand deportations in the largest U.S. cities, including Los Angeles, New York, and Chicago. Last week, though, Trump acknowledged the impact his policies have had on rural communities and promised changes to protect farm and hotel workers. And this just in, President Donald Trump registered his name for a mobile phone service. A request made with the U.S. Patent and Trademark Office would cover mobile phones, cases, battery chargers, and wireless telephone services, and possibly retail stores. The filings suggest plans could be in the works for a Trump-branded mobile phone or service to compete with Verizon, AT&T, and T-Mobile. And LA Dodgers phenom Shohei Ohtani will make his return to the mound tonight against the San Diego Padres. The two-way superstar hasn't pitched since the 2023 season when he played for the Angels, taking nearly 2 years to recover from surgery. As a batter, his 25 home runs rank first in the National League. That's your Bloomberg Brief. Lisa?
Thank you so much, Yahaira. I gotta say, the idea of a mobile phone service under Donald Trump's registration wasn't on my bingo card this morning.
It wasn't, but, neither were gold shoes that he sells. You need the whole kit, your phone, your shoes, your hat, good to go.
All right, well, coming up, we've got, of course, discussions more with not only the morning calls, plus Ellen Wald will be joining us of the Atlantic Council on the risks to energy markets, as we were just talking about with Cameron Dawson. It's all about energy right now. Crude prices just off a touch after surging 7% on Friday. This is Bloomberg Surveillance. Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question.
Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Coming into Monday with a better tone than Friday when there was a risk-off sentiment and surging oil prices. Oil prices lower this morning, and you are seeing stock futures up across the board, up almost 0.7% now at near session highs at the S&P. You're seeing that not really take place in the bond space. Yet another day of a sell-off with yields touching 4.44% and higher, going up 5 basis points. A question ahead of that 20-year auction later this morning. Time now for the morning calls. First up, TD Cowen upgrading to Celsius Holdings to buy, citing improved sales growth and the acquisition of energy drink company Alani Nu. Next up, Cisco upgraded to buy at Deutsche Bank, the analyst noting AI tailwinds and supply chain positives, helping the company navigate tariffs. And finally, Citi raising its price target on Mattel, the firm saying that the toy maker and other leisure stocks have bounced back as worst-case scenarios of tariff risks have been taken off the table. We're seeing Mattel shares unchanged as people grapple with just what the tariffs could mean for Barbies. Back to our top story for markets, a fourth day of fighting between Israel and Iran, raising uncertainty for energy markets. Ellen Wald of the Atlantic Council writing, if Israel can take out Iran's ability to produce gasoline, diesel, and provide electricity, the situation becomes significantly more dire. If the regime cannot maintain control through the use of force, it will likely fall. Ellen joins us now. Ellen, thank you so much for being with us. And we are just getting word from the Prime Minister, Benjamin Netanyahu, that Israel is on the way to destroying Iran's nuclear and missile threats. Do you have a sense, Ellen, of what the end game could possibly be?
You know, it's interesting because I think for Israel, the real end game is just to take out all of the Iran's ability to threaten them. So the missile sites, the nuclear sites, I don't think that they're really aiming for regime change. I mean, they don't want to participate in that. I think that there's also the understanding amongst them and also amongst U.S. policymakers that what would take its place. And sometimes a lack of a regime or a power vacuum could be even more dangerous. I mean, you know, there's the IRGC is probably the strongest entity in Iran. And so if, you know, the civil government falls, it's possible the IRGC or what's left of it would take over, seeing that they have, you know, control of most of the use of force there. And that could be, you know, potentially a worse situation than they're in now. So I think there's a very delicate balance here between causing, you know, widespread destruction. If you're going to take out, you know, multiple fueling stations and you're going to take out multiple refineries, then you're going to essentially, you know, send Iran to the dark ages for a period of time, and things could really fall apart at the individual and city level. So I think that they're really, I think, working more towards taking out the military capabilities as opposed to trying to, say, foment widespread destruction.
Ellen, a lot of people have talked about the idea of some sort of broadening out of the conflict and embroiling a greater number of countries in the region in this war. I just wonder, who's Iran's friend? Why is there anyone, or is there anyone coming to Iran's defense in any capacity, or are more of the nations on Israel's side, or just frankly don't want to get involved in any way, shape, or form?
So I think that in terms of, say, friends, I think that Iran has potentially has maybe some strategic allies that could be useful in maybe arguing Iran's case in a diplomatic situation. So take China, for example. China buys a lot of oil from Iran, or relatively. They're Iran's largest customer. But because Iran buys that oil and they accept Chinese currency, they have to spend a lot of that Chinese currency on goods and services from China. So China does a lot of business in Iran. And China doesn't want to see this situation fall apart. If, in fact, it gets so dire that there are threats to Chinese ships or oil tankers that are heading for China, coming out of the Persian Gulf, and that's not just Iranian ships, that could also be ships coming from Saudi Arabia, from Kuwait, from other oil suppliers, then China is definitely going to exert the full weight of its economic might internationally and on Iran and say, okay, you've got to cut a deal. This has to end. This is not worth threatening our, economic relationship. Russia, likewise. In fact, we saw Russia saying now, hey, we're ready to, facilitate negotiations and we'll accept all of your uranium, Iran, which, is kind of an interesting offer from Russia. But they're definitely, I wouldn't say they're necessarily on Iran's side. They're not going to come aid them in the event of military catastrophe, but they would definitely be there to support them in a diplomatic sense. And I also think, you've got Saudi Arabia. The Saudis definitely aren't best friends with the Iranians, but relations have certainly improved. And I think the fact that you see them essentially quiet is really almost a sign of not support. They definitely would like to. They're more than happy for Israel to take out Iran's nuclear arsenal and nuclear reactors, but they don't want to see Iran completely devastated. That's not a good situation for them. Like a power vacuum in the Gulf is not going to be a good situation for the Saudis or for the Emiratis or for anyone else. So if it gets to that, you are going to see them standing up and I think trying to support the regime.
Ellen, whenever conflicts arise in the Middle East, concentration quickly goes to the Strait of Hormuz and the likelihood of it being closed. Is that the right thing to be concerned about? Or is there a scenario where you get what's happening in the Red Sea, where you get a few tankers attacked, and that's enough to convince insurance companies that it is not worth trying to insure ships going through the strait?
So it's interesting. I think there are 2 points there. I do think that we're a bit stuck in this old paradigm from the 20th century where we all, as in the West, need oil from the Persian Gulf. And we all remember, or at least those of us who were alive then remember the Iran-Iraq war, and there was the tanker war, and both sides Iran was trying to prevent certain tankers from leaving the Gulf, and certain tankers needed basically U.S. military escorts in order to get out, and that caused havoc with oil prices. So I do think the Strait of Hormuz is a very important waterway, but if you look at the traffic patterns and the way that ships go around there are other ways to traverse the straits that don't involve going through Iranian waters. So if Iran did threaten the security of ships there are workarounds. They're not that easy and would take some time to work through, but it is absolutely possible. The other issue, though, is that like you said, can Iran actually do this? It's not clear that they could physically close the straits. On the other hand, they could cause enough trouble that insurance companies are going to raise their rates through the roof. Now, does that make it impossible for ships to go? No. People will pay, but oil prices will have to go up. Customers will have to pay more in order to compensate for that insurance rate. When you look at the Red Sea, that's a little bit different because there is an alternative route. You can go around Africa, and a lot of large ships are equipped to do that. So, but with the Strait of Hormuz and the Persian Gulf, other than a couple pipelines that are able to get oil and other products out without going through the straits, there really is no other way out. So for Iraq, Kuwait, some Saudi oil, Bahraini oil, there's no other way. The UAE has a workaround, and so modifications could be made, but there's nothing else they can do. So they're going to just have to pay the higher insurance rates.
Ellen Wald of the Atlantic Council, thank you so much, as always, for your insights. And Danny, I'm struck by some of the shipping costs, which have been surging on the heels of this increased risk, because why would anyone take this on unless they had better insurance, as well as potentially longer routes that are going to be more expensive?
It's so true. Ellen makes a really great point there that a large percent of ships going through the Red Sea already faced really high insurance costs, so they did other routes. There is no large-scale alternative for the Persian Gulf. So if that is what we see, you see insurers backing out, you could really get some disruption to oil prices, even though it's not an outright closing of the Strait of Hormuz.
Which is the reason why there is a feeling that right now there isn't going to be a full retracement of that 7% boost surge that we saw on Friday to oil prices, that you could see that persist. And even though you are seeing a bit of a decline this morning, it hasn't retraced that because of some of these potential risks. Coming up, Jonathan Pingle of UBS, as we do remember that, yes, Wednesday is the Fed decision. And of course, there are central banks around the world which are grappling with all of these risks that frankly make an already cloudy picture that much more uncertain. This is Bloomberg Surveillance.
Of investment agreements.
Deals were once again on display.
The Saudis are open for business. The cessation of sanctions against Syria.
Another big victory for the Crown Prince.
Concerned that none of the guardrails may be set up just yet.
Headline after headline.
Trust Bloomberg for on-the-ground coverage.
The numbers will be quite substantial.
Up-to-the-minute reporting.
Driven the price of oil down.
And the analysis you need.
He's basically going to vault this region into the same sort of sphere as the US and China.
No one covers geopolitics like Bloomberg. Bloomberg brings you breaking news 24 hours a day. Powered by more than 3,000 journalists and analysts in more than 100 bureaus across the globe. Bloomberg Television. Context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
It's an uncomfortable calm about an hour before the U.S. Open. We are seeing equity futures do continue to gain near session highs, 0.7% now at session highs. On the S&P, up 0.9% on those tech darlings. The NASDAQ 100 futures higher as people look at what's going on with AI. Crude prices lower just a touch after last Friday's surge on the back of the Iran-Israeli conflict. 1 hour away from the cash open, here are your morning movers with Yahaira Anand. Yahaira.
Hi, Lisa. It was a bit quiet this morning, but now we have a flurry of movers, and we start with Archer Aviation. Those shares are up 4.8% after the CEO spoke with our own Guy Johnson over at the Paris Air Show, and the CEO told Guy that defense sales could outpace Archer's air taxi business for now. That's because he says military demand is soaring at a time when passenger flights are taking a bit more time for the company to scale. Meanwhile, we have shares of Insight. Those shares are up 8.9% here after trial results for its experimental blood cancer drug came in strong. In a small study, over 80% of high-risk patients saw a complete response with no major safety issues reported, and that spurred an upgrade by analysts over at Stifel. And we end with some more pharma news. This one related to Sage Therapeutics, up 36% now after Supernus agreed to buy the company for up to $12 a share. And if the deal goes through, Supernus would gain Sage's FDA-approved Zurzuvae, a pill used to treat postpartum depression. I was waiting for some M&A news to make this an M&A Monday, and it looks like we got it. Lisa?
Thank you so much, Yahaira. We did get some as people look past the geopolitics. Meanwhile, we do have a busy week of data ahead, including a Federal Reserve interest rate decision. Bloomberg's Michael McKee joins us now as some of the gatherings begin in Washington tomorrow.
Yes, Lisa, and it is maybe the calm before the storm. I like what you said about the calm in the markets ahead of the open because we're waiting on a lot of data and the Fed to make some news. We got the first data of the week, the Empire survey from New York manufacturers. The New York Fed puts that out, and it shows a decline in the overall number down to -16 from 6. New orders also declined, and general business conditions fell. Shipments also down. But the interesting thing there is that prices paid fell. Prices charged rose. So make of that what you will as we get ready for the Fed. Retail sales tomorrow is going to be the highlight of the week, along with perhaps jobless claims on Wednesday, because Thursday is a holiday, so we move it up one day. Retail sales expected to rise, shows Americans still spending, but the question is by how much? And then, of course, we get the Fed meeting on Wednesday. What are they going to do for the dot plot? What are they going to do for the summary of economic projections? You heard Cameron Dawson talking about what if they raise both or cut both the unemployment numbers and the inflation numbers. How do they defend what they're doing or not doing? It's going to be a very interesting Wednesday. And then we have to note that by the end of the week, the Fed will be done for the month until the end of July. But the tariffs news comes back the first week of July. So we're going to have a half-life on all this stuff.
Yeah, especially because there's this ultimate question. When do you actually get certainty at a time where they're saying they're waiting and seeing? What are they waiting for? What do they hope to see? Michael McKee, thank you so much for being with us. Right now, Jonathan Pingle of UBS, looking ahead to Wednesday's Fed decision, writing, we expect no change in policy. In a press conference still enveloped by uncertainty, however, we expect the summary of economic projections to be relatively hawkish. Jonathan joins us now. Jonathan, can you elaborate on that? What does it mean to be hawkish at a time when we are starting to see some weakening in the labor market?
Well, the FOMC is, I think, starting to see some weakening in the labor market, but I think the data has been just good enough that they can sound relatively hawkish and prioritize inflation for the time being. And I think that's what we're going to get in the summary of economic projections. I think, yes, everything is quite uncertain. And I also think that these discussions over how to weigh labor market weakness against tariff-related inflation are only just beginning. But I do think that this is a meeting where it's at least going to look like the FOMC is prioritizing inflation over the labor market.
How do you determine, Jonathan, their scenario analysis if you do get some sort of challenge to their dual mandate? If you get a rise in an unemployment rate at the same time that you have inflationary shocks that some people could argue would be short-lived or transitory or whatever kind of word that people hate to describe it, how do you understand what is bad enough to get them back in the rate-cutting game?
Yeah, I mean, I think you sort of hit the nail on the head, Lisa, with exactly something that I think they're only really just starting to grapple with. And I think this SEP, where they actually have to write down, what the tariffs might imply for inflation, what the weakness in demand might mean for the unemployment rate, that they're really going to start now, I think, grappling with this trade-off. But I think to your point, Lisa, one of the things I think that's going to really trouble the committee is they don't have the right tool for the job. I mean, the funds rate it's an aggregate demand tool. It's not going to stop the tariff cost push inflation, but it does risk making the labor market even weaker. So I think these are conversations that they're really just going to start to have now as they weigh what they might do when the mandate goals come into tension. But I also think that when they really are in tension, there could be many other things that start to weigh on their decisions, such as risk management, and really what tools do they have to address that problem.
What about the weight of Chair Powell no longer being the chair, Jonathan? If we start to really see the impact come next year, what happens if it's not Powell at the helm, but someone else who maybe has a more dovish bend per the request of President Trump?
Well, that's a bridge we'll have to cross when we get there, Danny. I mean, that's a great question. But, for the next 6 months, this is probably Chair Powell's, sort of car to drive. And he has been in the driver's seat with this FOMC. Next year, I think there's going to be a little bit more clarity over what the actual impacts are, what the second round effects might be, what the actual labor market looks like, and whether it's anyone on sort of the short list we've all been talking about, how they want to weigh the unemployment rate and inflation is going to be up to them. But also we shouldn't forget, I mean, this is a committee. I mean, the chairs might be in the driver's seat, but they're not unilaterally ruling over the committee.
Fair enough, Jonathan. Well, in the more short term, what we have seen recently is some of the sentiment measures start to pick up. There's been a lot of criticism of them, that they're overly political, don't pay attention to the deterioration. Should we start to pay attention to things like the University of Michigan sentiment survey start to turn around?
Well, I think watching some of these sentiment indicators is useful for understanding what's going on. But we've certainly seen, financial markets, weighed upon by the April 2nd announcement and having rebounded since then. But I think one of the interesting things is that some of the hard data actually looks like it's starting to soften here. I mean, if I look at the number of people collecting unemployment insurance benefits, continuing claims, we'll get another read on Wednesday. That's sort of taken another leg higher in a worrisome way. I'm sort of curious what happens when we see the next orders and shipments data, capital goods orders. If you stripped out aircraft and defense in April, they didn't look that strong. So I think it's important to watch the sentiment indicators, but I also think that, we're at a juncture where it looks like some of the hard data could be weakening here as well.
There's a real question here, Jonathan, why the long end of the yield curve hasn't rallied more as a result. A lot of people think that inflation isn't going to be run away. You even see that in some of the surveys. Some of the inflationary fears have been coming off, albeit some of those surveys were taken before the potential oil shock. We were speaking with Jeffrey Gundlach of DoubleLine in California last week, and he said, you're already starting to see the loss of U.S. exceptionalism in the sense of people being concerned about the fiscal backdrop, in the sense that you're not seeing a rally into treasuries, and that if the Fed were to cut now, they would actually see a sell-off in the long end. Do you agree with that? Do you think that there is this concern that the Fed has lost control over the long end of the yield curve?
So I don't know so much if the Fed has lost control of the long end, Lisa, but we have had, some of these episodes of periodic concerns around supply. I mean, we've seen term premium moving around with refunding announcements. There has been a certain different price action around, concerns over the supply of U.S. duration, which at the moment is probably not being helped by the budget debate on Capitol Hill. We'll have to see. Our rate strategists generally think that, at high frequency, if the economic outlook gets really bad, that the cyclical tends to dominate the structural. But, we are looking at a pretty dire debt outlook, and we have seen these periods in the bond market where, supply concerns have started to, periodically assert themselves.
So, Jonathan, there's this other question, too, especially if the bill gets passed, the one big, beautiful bill in Washington, D.C., whether that's going to be stimulative, and that's going to potentially create an upside risk to growth, which would be beneficial in offsetting some of the deficit and would also potentially bolster the inflationary outlook. How realistic do you think that is?
Well, I mean, looking at what the House passed, we do think that is going to be somewhat stimulative in 2026 with some spillover to 2027. We'll have to see what comes out of the Senate and what changes are made. What the House did is it front loads actually a lot of the stimulative components of the bill and then sort of backloads a lot of the phase outs and pay fors. So we would score that as a modest boost to 2026. But it's sort of an interesting timing problem because the tariff effects we have in our forecast, they're coming sooner. Then it's followed by this boost from fiscal policy. So it's going to be, I think, potentially quite a volatile next year and a half as we see, sort of these two forces play out. Now, we don't think this is a super boomy growth impetus coming out of the bill. We're sort of 0.4 of GDP growth to come as a boost to 26 and 27. Could be more. These estimates are highly uncertain. We'll see what we get out of the Senate. So this is nothing like what we saw come out of the Biden administration in terms of the stimulative effects. But our guess is it's going to be a modest tailwind for 2026 growth.
If that's your timeline for the big, beautiful bill and when it impacts growth, Jonathan, what's your timeline for when we finally see the impact of tariffs and what that means when we'll finally see some live Fed meetings?
Yeah, well, we're expecting to see the impact of tariffs really start to mount as we go through July and August. We had been writing for some time that we didn't really think the tariffs would really impact the data very much through the May data. And it's really sort of now as we look ahead to June, July, August, where we think, the pass-through in prices starts to like seep in and escalate and mount. And we really think the Fed meeting is when we have a rate cut, because we think by then, yes, they will be looking at the tariff-related inflation, but I think we're going to be looking at a soggier-looking labor market. And I think, unlike last year where the growth scare was, kind of concentrated in a few indicators, I think there's going to be a broad swath of indicators that look weak and worrisomely weak as the Fed heads into the September FOMC meeting.
Jonathan Pingle of UBS, thank you so much for the insights. And as we try to parse through all the uncertainty, and Danny, you asked the right question, which is essentially, when do we stop waiting and seeing and actually see? And the answer is later.
Yeah, it seems like September seems to be one of the things we're coalescing around. Steve Englander, Standard Charter, writing this morning that we could have a Fed that this week guides that we could get 50 basis points of cuts by September, that they want to give themselves optionality on the dovish side, too. I got to say, we're hearing from Jonathan there, from others, that make it sound like the Fed might be more towards the hawkish side, not that dovish side of things.
Trying to control the idea of inflation expectations at a time where that is the most recent error that they want to avoid doing again. Right now, let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Yahaira Anand. Yahaira.
Hi, Lisa. Fighting between Israel and Iran is now in its fourth day. Just this hour, Israeli Prime Minister Benjamin Netanyahu spoke from an Air Force base and said its Air Force now controls the skies over Tehran. He also said Israel is on the way to achieving its two goals in the campaign, which is eliminating Iran's nuclear and missile threat. Meanwhile, the man suspected of killing Minnesota Democratic state lawmaker Melissa Hortman and her husband, Mark, is in custody. The FBI had offered a $50,000 reward for information leading to the arrest of 57-year-old Vance L. Bolcher. Two other people, including a state senator, were injured in Saturday's shooting. And George Russell won the Canadian Grand Prix for Mercedes in a dramatic finish in Montreal, beating Max Verstappen by 0.2 of a second. After the race, Red Bull filed an appeal against the win, alleging safety car infringements. After a review that lasted 5 hours, Stewards rejected Red Bull's claims and validated Russell's win. It marks the 4th career race win for Russell. That's your Bloomberg Brief. Lisa?
Thank you so much, Yaira, and thank you for this morning. Up next, setting you up for the week ahead. Plus, Amanda Lynham of BlackRock will be joining us as we look at whether this market is being overly complacent about some of the dueling risks. This is Bloomberg Surveillance.
Bloomberg launches our inaugural 25 African startups to watch list.
About 2.5 years ago, we created a solution. We are able to generate refrigeration using the sun and water. We're able to store energy in the form of ice, as opposed to storing energy in the form of lithium batteries. We're integrated in every refrigerator, a pay-as-you-go technology, allowing individuals and small businesses to be able to pay as low as $10 to own a refrigerator.
Uncover is a women's wellness brand that is specifically made for women of color. It's based in Africa, which is the most underserved beauty market in the world. We are making Africa a priority and not an afterthought. We believe that the population on this continent deserves to be formulated for, heard, and we are giving this consumer a voice.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Bringing you up-to-the-minute tech news whenever and wherever it happens. I'm Ed Ludlow in Las Vegas, and this is Bloomberg.
About 43 minutes ahead of the opening bell in the United States, we're looking right now at markets that are climbing a wall of worry. S&P futures up 0.7%. The gains really concentrated actually in the small caps as people look to possibly a reprieve from some of the most extreme risks in the oil market. Russell 2000 up 1.1%. In the bond space, and this is important, you are seeing a sell-off ongoing ahead of that 20-year auction later today and ahead of the Fed meeting that begins tomorrow and ends on Wednesday, 4.43% on the 10-year, as we look to wonder how much this is an inflationary risk and how much this is something they can look through. Counting down to the opening bell, here is the trading diary for the week ahead. Today, the G7 summit underway in Canada. Tuesday, retail sales, don't miss those. And a Bank of Japan rate decision. Wednesday, jobless claims plus a Federal Reserve rate decision and Chair Powell news conference. On Thursday, U.S. markets are closed for the federal Juneteenth holiday, and we'll get another rate decision from the Bank of England. The Fed's two-day meeting kicking off tomorrow. Joining us now is Amanda Lynham of BlackRock. Amanda, a difficult time for the Federal Reserve deserve to be meeting, given that their dueling risks seem to be, their double mandate seems to be very much increasingly in conflict. Do you think we're going to learn anything at all this week?
Right. Good morning. Thank you for having me. That's the one thing that we are focused on. I would say the summary of economic projections has the potential to give us some incremental clarity on their reaction function. We think on the margin it will reflect a more challenging growth inflation mix. But keep in mind, this is just the median of all of the different committee members. It's not actually a cohesive projection from the committee, so we need to kind of discount that. What we are most focused on is what would be the scenario analysis, the reaction function, if the dual mandate comes into tension. A few months ago, you started to see Chair Powell, Beth Hammack talk about that being on the radar. I think the incremental news, it has become, as you alluded to, even more challenging with the geopolitical situation. So that would be hopefully the one nugget that we will be looking for is how would they navigate that backdrop? What would they prioritize? The SEP already reflects an unemployment rate of 4.4% for this year. So we know that they are baking in some weakening in the labor market. How much weakening would we need to see in order for their posture to change?
Earlier this year, there was a feeling that any inflationary shock from tariffs or trade tensions in general would be transitory. They even used that word, or even short-lived. Now there's a question of the dual shocks. You have the tariff risk, and then you also have potentially some sort of oil shock that is persistent. Even if it's not the closure of the Strait of Hormuz, there is this feeling that there's going to be a higher premium. How much does that complicate things and create a more sort of long-lasting inflationary impulse?
I think you nailed it. It's not just the inflation data, but inflation expectations. So even though they're navigating to core PCE, which would exclude energy, if we do have a rise in oil prices that is sustained, does that alter inflation expectations for consumers, and could that cause them to react? I would say there's kind of twofold impacts that we see from this geopolitical backdrop. It's one, should there be higher risk premiums on corporate credit? And then two, are there actually sector-specific implications if there are sustained supply chain disruptions? We haven't seen that yet. Hopefully we don't. But those are really what we're focused on. And then the magnitude and the duration of that has yet to be seen. Even when the Fed was, I would say, casually using the word transitory, when was that? Back in the March meeting. It was also caveated with a healthy dose of we're not quite sure really where this is going. I remember that meeting very well. And so I think they're even hesitant to say that they'll be able to look through it. I think they're just raising the possibility that maybe they can look through it.
Well, to the point of credit markets, again, it's another thing where we see spreads widen a little bit and then not really react that much, where you have seen some weaknesses in the junkiest part of the market. Is the risk real there? Could you start to see defaults pick up in that area?
Sure. So two things I would say. Our conversations, and really since early May, have focused on two-sided risks, exactly as you noted. Widening episodes have been short-lived, and actually the common refrain from a lot of investors is, oh, I wish I would have taken advantage of that more. So that's a very real risk, and so we're very focused on the two-sided risks. Where we are trading carefully and have been are those kind of left tail pockets of the market that were already under pressure before the economic data deteriorated. So for example, US CCCs had interest coverage below 1 times already last quarter. It's rebounded a bit. That was before the economic data deteriorated. You see that in pockets of the leveraged loan market. You see it in pockets of private credit. So that's really where we need to focus, is saying, okay, let's not be too defensive. There's a real opportunity cost to being under risked, but at the same time, if a company was already having trouble growing into its capital structure, or a sector was already having trouble navigating this environment, nothing on the horizon is going to make it easier. And so that's really, I think, where we are mindful. I will add, though, the high yield and leveraged loan default rates have been quietly creeping for the past year and a half, and it has not derailed the performance of the speculative grade parts of the market. So I think what that's telling you is it's the smallest capital structures that are defaulting. It's oftentimes repeat defaulters, and that is by definition priced into the market.
Well, if we do see a Fed that falls in between that dual mandate and they can't take action and they can't cut and rates do remain elevated, does that start to spread?
Well, actually, somewhat counterintuitively, it's probably going to support the yield-based bid for corporate credit, which has been a really powerful technical force. I would say the yield-based buyer has exhibited some patience on and off, so they're sitting it out sometimes. But in general, structurally higher interest rates coupled with okay growth, even below trend growth, that's not a bad recipe for corporate credit. That would probably bring some of that yield-based demand in off the sidelines. This is also part of the reason why we like selectively moving down in quality. quality. You were talking about the volatility in the Treasury market. Kind of one of the understated differences between IG and high yield is a shorter duration market. So you're kind of less exposed to those swings in Treasuries, especially at the long end.
Just real quickly here, is the private credit market exposed to forced selling based on the fact that you're seeing endowments of universities looking to raise money?
Not forced selling. Illiquidity is a feature, not a bug of private credit. What I think that is reflective of is a multitude of factors, and I think it's a positive that actually folks can make asset allocation shifts over time when they need to with illiquid assets. But it's not a liquid market by design.
Amanda Lenham of BlackRock, thank you so much for being with us, as always. Turning now back to our top story, leaders gathering at the G7 summit as Israel and Iran. Anne-Marie, what's coming up today? What's on your horizon?
Well, just in about 2 hours' time, the president will kick off his first bilateral meeting here in Canada, and that will be with the host country, the Prime Minister, Mark Carney. Remember, Lisa, there's a lot of memories from the last time Canada hosted the G7. There was that viral photo of the president sitting in a chair, kind of defiant with his arms crossed, looking up at Angela Merkel, then German Chancellor, a number of host leaders around her as well. And then he left and said that he didn't want to sign the communique, which is why, going into this meeting, don't expect all of these leaders to agree on a number of issues. So a number of statements will not get a G7 unified voice. And Iran and Israel could be one of them. The war in Ukraine, another one, as well as climate change.
Yeah, and a real question of what the bilateral discussions will look like. Anne-Marie, I know that you're maybe going to go hiking later, like I would, because it looks really beautiful. Anne-Marie, thank you so much. Joining us from Banff, Canada, from the G7. Love to see that, but I am curious to see some of those bilaterals, how much the equation is changing as you look to potentially other relationships that are tightening in lieu of some sort of more global G7 one.
And so many big issues they need to work through. Zelensky's going to be there, so there's the issue of Ukraine, Russia. There's the newly brewing issue of Israel and Iran, and there's all the trade disputes. Where are we going to see any cohesion in any communiques we get? Where are we going to see any deals, any agreements? It looks very challenged right now.
And it's difficult to know how they focus on one issue when there are so many. It's the whack-a-mole of topics that we've been talking about of 2025. Coming up tomorrow, Chris Barone of Strategas, Krishna Guha of Evercore ISI, Alicia Levine of BNY Wealth, and Nadia Lovell of UBS as that Federal Reserve meeting kicks off with a lack of clarity across the board, a fourth day of conflict between Iran and Israel with real questions about trade, about geopolitics, and about the economy. This is Bloomberg.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
There is a nice confluence between the long-term investor and what we're trying to do. We have an operating principle that's in our handbook, take the long view. When we went public, we put a timeline up on the screen for the whole company in an all-hands meeting. And that timeline went from founding to 100 years out. And the IPO was one dot in 1 year on that timeline. And we tried to orient the employees to, this is a wonderful event, this IPO, but it's a moment in time on a very long journey.
This is a company that you want to exist in 100 years.
We do.
Wall Street doesn't think in...
No, they think in like hours. Yeah. And what I've learned of Wall Street, and particularly Wall Street investors, when they say they are long-term investors, that means they'll keep your stock for like a month. There has been one instance where I did something that was just for short-term stock, and I felt so bad about it that I don't think I'll do it again.
What was that?
There was one quarter, a few quarters ago, we were not going to beat the quarter. We were going to probably just hit it. And so far, we beat every quarter. So we were all like, wait, what? Our perfect record. We're like a 4.0 student that is going to get a B for the first time. This is not good. And I decided that for a short period of time, at the end of a lesson in our app, we would show 2 ads instead of 1. Turns out that by itself was good enough to beat the quarter, but it's bad for the product. It's not good. After that, I never doing that again.
In
in case you missed it on Bloomberg Insight.
I just think there's a chance that you'll have stagflation. I'm not saying it's going to happen. I don't want the reader to say he's predicting. I'm not. But we have to be prepared for something like that. I think the global fiscal deficits are inflationary. I think the remilitarization of the world is inflationary. The restructuring of trade is inflationary. And this is not all an American thing. With all those things taking place, yeah, you may be surprised.
I spoke to Jamie Dimon. He says that we should actually prepare for stagflation. How do you square that?
I think there's no question that the shock of tariffs are stagflationary. The question is going to be ultimately how high do they settle at? Right now they're at a very high level, highest in 100 years. And how long a period both is this uncertain environment and how long are the tariffs going to last? And the question now is the magnitude of the stagflationary impulse, and we just